yes, there are some problems in a way. No, SEBI, if some bring regulation, then they will be hit. But I think long-term play is a good one. So if he's a long-term player, I think no issues. I think the mutual fund division, even the more and more ETF are launching, and SME IPOs also launching. That is bringing a good amount of fee for this company. So yes, I think for long-term, I think it's a hold and buy at dips.
Okay. So that's the view for BSE. Buy on dips is the view. Moving on to the first caller of the day, it's Pandyan who's calling to us from Chennai. Hi Pandyan, how can we help you?
Yeah, madam, I bought a IOC yesterday, that share. Tomorrow is the record date. Shall I sell in the record date in the shares? It is eligible for dividend?
Okay, let me go to Tapan for this. Tapan with IOCL, he's bought it for the deal that we're looking at. Just want to understand if you have tracked this development, what is your view with this particular counter?
Well, I have not tracked the development as precise, but no, overall I am positive on IOC because you see the oil is around 61, 62, which is helping their margins. And last few quarters, their margin has improved. All the oil marketing companies, and from here also 1.5 year, I don't see the price going about 70, $75. So I think this will help IOC. So I think he should hold it. And for short-term duration, also 2, 3 quarters, I think things are positive for this company.
Well, and for Pandyan, the record date is tomorrow on 18th of December. So these shares have to be in your demat account. So wouldn't be advisable to sell it at this point of time. Continue holding if you want to be eligible for the dividend. But we have our next query coming from Gujarat, and Ishan has a stock query on RBL Bank from a long-term outlook. Now, it's important to track this counter today, down almost 1.5% because Citi had come out with a note on the counter. They say that the ECL impact, which is new norms, at 10 to 15% of the company's net worth is seen as the blended standard asset provisioning, which is projected to rise by almost 30 to 40 basis points. Now, that's going to be a key impact from just the current 35 basis point that they see. They've also said that the slippages will stay elevated in the cards portfolio and could take 3 to 4 quarters to bring it below the 500 crore mark that the company has set. So apart from that, though, they have mentioned that the MFI slippages are declining, moderating support in the overall run rate, and the monthly disbursement of the company in the MFI business will be a key one that they'll continue to track in Q3. And the recent deal by Emirates to buy 60% stake in the counter at 280 rupees per share will help reduce the cost of funding as well, apart from augmentation of equity. So these were some of the key points. But on ECL, I think that's likely dragging this particular counter down. Tapan, on RBL Bank, post the equity infusion, what's your view on the stock?
I agree with you, Puneet. No, if you see the RBL Bank, of course, it has come up a lot from the bottom, and of course, the management change, what we are talking about, no, that is going to bring some life in this stock, but it will take some time. Even if you see, the management committee is quite positive. They are thinking of credit growth of 15 to 18%. Credit cost is going to normalize over the time, and they have a now strong adequacy ratio, capital adequacy ratio, so that is not a problem. But I think the stock has gone up a lot from the recent low, and most of the positive things are already discounted. So at this level, I'll tell no to buy. Just wait for a little bit drop, maybe 15% around that. Then he can enter for the long term if he wants.
Okay, so that's with regards to RBL Bank, currently seeing cost of around 1.4%. Moving on to the next query, it's Arjun who's writing to us from Kolkata. He wants to understand a short-term view on something like a Bharat Electronics, and this is for a 7 to 8 months period that we're looking at. He's holding 500 shares, and this is at the current market price that he's holding at, which is 386. Wants to know whether there's still optimism in the defense pack, considering that these stocks have seen a lot of correction. Vaishali, let me come to you on something like a Bharat Electronics, as well as if you have any other picks in the defense space as well.
Right now, I totally agree. Overall, defense sector has not shown any strength, and in fact, it's on a corrective mode. So, talking about Bharat Electronics per se, I would say 370 acts as a good support. And the trend, long-term trend, if I'm looking at a weekly chart, we have seen a resistance at around 420. But if this stock has to continue with its inherent strength, then I think 360, 370 should hold on to the support level. And we have to see a new round of momentum setting investing in. So for now, it is a positive bias. New entry should be done at around 370 levels. That would be my view. So that would make it a favorable trade. And talking about other stocks, well, we are looking at HAL. 4200 acts as a support. So that could be the level that one can watch for, because if these levels break, I think we could see further erosion. So for now, I'm not in a hurry. I'll wait for a turnaround.
So that's the levels that you should be watching out for Bharat Electronics and HAL being on radar. But quickly slipping into a short break, there's lots more stock queries on the other side, so do stay tuned in.
AU करंट अकाउंट के साथ मिलता है फ्री UPI QR ओवरड्राफ्ट फैसिलिटी और एक ही ऐप से बैंक के सारे काम। AU
सोच बदलो और बैंक भी।
High MTF rates hurting your profits? Why, what's your MTF interest rate?
Mine is 14.5%. It's cutting down my returns.
Then switch to Paytm Money. Their MTF interest rate is just 7.99% per annum. Pay less and trade more. Switch to Paytm Money.
Investments in the securities market are subject to market risk. Read all the related documents carefully before investing.
कल का भारत उन्हीं से बनता है जो आज सीखने, समझने और नई सोच रखने का जज्बा दिखाते हैं। और इसी जज्बे को सेलिब्रेट करने आ रहा है अदानी सीमेंट फ्यूचर एक्स क्विज इन एसोसिएशन विद NDTV इंडिया। फ्यूचर एक्स सिर्फ एक क्विज नहीं है, ये एक नेशनल लेवल चैलेंज है जो स्टूडेंट्स की नॉलेज को टेस्ट करता है। अगर आप क्लास 9 to 12 में हैं और तैयार है अपनी नॉलेज को टेस्ट करने के लिए, तो फ्यूचर एक्स क्विज इज योर चांस टू पार्टिसिपेट एंड एक्सेल। सो पार्टिसिपेट, कम्पीट, स्टैंड आउट और बनो फ्यूचर बिल्डर्स ऑफ भारत। एनरोल नाउ।
Anytime is a good time for multi-asset allocation funds. Invest in equity, fixed income, gold, silver through one fund.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
KSH International Limited now launches an initial public offer of equity shares of face value of 5 rupees each in the price band of 365 rupees to 384 rupees per equity share. Bid offer opens on Tuesday, December 16, 2025 and closes on Thursday, December 18, 2025. For risk factors and other details, please refer to the red herring prospectus available on the websites of the SEBI, the stock exchanges, the book running lead managers and the company.
होम EMI 50,000
तो जा रही है। आपकी क्या तैयारी है?
पूरे सीलिंग का 20,000
आउटगोइंग है जा रही। आपकी क्या तैयारी?
मौसा जी, मेरी शादी का गिफ्ट।
मनी की आउटगोइंग रहेगी जारी, इसीलिए कर लो तैयारी। SIP के साथ इन्वेस्ट करो और जरूरत पड़ने पर SWP के साथ सिस्टमैटिकली विड्रॉ करो। म्यूचुअल फंड निवेश बाजार जोखिमों के अधीन है। योजना से जुड़े सभी दस्तावेजों को ध्यान से पढ़ें।
Welcome back to Ask Profit. Let's go across to our next query that's coming in on WhatsApp. It's an interesting one from Venkatesh from Mumbai. He's also a regular viewer, so thanks so much for sending in your query, Venkatesh. He's asking about CG Power, and there was a news flow in the morning today, media reports speculating that Apple is in talks with India CG Power to CG Semi, which is the semiconductor venture of the company, for iPhone packaging and for its chips as well. Post that, the shares have corrected and given up some of those gains. He holds 1,500 shares, and I was asking if this news could largely be very positive, so why have the stocks dropped? But he's also asking because he has bought it at 35, which I believe was the levels in 2020 before the Murugappa Group acquired the company. Tapan, on CG Power, firstly, what's your view for someone who's made 9 lakh rupees of gains on this counter? Because he's bought it at 35, trades at 679. Should he continue to hold, sell off some gains? And your view on their semiconductor venture as well?
No, first of all, I want to congratulate the user, no, buying so early. Now, talking about CG Power, we know that the valuation gone up earlier a lot. Now, lot of talk is going about that semiconductor unit, but that will take time. Maybe first half the next year, no, it may start. Till then, I don't see any sales jump or profit jump overall. And that's why if you see the valuation is still on a higher side. So I don't think that short term there will be a movement, almost trading at 100 PE. So if the stock wants to move, they have to increase their revenue should go up, profit go up, and that revenue from the semiconductor unit will take some time. So I feel that it will take time to go up. So for my take for this stock is now if he wants to hold for if he is taking a 2-3 years, then it's okay. Otherwise, short term, I think that there will be no movement. Yes, news are there, but still we have to see in the sales and profitability.
Okay, so that's with regards to CG Power and quite a long-term outlook that Venkatesh has on this one. So we'll keep watching out for the developments in the semiconductor business as well. But moving on to the next caller, that's Jigar, who's calling to us from Mumbai. Hi, Jigar. How can we help you today?
Hi, good morning.
Good morning.
My query is on NCC. I'm holding about 300 shares at 220.
Okay.
I've been holding for around 6 months, and I want to check whether I can add now at this price or I should wait for a lower price. And I want to hold it for around 12-18 months. And I have no interest in booking a loss right now. So, yeah, I'm planning to hold whether I should add more or not.
Okay, so you still have a particular long-term horizon to look at. Just want to understand, when you had entered this counter, was it on basis of fundamentals or like what was the view?
Fundamentals actually based on the business and the order book is what I was looking at.
Okay.
But the results are not coming good, and the last quarter results, they stopped giving the guidance, which is where I think maybe I should have just booked out, but it's now pretty much down from my buy price. So.
Right. Let me take this with Tapan then. Tapan, we've seen a lot of these infra companies not doing so particularly well. While the order book has remained on the stronger side, its execution and the new order inflows, which has mainly been on the muted side that we've looked, which has impacted the revenue growth as well. What is your view with something like a NCC? From FY26, do you see a better outlook for this?
See, NCC, of course, they have a very strong order book of almost 60,000 crore. As you rightly said, the execution delay is there. That is where the stock is going down. If you see, the stock has already corrected a lot from the top, and the valuation is now quite good now. No, it's not expensive stock. And hopefully, what the management is saying that the execution will actually be good in next few quarters. The revenue growth may be around 15 to 18%. Margin improvement also they are talking about, and they have a good diversified EPC exposure. Now, as the already stock has corrected a lot, I think this is at this level there is no problem. I think he should hold it. Even if he wants to add it. I think next few quarters, based on the management, hopefully it will delay. They will be able to deliver. Then the stock will go up.
So that's the view for NCC, but it's time for the rapid fire round now. This is the first one. So both the experts will please try to keep your answers as short as possible. We'll try to take as much queries. Now, first one is from Venkatramani. He's holding 1,000 shares of Lloyd Engineering at 60. Wants to understand whether he should continue to hold for next 15 months. Tapan, your view?
Yeah, please hold it.
Bajaj Housing Finance, Naga is asking if it's a good time to enter. Tapan?
Yes, they can enter now.
Okay, next one is regarding PNG Jewelers, 101 shares. Should the viewer continue to hold it for the next 6 months? Vaishali?
I think continue holding.
Good time to buy into Zentek right now, Vaishali?
Accumulate.
2,000 shares is what Govind Kumar is holding. In Viro Infra is a stock. Wants to understand whether they should hold for next 1 to 2 years. Tapan, your view?
Yeah, please hold it. And you can buy at this level also.
Got it. JSW Energy, actually, Revant has bought it at 87 rupees 4 years ago. Should he continue to hold, Tapan?
Yes, please hold it.
Next one is Hindustan Copper, bought at the levels of 275. The viewer Neha is holding 150 shares. Wants to understand for 1 to 3 months should she continue to hold or switch. Vaishali, your view?
Continue holding.
IEX good to enter for the next 4 to 6 years, Tapan?
No, avoid.
Sterling Winsell Renewable, is it a good time to buy? Vaishali, your view?
Not really. Avoid.
Hindustan Copper bought at 275. Our viewers in gains of 30-35%. Should he exit, Vaishali?
Trading stop loss, look for target 640.
Ramesh bought 1,000 shares of Aarti Industries at 350. Should he continue to hold? Tapan, your view?
Yes, please hold it.
The next one's coming in on Orchid Pharma. Should he continue to hold for the next 2 years, Tapan?
Yes, hold it.
Varun Beverages current price level, is it a good buy? Vaishali, your view?
With a stop loss of 465.
The next one's on Man Infra. He's bought. Our viewer holds the current shares, but after the upgrade, should he continue to hold Tapan?
Yeah, he can hold it and buy at a lower levels.
Good. Well, that's the end of the first round of the rapid fire. Of course, on Man Infra, it was the corporate update that came in and hence the stock corrected. But viewers, we'll take a very short break. Lost more action on the other side. Stay tuned.
छुट्टी पे तो चिल कर।
मेरा बैंक मुझे चिल करने देता है। इंटरेस्ट पता है कितना देता है? इतना सा, और वो भी यार 3 महीने बाद।
नॉट बैंकिंग विद एयू।
एयू एयू सेविंग्स अकाउंट में मिलते हैं अमेजिंग बेनिफिट्स, पेपरलेस बैंकिंग एंड हायर इंटरेस्ट, वो भी हर महीने।
एवरी मंथ।
सोच बदलो और बैंक भी।
High MTF rates hurting your profits? Why, what's your MTF interest rate?
Mine is 14.5%. It's cutting down my returns.
Then switch to Paytm Money. Their MTF interest rate is just 7.99% per annum. Pay less and trade more. Switch to Paytm Money.
Investments in the securities market are subject to market risk. Read all the related documents carefully before investing.
KSH International Limited now launches an initial public offer of equity shares of face value of 5 rupees each in the price band of 365 rupees to 384 rupees per equity share. Bid offer opens on Tuesday, December 16, 2025 and closes on Thursday, December 18, 2025. For risk factors and other details, please refer to the red herring prospectus available on the websites of the SEBI, the stock exchanges, the book running lead managers and the company.
सामने नया सुपरमार्केट खुलने वाला है। क्या करूं कि पुराने कस्टमर भी रहें और नए भी आ जाएं?
देखो, आप दुकान के बाहर एक चाय कॉर्नर लगा सकते हो। चाय पीते पीते पुराने कस्टमर बातचीत करेंगे, उन्हें देखकर नए कस्टमर भी आएंगे और एक्स्ट्रा कमाई भी होगी। इसके अलावा आपके बिल्स देख के समझ लेते हैं कि कौन सा सामान कितना बिका है।
Any time is a good time for multi-asset allocation funds. Invest in a mix of equity, debt, gold and silver through one fund.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Nowadays, fake UPI handles are posing as trusted brokers, advisors and trading platforms. और अगर आपने double check नहीं किया, तो your money goes straight into the scammer's pocket. SEBI is stepping in with 2 major shields, जिसे डिजाइन किया गया है to protect you, the investor, from shady intermediaries and fly-by-night scammers. यूज कीजिए validated UPI facility और safeguard करिए अपना hard-earned money.
An investor awareness initiative by SEBI.
बिजली का बिल 5,000।
आउटगोइंग तो जा रही है, आपकी क्या तैयारी है?
रूट कैनाल 25,000।
आउटगोइंग है जा रही, आपकी क्या तैयारी?
सीनियर क्लास की फीस 1 लाख रुपीस।
मनी की आउटगोइंग रहेगी जारी, इसीलिए कर लो तैयारी। SIB के साथ इन्वेस्ट करो और जरूरत पड़ने पर SWB के साथ सिस्टमैटिकली विड्रॉ करो। म्यूचुअल फंड निवेश बाजार जोखिमों के अधीन है। योजना से जुड़े सभी दस्तावेजों को ध्यान से पढ़ें।
Very warm welcome to Walk the Talk. I'm joined by one of the world's top foreign affairs gurus, Fareed Zakaria. Welcome.
It takes decades to build trust, and it takes moments to break trust.
The United States recently came out with a new security strategy doctrine.
In this moment of extraordinary power and dominance, Trump's vision of America in the world is to retreat, to shrink, to shed its influence, make America a regional power again. For 80 years, it's been a global power. We want to be a regional power.
welcome back. You're watching Ask Profit right here on NDTV Profit. Now, before we talk about the more stock queries, it's time to take a deep dive into the BSE F&O market setup and the cues that are shaping up in trade today. Sharad is standing by to give us a perspective on the market snapshot.
Well, largely the global cues and the record opening of the lower side of the rupee has spooked the markets, and we're seeing markets in a very narrow range. Of course, SBI and Axis Bank Eternal doing well in the trade, the financials doing well, Reliance also holding up, but on the losing side, we have ICICI Bank and Trent and even HDFC Bank as well. Net Sensex is still down, but in a very short, narrow range, which I had actually pointed out earlier. The contracts also not major movements happening, but there is a slight bearish sentiment as well when I look at the contracts. BankX, the story remains the same. HDFC Bank is down 0.7%. That's a key drag coming in as well. And when we look at the other stocks, on the other hand, SBI, that's lifting it up. That's why there's a divergence coming in the BankX and their contracts as well, which we'll be focusing on. Stock-specific moves, key longs developing in Hindustan Zinc on record silver prices, and Shriram Finance, some institutional buying coming in. Street is expecting something from the MUFG deal. Canara Bank, SBI short covering, largely banking players are there, but long unwinding, Astral is coming in, and Samman Capital, some more profit booking likely. That's what the dealers are saying me. And last but not the least, the short build-up coming in Polycap. That stock is down 4% today, and Dixon Tech also making it to the list. So something to watch out for.
Okay, thank you, Sharad, for that perspective on what's happening with the markets at this point. But moving to the queries now, it's Shalini who's writing to us from Kerala. She's bought 35 shares of Vedanta, and this is at a price of 520 that we are looking at, and currently sitting on a 10% of profit on this one. Wants to understand whether she should continue to hold or sell or average at the current levels. Do note that the company has been in focus since yesterday on the back of NCLT giving it a nod for its demerger. So we'll be looking at 5 separate entities going forward, which is expected to be concluded by next year end or so. So that's Vedanta for you. Vaishali, let me come to you on this counter. What's your view?
Well, I would suggest not, because actually we have come pretty much done with our target of 570, 580. But if you have to, then buy near 560, keep 550 as stop loss, and wait for this stock to move past today's high. Then in all likelihood, you can get your targets of 600, 620.
Thanks so much for that, Vaishali. And we also had that upgrade coming in from Kotak Securities, the brokerage firm on the stock. And we'll discuss all about that one. It's a key one, the demerger and the NCLT approval finally coming in for this one as well. But the next query that's coming in is on Shriram Pistons. Dinesh from Noida is asking a very interesting question. Firstly, he's a regular viewer, so thanks so much for that, Dinesh. He's asking if he's interested to buy into Shriram Pistons right now, post the acquisition that they've done of Grupo Antoine, which will give them perspective in the powertrain segment. So it'll give them the entry there in a meaningful way. Tapan? The stock has run up quite a bit over the last few months. Would you recommend that trade, and any view if you have on the acquisition if you're tracking this counter?
Yeah, see, overall the stock has run up a lot, as you told, and if the valuation, even if I see that is little bit inching up, but I think things are going better for this stock over the time, and I think quarterly results will also come good. Even the management looks quite positive on the margin fronts, and the export share expansion will be there. I am not track on the acquisition part, but I feel they have a strong balance sheet and cash flow, and plus ROC is also quite good. So yes, I'm quite positive on this stock. I will not tell to him buy at this level, but if he's holding that, please continue to hold for a long term little bit.
So that's regarding Shriram Pistons. That's the view that we are seeing. But moving on to the next query. Now the viewer, Yash, wants to understand about CCL products. He's bought about 50 shares of this, and this is at an average of 799. Wants to understand whether he should continue to hold or sell at the current levels. Vaishali, let me come to you. Today we are seeing the stock in focus. It's seen a strong uptick in today's session itself. What is your view for the next 3 to 6 months for this counter?
I would say continue holding, because when I'm looking at the chart, it's again getting into new round of momentum. The long-term chart is also very intact. So I would say keep 920 as your stop loss. And once we see good strength coming in this, the near-term target would be 1040. Above that, I think I wouldn't be surprised if the stock moves above 1100 also. So I think it is a good quality stock. Continue holding with a stop loss of 920.
Okay, so stop loss of 920 is the level that you should be watching out for. Next query, it's Lenin who's writing to us from Hyderabad. He's holding 44 shares of Bajaj Finance and this is an average of 921 that we are looking at. Wants to understand whether he should average it or sell. Tapan, let me come to you on something like a Bajaj Finance. Are you optimistic on the business prospects of this one?
Yeah, of course, because if you see the October to December, as it is was a festival season, I think a good amount of sales has happened. Even the GST rationalization was another key trigger. And you see the Bajaj Finance, most of them have consumer finance lending and all that. I think there will be a good uptick there. So yes, I am positive. I think next 1 or 2 quarter will be good. Plus, if you see the interest rate coming down, that is what is helping all the net interest margin also. So yes, he should continue holding this stock.
Well, got the view, Tapan. We have our next caller dialing in from Hyderabad, and Jeevan has a stock query for us. Jeevan, very good morning and welcome to Ask Profit. What's your query?
Very good morning. Thanks for picking my query.
Sure,
so I just want to invest in a CAMS or Cave Tech. Can you suggest which one is a good investment for the long term, around 5 to 7 years?
Got Jeevan. And do you have any other capital market plays in your portfolio, or is it the first time you're entering the space?
Yeah, I have a CDSL, but I want to switch from the CDSL to NSDL. Is it a good idea?
Got it. Very sneakily, Jeevan, you slipped in another question, but let me try and take it with Tapan. Tapan, firstly, between CAMS or K-Fintech, do you have a preference? Because he already holds CDSL. And very quickly, if you can also include if it's a good time to switch into NSDL with that view as well.
See, actually CAMS was one of a disappointment. No, the stock has not gone up so much, the way we thought about it. But still, I think the mutual fund traction will be going on, and I think both CAMS and KFIN are good on that part, and their revenue is going to go up. I think market touching all-time high, and in future also the market goes up. I think this will be directly beneficiary as the mutual fund SIP comes in. So yes, I'm positive on both the stock. But if you want to ask any preference, then CAMS will be the preference for the long term. And CDSL also, I'm quite positive. That also gone down a lot, but now it is recovering. But you have to wait for long term. I think if it is a 2-3 years period, I think all these CAMS and CDSL both are good stock to hold.
Okay. So that's with regards to CDSL is what we are looking at. Next query is from Kirtana, who's writing to us from Bangalore. She holds 2,000 shares of Cello World, and this is at a price of 633 that we are looking at. Wants to understand the future prospects of this one. Currently, if we see Cello World has corrected from those levels and it's trading at 551, and she's making a loss of around 1.6 lakh on the counter. So Vaishali, let me come to you on this one. What is your view with regards to this? What should the viewer do considering that she's facing a heavy loss on the counter?
I would say now might as well wait, but all the same, keep a stop loss of now that if holding on for so long, keep a stop loss of 520. And right now, what I'm seeing, the chartical presentation is it can recover. We can see a bounce back coming to 590 levels. That is going to be a tough resistance. That is a level to watch. So continue holding with your trailing stop loss, and wait for a bounce to exit. Because once we see the stock moving above 590, this can show further strength. So this is how I would gauge the stock.
Got the view. And, I think Investec got a sell note from it in yesterday's trading session. So keep this one on your radar. The next one's on Ola Electric. Raju from Bengaluru is asking if it's a good time to enter the stock. Now, it wasn't focused today because yesterday promoter Bhavesh Agarwal sold out 2.6 crore shares as well to remove some of the promoter debt and to release some pledges as well. Tapan, on this one, there is an easy answer, but what should investors look at given the correction on the stock? What would you recommend?
See, there were a lot of promises from the management side, last quarter, 1 quarter, and that's why the stock gone up to 60, 70, and now again going down. And they are coming with, like, they're going to start BESS and Gigafactory and all that. But if you see their revenue, it's not compelling. No, they already lost the leadership position against Ather, even TVS Motor, Bajaj, Hero. So I think that is the problem. No, their sales is not happening, revenue is not going up, and the losses are expanding. And I don't believe on the management, honestly. So again, there was a selling pressure also today by a promoter. So yes, I'm not positive. So for long term also, I'll not suggest this stock to buy.
Avoid is what we are looking for. Ola Electric. So that's the fundamental view. But moving on to the next one. Narishma Reddy wants to know whether Laurus Labs is a good buy for long term. Currently holds 160 shares, and this is at a price of 619 is what we are looking at. Stock, she's already sitting on significant gains considering that the stock is trading at 1000. Again, Tapan, let me come to you on this one. Now, it's a long term picture that she wants to understand. Are you bullish on this counter?
Yes, of course. No, CDMO business is doing very well, and Laurus Lab has done exceptionally well. And in future also, I think there are some rules change in USA that will help CDMO business more. And they are pioneer. Laurus Lab, Divis Lab, Syngene. I think there are some of the stocks now which are doing well in the CDMO space. So yes, I'm positive. As she is holding, I think continue to hold. I think still the future looks good.
That's with regards to Laurus Labs. A clear optimistic view is what we are seeing coming from Tapan. But let me go to the next caller. It's Puneet who's calling to us from Ghaziabad. Hi Puneet, how can we help you today?
Yeah, madam, I was allotted this Park MediWorld IPO which got listed today. So I bought around 1200 shares.
Okay.
So I want to know what's the 6-month prospect for this.
Okay.
Is it fundamentally strong and how much return can I get?
Okay.
And I want to avoid losses. I'm fine with a reasonable gains.
Okay. So let me go across to Tapan then because, for technical, we will not have that kind of setup right now. Tapan, have you tracked this particular IPO? What is your view regarding this?
See, the valuation was at par, okay, so there was no comfort on the valuation, but I think this is a stock now, maybe 10-15% down, I think that will be a better buy from here. If as he is already applied for the IPO, if we can wait for 6 months, 1 year, I think things will be better. See, the hospital sector is doing well and the financials are okay, only the valuation part was there, so just hold if he is a long term, but short term, I don't think it will go up.
Well, that's the view for the recent listing. If you're just looking at that, 0.6% is the kind of downtick that we are making, so no listing gains here. But it's time that we slip into a short break. There's more stock queries and also another round of rapid fire, so do stay tuned in.
Agarwal Packers and Movers Limited. Man with the cap. Not 300, 300, 300.
छुट्टी पे तो चिल कर।
मेरा बैंक मुझे चिल करने देता है। इंटरेस्ट पता कितना देता है? इतू सा, और वो भी यार 3 महीने बाद।
नॉट बैंकिंग विद एयू।
एयू?
AU सेविंग्स अकाउंट में मिलते हैं अमेजिंग बेनिफिट्स, पेपरलेस बैंकिंग एंड हायर इंटरेस्ट, वो भी हर महीने।
एवरी मंथ।
सोच बदलो और बैंक भी।
Anytime is a good time for multi-asset allocation funds. Invest in equity, fixed income, gold, silver through one fund.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
वाह भाई बिट्टू, वीकडे पे कोडर, वीकेंड पे ट्रैवल इन्फ्लुएंसर, पैसे बनाने का मास्टर स्ट्रोक सीख लिया तूने।
वैसे एक सेविंग्स अकाउंट ओपन करना है जो फुली लोडेड हो, पता नहीं कहाँ ओपन करूं। सचिन? ये कौन सा बैंक है?
अरे मैं बैंक नहीं हूँ, बढ़िया सेविंग्स अकाउंट के लिए बैंक ऑफ बड़ौदा का मास्टर स्ट्रोक लाइट सेविंग्स अकाउंट है ना, तुम्हारे लाइफस्टाइल के लिए परफेक्ट है, विद ग्रेट फीचर्स एंड बेनिफिट्स। बैंक ऑफ बड़ौदा में सेविंग्स अकाउंट ओपन करना भी एक मास्टर स्ट्रोक है।
10 दिन में बदलो 10,000 को 1 लाख में। लर्न द सीक्रेट स्ट्रेटजी दैट द बिग प्लेयर्स डोंट वांट यू टू नो। ज्वाइन कीजिए हमारा पे ट्रेडिंग कोर्स, गारंटीड प्रॉफिट्स और योर मनी बैक। ऐसे फ्लैशी प्रॉमिसेस तो रोज आपके फीड पे दिखते होंगे। इन रियलिटी दो, these are unregulated entities. Always choose the trusted route through SEBI registered intermediaries only.
An investor awareness initiative by SEBI.
KSH International Limited now launches an initial public offer of equity shares of face value of 5 rupees each in the price band of 365 rupees to 384 rupees per equity share. Bid offer opens on Tuesday, December 16, 2025 and closes on Thursday, December 18, 2025. For risk factors and other details, please refer to the red herring prospectus available on the website of the SEBI, the stock exchanges, the book running lead managers and the company.
You still haven't opened a bank account. I have been telling you this for a long time.
Today, I'll do it.
Today is Sunday. Which bank is open on a Sunday?
At Bank of Maharashtra, through the video KYC facility, you can open an account even on Sundays and holidays. See, account opened. Open a savings account with Zen Life without visiting the bank, making life simpler with Zen Life by Bank of Maharashtra.
Welcome back to Ask Profit right here on NDTV Profit. We continue to solve a lot more stock related queries, so do start sending them the last 15 minutes and we'll try to take all of yours in this particular time. Let me go across to our next query. It's coming in from Ahmedabad, and our viewer is Nirav is holding SML Mahindra, which is of course SML Isuzu before it was acquired by Mahindra. And he's not mentioned his target price or what price he's bought in at, but he's asking a fundamental view on the stock. Tapan, is it a good play to have an indirect ownership with Mahindra, because they have said very clearly that they don't want to merge both of these companies right now? What would you recommend viewers to do?
No, he should continue to hold this stock, and you see the numbers are good. Even if you see the sales numbers are also good. Of course, the stock is down by almost 23% from the top, but if you see the guidance for the future looks good, and the way we can see the automobiles, the selling happening, and also the GST rationalization, I think this company will benefit out of that. So yes, I think the prospects look good. He could hold the stock.
Okay, so hold is what we are seeing for SML Mahindra. But moving on to the next one, it's Yashwant who's writing to us from Hyderabad, holding 500 shares of TCI, and this is at a price of 810. Since then, the stock has seen a lot of, it's making a profit of around 1 lakh on the counter. So wants to understand that just about this particular counter. So Vaishali, let me come to you on TCI. What is your view with this?
So I think currently it is corrected quite a bit, and keep a stop loss of 1010. I think it should give a good return from here on. This can go. We can see a bounce coming to 1150, and from there on we can see a further move coming to 1250, 1280. So I think continue holding.
But we have another query now on Finolex pipes. Now, this is coming in from Jawar Babu, and he's asking if he's bought it at 168, should he continue to hold this counter? Vaishali, on the charts, any kind of view that you have it's on this one?
So I would say the stock is showing signs of bottoming out. I mean, for a very long time, we have seen the stock consolidating at 160 levels. So this can show signs of revival, and we can see the stock going towards 200 also. So keep a stop loss of 160, because this has corrected from the recent high of 190 to a low of 160 also in a deep oversold zone. So this can bounce, and hold on with a stop loss of 160.
Okay, so that's with regards to Finolex Industries. But moving on to the next caller, it's Bharat who's calling to us from Gujarat. Hi Bharat, how can we help you?
I have 200 shares of UBL. I've been holding for a year. I bought it at 1920.
Right.
Can I continue to hold it for another year? Is there any future, or should I quit?
Okay, let me take this with Vaishali. Vaishali, for another 1 year or so, or less than that, what would your view be for UBL?
So right now there is no sign of revival. We are just seeing the stock making new lows. But I think for 1 year is the horizon. Then of course stop loss is a must. Disciplined trading or holding is a must. So hold on with 1580 as stop loss, and let's see what happens, because this is in deep oversold. This too can bounce from here.
The view. The next query that we're getting in is on, from a viewer, Venkat Ramani. And again, a very interesting one. He wants to invest 50,000 in pharma stocks and asking if he should invest in Glenmark or Lupin for the next 12 months or any other alternative. Tapan, your view?
I think out of two, I think I'll prefer Lupin, because if you see Lupin, they had a very good sales around Europe and US also, and generic also it is quite recovering. Some of the new drugs are coming, patent drugs, so that will also add to their margins. And I think overall the management is quite positive for the outlook also. At current level, if he wants to buy, I think Lupin is the stock he can buy compared to Glenmark.
Got the view, Tapan. But we have another query now coming in from Kolkata. And Shayan is dialing in for a stock query. Shayan, very good morning and welcome to Ask Profit. What's your query?
Okay, good morning to everyone. I have 400 shares of Canada Bank at the price of 107.
Okay.
Now, as the PSU banks have already undergone the rally, but the private bank has not yet rallied.
Right.
As I'm on some significant profit, I have also booked some partial profit also from this Canada Bank.
Right.
Should I book profit from Canada Bank and switch it to ICICI Bank? Is that a good idea, or I should be invested in Canada Bank?
And Shayan, you don't hold any private banks right now in your portfolio, correct?
No.
Okay, you don't.
I
Got
have
it.
another PSU bank, SBI bank.
SBI, okay, got it. So let me go across to Tapan. Tapan, would you recommend selling Canada Bank and buying into either ICICI or any other private bank? Because the outlook on Canada is quite positive from brokerages amongst others. Your view, and he also holds SBI in his portfolio.
No, I'm still positive on PSU banks, including Canada Bank and SBI. So if he wants, he does not have any private, so he can do part of it, but not fully. Still, I feel Canada Bank has some legs. If you see the valuation gap, still these are trading around 1.1, 1.3 price to book value, and ICICI Bank and all at 2.5. So they're almost double. And still the credit growth, which I feel in PSU will be more than compared to private banks. Even the NPAs are normalized. So I still feel there are some legs, so he can do part, not fully. This is my opinion.
Okay, so that's it regarding Canada Bank. Now moving on to the next caller, it's Kharak Chaudhary who's calling to us from Dubai. Hi, how can we help you today?
Yeah, good morning. My query is regarding the Himadri Chemicals. I have holding of 500 shares at 490 rupees. So shall I hold or book the losses?
For how long do you plan to hold?
I'm a long-time investor. It's like for 6-7 months I'm holding it.
Okay. Let me take this with Tapan then. Tapan, your view with Himadri Chem. He's been holding it for 6-7 months or so and wants to understand the long-term picture on this one.
So if it is long term, then he can hold it. But for short term, I still feel it will take time to recover, because overall, the chemical business is not doing well. The sector is overall in lot of pressure, and it will take 2-3 quarters. Also for this company, comparatively, this company has done okay. But I think provided he is a long term player, then he can hold. Otherwise, short term, I don't think 6 months or 1 year there will be a big change.
Okay, so that's with regards to Himadri Chem is what we are saying. But moving on to the second round of rapid fire now, we'll take the queries and experts. You know the drill. We'll keep the answers as short as possible. So I'll start off with Anurag's query. He's holding 1,353 shares of Dabur, and this is at 514 that we're looking at. Wants to understand the short-term outlook on this. Vaishali, your view?
So I think the FMCG is coming with a defensive move. So I think continue holding. Look for a bounce back coming to 510.
Well, the second query in the rapid fire on Polycab, bought at 7251. What should Ramana do with Tapan?
Hold it.
Amrita has bought Biocon, and this is at a market price of 415. Now it's corrected. What should she do? Should she continue to hold? Vaishali, your view?
Hold.
Bought ITC at 252.5 and thinking of holding for the next 5 years. What Karan is asking. Tapan?
Sell.
Sai has bought 1,000 shares of Vodafone Idea at 7.5. Wants to understand the next 3-month outlook, whether he should continue to hold. Vaishali?
12 is the resistance. Above that, we look for 13 rupees to 14 rupees.
GMI Airport bought at 95. Should he continue to hold for the long term, Tapan?
Yes, hold it.
Okay, next one is to Allied Tech. The viewer has bought 1,000 shares at 818. Wants to understand the view on this one. Tapan?
Yeah, hold it.
Bosch for the next 3 to 5 years. Should he buy into it, Tapan?
Yes, he can.
Okay, HFCL is another counter. 1,800 shares bought. Wants to understand for next 6 months, should he continue to hold? Vaishali?
Exit.
NTPC Green bought at 99. Should he continue to hold, Tapan?
No, sell.
Suman has bought 19 shares of CDSL at an average of 1587. Should she continue to hold? Tapan?
Yes.
MGL bought at 1,490. Currently sitting on a loss is Satyan. What should he do, Vaishali?
Exit.
Okay, Gautam has bought PTC India Financial Services at average of 38. Should she continue to hold?
Yeah, hold.
Well, that's the end of the second round of the rapid fire. And Tapan as well as Vaishali, thanks so much. We have been able to answer 50 queries in the last 1 hour. So appreciate your time and effort on these as well. But that's all the time that we have on this edition of Fast Profit.
We've reached the 50 mark.
50 mark after a couple of days. So that's a good level to be back to. It's a wrap on this edition. KYC comes up next.
जब से दुकान खोली है मैंने तब से बैंक का ही तो काम कर रहा हूँ बन गया ना चपरासी
Not banking with AU.
AU करंट अकाउंट के साथ मिलता है फ्री UPI QR ओवरड्राफ्ट फैसिलिटी और एक ही ऐप से बैंक के सारे काम।
AU. हाँ जी शुक्ला जी, सोच बदलो और बैंक भी।
IMTF rates hurting your profits? Why, what's your MTF interest rate?
Mine is 14.5%. It's cutting down my returns.
Then switch to Paytm Money. Their MTF interest rate is just 7.99% per annum. Pay less and trade more. Switch to Paytm Money.
Investments in the securities market are subject to market risk. Read all the related documents carefully before investing.
Anytime is a good time for multi-asset allocation funds. Invest in equity, fixed income, gold, silver through one fund.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
You've probably seen these. Sleek charts, instant customer service और daily profit updates. सब कुछ बिल्कुल professional. But the entire setup is a well-crafted illusion. ऐसे स्कैम से बचने का एक सिंपल तरीका है. Always verify any trading apps on SEBI and BSE क्योंकि if it sounds too good to be true, it probably is a scam.
An investor awareness initiative by SEBI.
Home EMI 50,000.
कोइन तो जा रही है आपकी क्या तैयारी है पूरे सीलिंग का 20,000 कोइन है जा रही आपकी क्या तैयारी
मौसा जी मेरी शादी का गिफ्ट।
मनी की आउटगोइंग रहेगी जारी, इसीलिए कर लो तैयारी। SIP के साथ इन्वेस्ट करो और जरूरत पड़ने पर SWP के साथ सिस्टमैटिकली विड्रॉ करो। म्यूचुअल फंड निवेश बाजार जोखिमों के अधीन है। योजना से जुड़े सभी दस्तावेजों को ध्यान से पढ़ें।
माही भाई कोई कूल बैंक बताओ ना जो कस्टमर के साथ हर कंडीशन में हो।
फिर तो SBI कूलेस्ट है। हाँ? 50 डिग्री में, -40 डिग्री में, घने जंगलों में, भूकंप वाले टापू में भी हर कंडीशन में कस्टमर के साथ है।
रियली कूल।
SBI, द बैंकर टू एवरी इंडियन। ट्रूली।
कल का भारत उन्हीं से बनता है जो आज सीखने, समझने और नई सोच रखने का जज्बा दिखाते हैं। और इसी जज्बे को सेलिब्रेट करने आ रहा है अदानी सीमेंट फ्यूचर एक्स क्विज इन एसोसिएशन विद NDTV इंडिया। फ्यूचर एक्स सिर्फ एक क्विज नहीं है, ये एक नेशनल लेवल चैलेंज है जो स्टूडेंट्स की नॉलेज को टेस्ट करता है। अगर आप क्लास 9 to 12 में हैं और तैयार है अपनी नॉलेज को टेस्ट करने के लिए, तो फ्यूचर एक्स क्विज इज योर चांस टू पार्टिसिपेट एंड एक्सेल। सो पार्टिसिपेट, compete, स्टैंड आउट और बनो फ्यूचर बिल्डर्स ऑफ भारत। एनरोल नाउ।
What does, say, 11 years of Modi compare with in a global context?
He's going strong. Part of it is a weak opposition. Part of it is he's very disciplined. This is his life. It's why I've said that Modi is probably the most consequential prime minister since Nehru. And he's reshaped politics. He's reshaped the nature of the kind of master narrative of Indian history.
Hello and welcome to KYC. I am Sharad Dubey and let's start the show. Welcome to NDTV Profit.
And first of all is let's guess the company for our segment KYC. There are some hints which I had given earlier and I'm going to repeat them. It's a recently listed small cap IT company, but interestingly it works in the education segment, offering a lot of digital solutions in this segment. It also includes learning, but the stock is down 25% since its listing in November. It's a newly listed company, hardly a history of 2 odd months coming in, and that company would be in focus. And the company is Excelsoft Technologies. That's the first question we'll be asking. Why are we getting this company just after its IPO? What's the important news flow coming in? What will be the sustainable margins and revenue guidance for the company? That's what we are interested. Company recently come out with its Q2 numbers also. Further acquisition plans in the edtech space, company had mentioned. So we'll be asking them because company is having a significant cash buffer as well. IPO proceeds was largely used on the Mysore property. So some unanswered questions are there regarding the proceeds and what the incremental benefit would be coming in. AI Levit, that's a new product which I saw in the presentations. What will be the contribution for this? Because AI is very much important for even a product related or a SaaS company like Excelsoft. And which geographies will the company target? The expansion part. Generally, we see the American, European markets are there, but are they targeting some other markets? Is the Asia or Middle East region? That is something which we'll ask the company and their expansion plans as well. So these are the key points which we will be actually looking out for. But going ahead, let's just give the more details about the company. It's a very newly listed company, I would say. So there is still requires some time and effort to actually understand what this company is all about. The company was founded in June 12, 2000. That's an interesting date as well. That .com bubble crash area time was there. Also looking at the company, they're focusing on assessment, proctoring and learning solutions. Proctoring is of course there for interviews. The location is based in Mysore headquarters. The office is also there in Noida and Hyderabad. That means they are expanding geographically also. Looking at the growth highlights, the revenue was 195 crores in FY23 to FY25. That has gone up, not significantly, but yes, a decent growth, 233 odd crore rupees. Same story goes for PAT, but PAT has done well. So we will be of course asking why this has gone up. Core business is the vertical SaaS, software as a service company, and this is for learning and assessment. That's where we will be looking at. Also, the company serves enterprise clients. The B2B SaaS, it's one of the safest options for a product company, and 103 clients coming across 19 countries. This number is expected to change. Almost 19 employees are there as of September 2025 as well. Also looking at these numbers, cloud-based platforms, they are there, and open APIs are there. These are building blocks basically for a solutions-led company. AI-based products and a scalable architecture, that is something which you'll be looking out for. 24 clients as of now, the latest quarter. And interestingly, I've seen their clients' relationships are at an average 9 to 10 years. So that is a customer stickiness where you can cross-sell higher margin products also by definition. And the main offering is Saras e-assessment platform. That is a very important thing to look at. They're supporting test creation, marking reports, and entire testing in the education sphere is something which I have been talking about. Also looking at the AI proctoring, that this comes under EI Proctor, and this is for the remote exams, and that's also something which the company is looking at. And the SaaS model is coming up with a long-term enterprise contract which I had mentioned you earlier, B2B SaaS. Saras LMS is nothing but a learning management system. And apart from these core products, we see there is OpenPage also, which is an interaction for the ebooks as well. So in this entire product portfolio, we can see slowly how important they are actually turning out to be. So this is the entire picture coming in for this product space, and we have discussed a lot of it. And lastly, the revenue mix is very much important so that you get clarity of so much products are there, but what are the key products and the revenue contribution. So I have made an edtech services, that's 54 odd %, and assessment, that is something which is almost 29% of our revenue is coming in. So this is the overall revenue mix, and the geography mix, that's the North America one, 63%, and the expansion happens generally in the other markets. India not so much, it's 5 odd %. And interestingly, the company becomes a beneficiary of a lower rupee, or currently you can say rupees at the record levels. So that's a kind of a strong up move point for the company as well. But of course, it's a B2B, so pricing power also the company does have in certain contracts as well. But let's go on. We have discussed enough about the company and their wide variety of kind of products. But coming back to the format of the show, it's very much important that you understand there are 8 criteria where we will be getting the company and judging them and giving them the ratings. These are the basic things, but this is the most important. Income statement, balance sheet, cash flow, return ratio, largely number led, but we will be judging the company. Shareholding, street cred, valuation. These last 3 rating parameters, of course, they are having a very small investment horizon period, so our views will change with time regarding the company, and outlook is something which is, we can say, the forward looking statements from the company which we will also judge. So these are the total 8 parameters we will be working on in our show in KYC. But the first parameter let's look at, that is the income statement. We have taken these numbers till FY25. The numbers have been decent. The revenue growth is from 195 odd crore rupees has gone up to 233 crore rupees, and the margins, there was a dip in FY24, but then it's regained back, and that is something which we'll also look at the Q2 numbers. The net profit has also done well. So FY24 seems like there was aberrations in this space, but margins, look at it, that's around 19.3%. So we can say it's almost back to the levels which I had discussed earlier. Sequential growth, revenue has been 16%. EBIT, of course, there are some one-offs also, but overall there has been a significant growth. So Q2 performance has been good. Company has delivered post its IPO. So on that basis, I will give a thumbs up when it comes to the income statement. Also moving ahead from the income statement, let's go to the balance sheet segment. And of course, after IPO, the company will definitely have a higher cash balances also, and the borrowings, that has actually come down from 118 odd crore rupees just at 27 crore rupees. That means the balance sheet's health, that has shown strength, and cash bank balance is there, which is a buffer. In future, they might be used for acquisitions also. That's what I had read when I had been seeing the financial statement and the press releases of the company. So from my side, even balance sheet, the company has done well. So it's a thumbs up coming in. So income statement, balance sheet, looking at these numbers, they have shown a good strength. But let's move on to a third and a very important parameter, that's the cash flows, especially when you're looking at the operating cash flows going ahead. And let's get in the cash flows, how the numbers actually pan out. And we largely see it's been decent when it comes to the operating cash flow. That's around from 55, it's around 52.6. But the cash flow conversion, that has been a kind of a conversion which was 439% in FY24. Remember, it looks like an aberration here. We'll understand with the management. FY25, it was at 152 odd %. Largely nothing much to look at when it comes to the net cash flows, because the gyrations are a lot, roughly 14 odd crores, and it's almost down, you can see, by almost minus 12.7 crores. FY25 also, there's no much clear indications of trends coming in. So looking at the cash flows, it's still not giving any signal as such, and because of that, I will give a neutral rating when it comes to the cash flow. The fourth one is the return ratio. That's also very much important. A very limited number we have for this company. FY24 is around 5, but FY25, that has doubled up. This is ROC. I'm talking about the return on capital employed. And let's look at the ROE numbers, how that actually pans out. Over here, that's around 4.4, but there's significant jump coming in. That's almost 10 for these numbers. Largely, whenever you have these companies, we generally look for a SaaS company, B2B SaaS company historically, that at least 15% of ROC should come to the investor. So that's another question we'll ask, whether it's an industry specific problem or company specific problem, whether ROCs or ROEs are not coming on a higher basis. That's something we'll try to understand when we speak with the management on the industry and the valuation. But as of now, I will be giving this company, for the ROE, ROC numbers, still a neutral rating, because industry needs to understand which sector the company is working in, what should be the actual multiple of the ROEs and ROCs, and of course I'll be getting with the valuations also as a parameter. But right now it is kind of a neutral rating. Shareholding, that's also in focus. There is a institutional participation. FIs, it's on the lower side, it's around 4 odd %. DIs, there has been a good lapping coming in. And look at the market cap of the company, just 1000 odd crore, and DI's participation is 14.2% of the equity stake. That is a very important reminder that there is a good strength coming in for the company, and largely promoters are owning majority of it, 59 odd %. So it is still decent. Let time decide whether this institutional participation goes out, or we might see some kind of a sell-off in any of the categories. That is something we'll look at, but right now shareholding pattern will be largely neutral coming in from my side. So this is almost, you can say, we have done 4 parameters of it. Moving on the street cred, that is where my concern also comes in. Post IPO, nothing much has happened. Issue price 120, listing price was good, a small pop 135 rupees, but then listing premium was down almost from there number is down 13%, and the listing change which was there, that's also down 28%. So the concern for me is post IPO there hasn't been any kind of a value creation for the investors. But yes, let's not be harsh on the company, it's just been 45 odd days. But net on the current numbers, the street cred, I will give a thumbs down to the company going ahead. Also, apart from the street cred itself, let's look at the other important kind of criteria which we should be actually focusing on. And I had mentioned you about the valuations. Is this a SaaS company? Is this an IT company? Is this a service company? Or is this a product company? That's what we are looking at. And currently, the valuations data which I have got, MPS is the nearest competitor, and we did an analysis also from the RHP, so that's coming in at 21 times the current P. These are all the trailing numbers which we have got. Remember, there is no analyst coverage, and that's what we bring you in KYC, the companies which are untracked, where alpha might be there in the future. Excel Soft is at 30 times, so that's my concern as well. With time, of course, we'll understand what's the actual industry valuations, and then maybe we can judge the company more better. But right now, as of now, I'll give a thumbs down when it comes to the valuations front for Excel Soft. Despite the correction from its IPO prices, there might be some expensive pricing in the IPO getting factored into the markets, but of course, there is industry headwinds also. Also, let's move on to the 8th and the last parameter, outlook. This is one of the most important things for a company which is not tracked. That is something which we always look for, and we always tell managements to come and talk to the entire ecosystem and the stakeholders. Strong traction coming in the educational tech services. Recently, even Physics Wala was launched, so that's another angle, but this company is product based. Let's get on to the other outlooks. There is a sustained uptake coming in the learning and assessment platforms going ahead across the markets, but the learning is just not happening in North America, it's happening all across the world. Enterprise skilling and verification ecosystem is being built worldwide, and the strategic acquisitions, that's also very much important since companies having a decent cash pool, so they might expect some more edtech related acquisitions, and when that happens it becomes margin accretive as well. The new markets, Egypt, France, Italy, Brazil, Philippines, they look very different, very varied, but it's good to actually branch out from the traditional North American markets. Roughly 64% of revenues are still coming from there. So that is something which we'll be asking the management also regarding their expansion plans. Now you must be wondering, we have spoken so much about the parameters, what are the overall ratings? So let me summarize it for you. Largely income statement, balance sheet has been good, so we have given a strong thumbs up both sides. Cash flows, return ratios, they have given us mixed signals, so it's a neutral rating from my side. And moving ahead, the shareholding pattern and the street cred, that's also a concern for me. And valuations, still not, the market has not discovered the industry, or you could say the multiple, but overall it still seems overvalued. I've given a thumbs down, but outlook is something I'm very bullish on. And net overall, the KYC rating I have given is 4.5 out of 8. This is largely, we could say, in line or towards the higher side in our general ratings which we give in KYC rating. But now we'll take a very quick break. On the other side, we'll be joined by the management. Do stay tuned. We'll get you more information on this company.
शुक्ला जी।
हाँ जी, बंद है।
सुनो
शुक्ला जी,
अरे कल अनाज बैंक बंद है।
बैंक
जब से ये दुकान खोली है मैंने तब से बैंक का ही तो काम कर रहा हूँ। अरे डिपॉजिट करो तो फॉर्म भरो, विड्रॉल करो तो फॉर्म भरो और ऊपर से उसके लिए एक्स्ट्रा चार्जेस भी दो। क्यूआर, कार्ड पेमेंट, बैंक ट्रांसफर, सबका हिसाब किताब तो मुझे को रखना पड़ता है ना। तो मैं तो बन गया ना चपरासी।
नॉट बैंकिंग विद AU?
AU करंट अकाउंट के साथ मिलता है फ्री UPI QR ओवरड्राफ्ट फैसिलिटी और एक ही ऐप से बैंक के सारे काम।
मतलब फटाक से AU।
हाँ जी शुक्ला जी, सोच बदलो और बैंक भी।
High MTF rates hurting your profits? Why, what's your MTF interest rate?
Mine is 14.5%. It's cutting down my returns.
Then switch to Paytm Money. Their MTF interest rate is just 7.99% per annum. Pay less and trade more. Switch to Paytm Money.
Investments in the securities market are subject to market risk. Read all the related documents carefully before investing.
कल का भारत उन्हीं से बनता है जो आज सीखने, समझने और नई सोच रखने का जज्बा दिखाते हैं। और इसी जज्बे को सेलिब्रेट करने आ रहा है अदानी सीमेंट फ्यूचर एक्स क्विज इन एसोसिएशन विद NDTV इंडिया। फ्यूचर एक्स सिर्फ एक क्विज नहीं है, ये एक नेशनल लेवल चैलेंज है जो स्टूडेंट्स की नॉलेज को टेस्ट करता है। अगर आप क्लास 9 to 12 में हैं और तैयार है अपनी नॉलेज को टेस्ट करने के लिए, तो फ्यूचर एक्स क्विज इज योर चांस टू पार्टिसिपेट एंड एक्सेल। सो पार्टिसिपेट, compete, स्टैंड आउट और बनो फ्यूचर बिल्डर्स ऑफ भारत। एनरोल नाउ।
Any time is a good time for multi-asset allocation funds. Invest in a mix of equity, debt, gold and silver through one fund.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
KSH International Limited now launches an initial public offer of equity shares of face value of 5 rupees each in the price band of 365 rupees to 384 rupees per equity share. Bid offer opens on Tuesday, December 16, 2025 and closes on Thursday, December 18, 2025. For risk factors and other details, please refer to the red herring prospectus available on the websites of the SEBI, the stock exchanges, the book running lead managers and the company.
बिजली का बिल 5,000।
आउटगोइंग तो जा रही है, आपकी क्या तैयारी है?
रूट कैनाल 25,000।
आउटगोइंग है जा रही, आपकी क्या तैयारी?
सीनियर क्लास की फीस 1 लाख रुपीस।
मनी की आउटगोइंग रहेगी जारी, इसीलिए कर लो तैयारी। SIB के साथ इन्वेस्ट करो और जरूरत पड़ने पर SWB के साथ सिस्टमैटिकली विड्रॉ करो। म्यूचुअल फंड निवेश बाजार जोखिमों के अधीन है। योजना से जुड़े सभी दस्तावेजों को ध्यान से पढ़ें।
Welcome back to KYC, and the company in focus is Excelsoft Technologies. This is a largely small cap IT company, but it's dealing in a niche segment. The company calls itself a B2B SaaS company, and education training, that is something which the company is looking at. Company's nearest peer is MPS, but no major performance has come in post its IPO. Just in November it was listed. Stock is still down from its listing price more than 20%, but we had done a rating parameters, income statement and balance sheet was really strong, so I've given a +1 to both of them, and the cash flow return ratios largely neutral because of divergent analysis which we had done. And looking at how the shareholding pans out, let's give it some more time to the company. Street cred on the negative side, valuation still it seems expensive as compared to peers, but outlook is something which I am very bullish on when it comes to the company. So net I have given 4.5 out of 8. But to understand the other side of the coin, we are joined in by the management. Dhananjay Sudhanva, he is the chairman and managing director at Excelsoft Technologies, and Prashant HM, he is the head of strategy at Excelsoft Technology. A very good afternoon to you, both of you gentlemen. Mr. Sudhanva, I would like to start with you. The street is getting a new type of a B2B SaaS product in the markets. This is your company Excelsoft Tech. Now, if you had to put in the growth guidances, you could just explain the company a little bit about what the company is all about and the growth guidance, especially revenue and the margin front, then we'll start.
The company is about
developing technology products compliant to vertical SaaS so that we can create multiple tenants for multiple customers. There are two areas in which we build technology products. One is in the learning space, and the other one is in the assessments and testing space. It's not one technology product, it is a suite of technology products that are required to make sure we cover the entire gamut of online digital test and assessments. Also, a number of technology products together covers the entire gamut of learning online. I'll take the first example of learning online. It's been there for a while. We've seen open source models like Moodle and many others. I think the more recent evolution has been that learning content is bite-sized. They are not anymore full courses that become available online. It's also that the learning experience gets personalized.
All right. Yes. Prashant, I have a question. Since you are doing a lot of strategy growth for the company, I just have a query that the rupee is at its record low levels. Any kind of tailwind we can expect in the financials in Q3, Q4? How does this actually work for a B2B SaaS kind of a player like yours?
Yeah. Sharad, good morning. Yes, of course you are right. Dollar getting stronger by the day means that our revenues will have a slight upside from the conversions. Yes, lots of our revenues is in dollars today, although it is from multiple geographies across the globe. Dollar rate has a positive impact. Yes, you're right.
If I can add, the weakening of the rupee, which actually will deliver more notional profits in the balance sheet, because the advantage of the dollar rupee exchange rate, which is right now to our advantage, cannot be captured as revenue from sales. It is still revenue, but will be called out as notional revenue.
Yes, Mr. Sudhanva, there is a cash balance also of the company. Recently, the company came with its IPO as well. Are you looking for any acquisitions in the tech space?
Yes, the cash balance, the internal accruals in Excelsoft is meant for acquisitions in territories that matter to us. Right now, we are looking at two geographies. One is the US and the other is UK, and we have an investment banker out of the UK who is showing us, and we are discussing with companies both in the UK and US for potential acquisitions.
And Mr. Prashant, the question is, what's the margins outlook going ahead? Because a lot of viewers have asked us regarding the company, that what's the margin growth outlook guidance going ahead?
Right. If you see what we have delivered in the last year, FY25 is 31% on EBITDA and about 15% in PAT. Going forward this year as well, the traction of 31% is definitely there. In fact, we are looking at over the long run an expansion in the profit margins. We are looking at nothing less than 35-36% over a period of 3-4 years. The reason being multiple. One of the reasons is, of course, we are looking at a growth on the revenue side. While the revenue grows, the expenses do not grow proportionately. So that is one of the reasons. The second reason we are looking at is an increase in the license revenue. When there are license revenues, the costs associated with such license revenues is not proportionate to the revenue. So it's much lower. Therefore, there will be an expansion in the margins. And thirdly, what we are looking at is obviously productivity and efficiency in all round, including our development.
And and Mr. Sudhanva, one final question. There's a product called AI Levet that gained my attention, and a lot of Gen Z folks also told me about this product. What is this actually all about? If you could just explain us in short.
Yeah. I'll try to be as short as possible. When AI became a reality, our strategy was to build a complete AI stack, including the hardware. So we have a GPU farm, a number of GPUs in-house, and we use multiple LLMs. We could use Google's Gemini. We have running on a couple of GPUs. We have Mistral running on a couple of GPUs. So we basically have most of the LLMs already installed on our GPUs. That gives us the flexibility to take a problem we are solving in the area of assessments or learning, to pick and choose which learning models, like LLMs, we want to use and properly sequence it to achieve
Thank you very much, Mr. Sudanvav, for giving us this entire AI setup and also the strategic outlook. Prashant, thank you very much as well for your views, for the growth outlook and the strategy for the company going ahead. Well, that's all for today. Excelsoft was in focus in KYC. Stay tuned to NDTV Profit.
छुट्टी पे तो चिल कर।
मेरा बैंक मुझे चिल करने देता है। इंटरेस्ट पता कितना देता है? इतना सा, और वो भी यार 3 महीने बाद।
नॉट बैंकिंग विद एयू।
एयू एयू सेविंग्स अकाउंट में मिलते हैं अमेजिंग बेनिफिट्स, पेपरलेस बैंकिंग एंड हायर इंटरेस्ट, वो भी हर महीने,
एवरी मंथ। सोच बदलो और बैंक भी।
High MTF rates hurting your profits? Why, what's your MTF interest rate?
Mine is 14.5%. It's cutting down my returns.
Then switch to Paytm Money. Their MTF interest rate is just 7.99% per annum. Pay less and trade more. Switch to Paytm Money.
Investments in the securities market are subject to market risk. Read all the related documents carefully before investing.
आराम से हाँ। सामान देना भैया।
अब आगे क्या करना है? वो पिट्टू की पर्ची में देखो ना, कहाँ गई पर्ची?
नमस्ते
जी।
हाँ? मुझे पता है वो पर्ची में क्या लिखा होता है। आप चलिए मेरे साथ। व्हील चेयर, ये आपका और ये आपका। पर्ची में शॉपिंग की बात तो जरूर लिखी होती है। थोड़ी पेट पूजा की बात कोई पर्ची में ना लिखे, ऐसा हो सकता है? टिफिन
थैंक यू।
अरे पर्ची मिल गई।
पर्ची में तो ये सब लिखा ही नहीं था।
हम है ना आपकी पर्ची।
सिर्फ वर्ल्ड क्लास एयरपोर्ट्स नहीं चलाते हैं, आपके सफर में हम सफर बन जाते हैं। अदानी, हम करके दिखाते हैं।
Anytime is a good time for multi-asset allocation funds. Invest in equity, fixed income, gold, silver through one fund.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
KSH International Limited now launches an initial public offer of equity shares of face value of 5 rupees each, in the price band of 365 rupees to 384 rupees per equity share. Bid offer opens on Tuesday, December 16, 2025 and closes on Thursday, December 18, 2025. For risk factors and other details, please refer to the red herring prospectus available on the websites of the SEBI, the stock exchanges, the book running lead managers and the company.
होम EMI 50,000।
कॉइन तो जा रही है। आपकी क्या तैयारी है?
पूरे सीलिंग का 20,000।
आउटगोइंग है जा रही। आपकी क्या तैयारी?
मौसा जी, मेरी शादी का गिफ्ट।
मनी की आउटगोइंग रहेगी जारी, इसीलिए कर लो तैयारी। SIP के साथ इन्वेस्ट करो और जरूरत पड़ने पर SWP के साथ सिस्टमैटिकली विड्रॉ करो। म्यूचुअल फंड निवेश बाजार जोखिमों के अधीन है। योजना से जुड़े सभी दस्तावेजों को ध्यान से पढ़ें।
What does say 11 years of Modi compare with in a global context?
He's going strong. Part of it is a weak opposition. Part of it is he's very disciplined. This is his life. It's why I've said that Modi is probably the most consequential prime minister since Nehru. And he's reshaped politics. He's reshaped the nature of the kind of master narrative of Indian history.
Hello and welcome. You tuned into Markets at 12. I'm Nisha Poddar, and let's take it straight to one acquisition that has been announced by Syneris Pharmaceuticals. That's Apnar Pharma, 100% acquisition for 91 crore rupees. Let's take it straight to the management, the promoter and MD of Syneris Pharmaceuticals. Swapnil Shah joins us now on NDTV Profit. Swapnil, always a pleasure to speak to you here. First of all, the rationale of Apnar acquisition?
Apnar acquisition is a very strategic acquisition from the Syneris journey standpoint. So there are a couple of rationales. So number one is we can move our products that are manufactured in the US, which can still be done in India at a lower cost. So that's going to be cost arbitrage for us, which will be manufactured at lower cost in India, and it can free up the capacities in the US, which can be used for a higher margin business as we speak. So that's one rationale. The second, the strategic rationale would be will be accessing a lot of mid-tier regulated markets like EU, markets like Brazil, markets like Canada, and so on and so forth. With that, what happens is we already have about 70 odd ANDAs at a different stage. Most of them are approved. Some are at different stage of filing. We see tremendous opportunity of these products also in those mid-tier regulated markets, wherein there are customers who already have reached out to us over last couple of years in terms of wanting our products in their market. So once we start making it from this facility, those market accessibility will also be there. That's about the total business size or market opportunity for our products upwards to about $4 billion on that side. And with the India facility, with the complete analytical support, a lot of support we can provide to our US manufacturing with every approved facility that we have. So we see tremendous value, adds a lot of our expertise in the marketplace, and then kind of enhances our reach across the board.
All right, so Swapnil Shah, it's also about product expansion, your geographical expansion, cost arbitrage, and having a larger play. So that's the rationale. How will all this boil down to the numbers, the top line as well as bottom line? And is it EPS accretive from the very beginning? Because 3 of the 5 ANDAs that you've acquired are going to be live immediately.
That's correct. So I think the way we look at it, it's a pretty value buy for us in terms of what we've paid and what the market opportunity lies for us. Usually for such kind of acquisition, it takes a year or two to kind of scale it up to actually start generating a serious revenue for us, for you. Essentially what happens here with this particular acquisition is 3 products are already validated, and out of them 2 are already being sold in the US. So that immediate business from day one that we can start from that particular site. And these three products are quite decent in terms of competitive landscape, in terms of where we stand, where we are today. Plus this 5 product basket that we have out of these 3 can also go into government business. So we will qualify our US site for those 3 products, and we'll start selling into government business as well. So all in all, if you look at it, day one revenue from the acquisition site that will come. Products can go into US and again can be sold into government channels. We see about 120 crore of revenue in FY27 from this plant coming in, and with about 250 to 300 million units capacity, installed capacity they have, which can be extended to about 400 million in multiple shifts. Even if I consider a bare minimum 4 or 5 rupee per unit realization, we're looking at 250-300 crore revenue coming in from just existing infrastructure in FY28 onwards.
All right, so that is a good projection that you've given, but you've also taken debt of a large part of the 91 crore rupees that you have taken for this particular acquisition. So over 70 crore rupees will be debt. How does it leave you in your debt equity position, and what is the total debt after this acquisition and the acquisition financing?
Yes, so there are 75 crores is not pure play debt. So there are multiple components of that 75 crores. Net debt is long-term debt is only about 35 crores. The remaining 40 crores is other liabilities in terms of there's some promoter loans are there, there's some ECB loans are there. So they are not largely interest bearing as we speak. So at opportune time, those cash flows will be made, generated, and paid. So all in all, if you look at it, it's a long-term interest-bearing loan is about 35 odd crores from that acquisition. So that's very comfortable. From equity debt standpoint, we are at about, for this also, we are about 0.2, 0.3 in terms of where it stands and what we have paid for. And overall, on a console basis also, our debt equity ratio is well within 0.4, 0.3, 0.4 levels, much below 0.5, which is our threshold that we have considered or we have mandated across the board that we will not cross at any given point of time,
Right.
0.5 of equity debt portion. So very
Right.
comfortable from that standpoint.
All right, net debt to equity, very comfortable. A very quick answer on pipeline of products as well as your outlook on CDMO segment, very quickly.
Yes, so we have about 8 commercial products on CDMO, CMO, 24 strengths correspond to those 8. We have another 24 odd products that are different stage on CDMO, CMO. Every quarter we are launching 1 or 2. So very, very busy launch calendar for us this year, next year, at least for next 18 to 24 months. So looking at about 8 to 10 quarters, as we speak. So very busy both on the CDMO, CMO. On our products also, we have 46 approved ANDAs, which is pretty sizable for our size company.
All right, so that was the chat I had with Cenorus Pharmaceuticals on the acquisition earlier in the day. Now let's shift focus on the markets. There is a sudden drop and weakness coming in Nifty 50. Take a look at that. In the last few minutes of trade, it is getting closer to the 25,800 level as well, and finding it right now, all right, breached below 25,800 level after a long time, and that is the weakness that is really percolating in the market. HDFC Bank, one of the heavyweights which has been down in trade today. And apart from that, if you really look at the Nifty 50 components for the day, which are the biggest drags, Max Health is one of the biggest draggers with 3% down, of course, lower on in terms of the weightage to the index. The life insurance companies like SBI Life, HDFC Life are also down. And from the banking pack, it's a mixed bag. While SBI has been a top performer, on the other hand, ICICI Bank and HDFC Bank are the two of the biggest draggers on Nifty 50. Along with that, some of the other financials like Bajaj Finserv, Kotak Mahindra Bank also weakish in trade today. At the moment, what's still holding on firm is some of the metal counters like Hindalco, and also the IT sector is doing better than the overall market. SBI is one of the heavyweights which is in the green. All right, let's take stock of what's really happening in the market. Abhishek Jain, who's the head of research at Arihant Capital, joins in now. Abhishek, looking at the sudden weakness in the market, and of course there was a consistent weakness in the market. 26,000 level has been long forgotten. Now we are breaching below 25,800 as well. What's your sense for the rest of the year?
We believe this should, I think this is the last leg of selling from the FIs, specifically because after 20th, I don't see any incremental sellings from the FIs specifically, and we have seen this lack of interest, especially on the HNI side, on the small cap and mid caps, which is actually triggered selling, especially in the last 1 month, especially on the small cap and mid caps. I think this is a good time to accumulate if you have a long-term view right now. So we always believe buy the noise and sell the silence. So this is a good time when people chips are down. This is a good time to build up a portfolio, specifically on the small cap and mid cap areas. There are a lot of good ideas that are available, where which is having a more 1 year if you take a more than 1 year call, this can be easily can give you 50 to 70% returns from those levels.
So the correct correction, in the market, Abhishek, is also giving some opportunity. Which are those areas which are opportunistic buy at this particular time when we are seeing lean season and some pressure and even profit booking and consolidation in the market?
So I'm just giving an example, like something called Raymond Lifestyle right now. This is something Q2 is historically weak for the company, but despite challenges in US, Shraddh and other things, the company has delivered 8% plus revenue growth, which is historically a weak season for the company. I'm expecting Q3 will be much superior for the Raymond Lifestyle. Specifically, the textile business will deliver a revenue of 20% plus. Due to some selling from the one of the key investors, the stock has been hammered. But I think this is a good time to accumulate. US people are concerned about how the US business is there, but US is really, I think, exports are only 50% of the revenue, and US is the 50% of the exports. Next year, with UK FTA is likely to be signed, and at some point of time, we may see a trade deal also. So this is something where I believe this is a good opportunity for investors. The stock is available at on this year earnings itself 8 times EV by EBITDA.
Right, so Abhishek, Raymond Lifestyle is one of your good value buys at this particular time. And overall, you've seen that consumption has suddenly picked up momentum in the last few days. And defense has taken a turn for the negative for the last few weeks now. Apart from Raymond, which other area is a value pick for you? One, and very quickly.
So one I would like to add is Sheela Foams Limited. Sheela Foam is a market leader in the segment right now. If you see at Sheela Foam side, they have acquired Sheela Foam is largely, they have acquired Kurlon, and there has been some one-offs because of the Kurlon acquisition we have seen in last 2 years. But smartly, what exactly they have doubled up their marketing, specifically in the geographies like especially on the eastern and southern side where they have a lower presence, they have doubled their marketing presence. If this is the only company in the organized segment after the acquisition, they have increased their market shares. So the market share is now north of 30% with Kurlon. And I think this is a story which is you are getting a market leader available at and delivering at 12-13%. Yes, please.
All right, Abhishek, thank you so much. Those were the two value picks that you have suggested, Raymond Lifestyle as well as Sheela Foam. So that's a pick really coming in from Abhishek as value buy as the market is trading lower, under pressure in the market currently. But we'll slip into a short breather, come back for more news and updates on the other side. Stay tuned to Markets at 12.
Co-powered by Switch to Paytm Money. Brought to you by Aditya Birla Sun Life AMC Limited and India First Life, promoted by Bank of Baroda.
जब से दुकान खोली है मैंने तब से बैंक का ही तो काम कर रहा हूँ। लो बन गया ना चपरासी।
Not banking with AU.
AU करंट अकाउंट के साथ मिलता है फ्री UPI QR ओवरड्राफ्ट फैसिलिटी और एक ही ऐप से बैंक के सारे काम।
AU। हाँ जी शुक्ला जी, सोच बदलो और बैंक भी।
कल का भारत उन्हीं से बनता है जो आज सीखने, समझने और नई सोच रखने का जज्बा दिखाते हैं। और इसी जज्बे को सेलिब्रेट करने आ रहा है अदानी सीमेंट फ्यूचर एक्स क्विज इन एसोसिएशन विद NDTV इंडिया। फ्यूचर एक्स सिर्फ एक क्विज नहीं है, ये एक नेशनल लेवल चैलेंज है जो स्टूडेंट्स की नॉलेज को टेस्ट करता है। अगर आप क्लास 9 to 12 में हैं और तैयार है अपनी नॉलेज को टेस्ट करने के लिए, तो फ्यूचर एक्स क्विज इज योर चांस टू पार्टिसिपेट एंड एक्सेल। सो पार्टिसिपेट, कम्पीट, स्टैंड आउट और बनो फ्यूचर बिल्डर्स ऑफ भारत। एनरोल नाउ।
Anytime is a good time for multi-asset allocation funds. Invest in equity, fixed income, gold, silver through one fund.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
सर, इतनी बढ़िया प्राइस पे कार खरीदना एक मास्टर स्ट्रोक है सर।
सर, बिना झंझट के मुझे कार लोन कौन देगा?
सर,
सचिन?
अरे सचिन सर मुझे लोन क्यों देंगे?
सर मैं नहीं, बैंक ऑफ बड़ौदा देगा आपको डिजिटल कार लोन, एक्सटेंडेड रीपेमेंट पीरियड और क्विक अप्रूवल भी मिलेगा। बैंक ऑफ बड़ौदा से कार लोन लेना भी एक मास्टर स्ट्रोक है।
KSH International Limited now launches an initial public offer of equity shares of face value of 5 rupees each in the price band of 365 rupees to 384 rupees per equity share. Bid offer opens on Tuesday, December 16, 2025 and closes on Thursday, December 18, 2025. For risk factors and other details, please refer to the red herring prospectus available on the websites of the SEBI, the stock exchanges, the book running lead managers and the company.
Nice, yeah.
Hey, Mahi, suggest a cool bank जो environmentally conscious हो.
SBI, coolest है.
Really?
SBI ने लाखों पेड़ लगाए, वेस्ट मैनेजमेंट प्रोजेक्ट्स को फंड किया, ईवी लोन्स पे कंसेशंस दी और रेन्यूएबल एनर्जी को मैक्स सपोर्ट किया.
Wow, that's cool.
SBI, the banker to every Indian. Truly.
बिजली का बिल 5,000।
आउटगोइंग तो जा रही है, आपकी क्या तैयारी है?
रूट कैनाल 25,000।
आउटगोइंग है जा रही, आपकी क्या तैयारी?
सीनियर क्लास की फीस
1 लाख रुपीस।
मनी की आउटगोइंग रहेगी जारी, इसीलिए कर लो तैयारी। SIB के साथ इन्वेस्ट करो और जरूरत पड़ने पर SWB के साथ सिस्टमैटिकली विड्रॉ करो। म्यूचुअल फंड निवेश बाजार जोखिमों के अधीन है। योजना से जुड़े सभी दस्तावेजों को ध्यान से पढ़ें।
टीवी पर पहली बार
साली बुज़दिल पाकिस्तानी आर्मी।
हिंदुस्तान की जमीन वापस लेना हमारी जिम्मेदारी है।
बटालियन 609 शुक्रवार 19 दिसंबर शाम 7 बजे शिमारू जोश पर DD फ्री डिश चैनल नंबर 53।
What does say 11 years of Modi compare with in a global context?
He's going strong. Part of it is a weak opposition. Part of it is he's very disciplined. This is his life. You know, it's why I've said that Modi is probably the most consequential prime minister since Nehru. And he's reshaped politics. He's reshaped the nature of the kind of master narrative of Indian history.
Welcome back. You're watching Markets at 12 and we are joined by Atul Tiwari, who's the head of Industrials and Electronic Utilities and Infrastructure Research at JP Morgan. Now, Atul, always a pleasure to welcome you on NDTV Profit. First of all, the capex cycle growth is very, very critical for infrastructure development, and we have seen some slowness in that. How are you seeing the status, as well as what is the projected outlook and factors behind it for the next year?
So as far as government capex is concerned, after pretty healthy growth between 2021 and 24, over past 1 year, we have seen some consolidation. And from here onwards, we do think that the government capex should be able to grow, in line with nominal GDP. This year, actually, year-on-year growth is quite strong so far, but that is because of low base of last year. The key event here will be the budget session, and we do expect the government to pencil in capex growth in line with nominal GDP growth next year. As far as private corporate capex is concerned, that too has slowed down over past 1 year, and right now our sense is we are bottoming out. Government has given consumption stimulus over past 6 to 9 months, and that is reviving demands in some of the key sectors in the economy. And the expectation is that next year, as this demand picks up, corporates will also come forward and start increasing capacity, and that will lead to private corporate capex bouncing back to low teens kind of handle. So that is the expectation as of now.
Big expectation there, Atul. Private sector capex cycle to bounce back is a big one, and we need that. Now, power demand, that has seen a dip in certain categories. How has it really shaped up, and what What's the key trend that is visible for the next year when we look at the power and utility as well as alternate energy space?
Yeah, so on utilities and alternative energy, over past 5 to 8 years, we have seen quite a bit of growth in terms of installed capacity added and capex being incurred. And this has happened both on the thermal side as well as on the new and clean energy side. And a lot of it has been driven, by very supportive government policies. However, again, over past 1 year, we have seen power demand being slightly weak compared to expectations. And as a result of that, the demand for solar power has reduced. During the days, we have enough power, and the system has now changed to ordering out solar plus BESS kind of projects or FDRE kind of projects. So those projects will keep happening, but the demand for pure solar project, is weak. To cater to peak power deficit during evenings, India has also started ordering out new coal-based plants, and a lot of coal-based plant ordering has happened, and we are seeing more ordering going ahead. So from here onwards, we do think that hybrid solar plus BESS and FDRE type of projects will keep getting ordered out, and some more coal-based capacity will get ordered out. Overall, we do view a power opportunity as a pretty structural growth opportunity over medium term, despite some hiccup in terms of weaker power demand and very short term.
All right, some weaker power demand in certain categories is a worry, but the nerve center of power sector there, Atul, is also the transmission space, and we have seen several projects getting delayed on execution. How are you seeing the transmission projects execution for the next year? Are the bottlenecks sorted?
Yeah, so I think the context is important here. Last year, the pace of award of transmission projects in India was very high. And obviously, when you are awarding so many projects, execution does take some time to catch up. This, along with the fact that there have been rights of way issues for some of the larger transmission projects, with the farmers demanding, higher compensation, has led to a little bit of a slowdown in execution. However, now new government guidelines have been put in place where the compensation for right of way to the farmers has been increased. As it happens, it does take some time to roll out these guidelines on ground. So it is taking some time, but we think that this is a pretty short-term phenomenon. And over next 2 to 3 quarters, we think that most of these issues should be resolved, and right of way issues will be behind us, and the execution will pick up for the transmission sector as well.
Right, so transmission bottlenecks could be in the past. It could really limp back, but defense sector has lost its flavor in the last few months on the markets. Does it continue to be a promising sector for years to come? What's your house view?
So we view defense space in India as a very strong structural growth opportunity. This is being driven by the geopolitical necessity, the government policy, as well as increasing allocation towards defense capex. And we do think that over next decade or even 2 decades, India's defense capex will keep growing easily in the base case at 10 to 12% CAGR and possibly even higher. And the companies which have right set of capabilities to tap into that opportunity will grow faster than that. And that will happen because government is laying a lot of emphasis on substituting imports with domestic manufacturing of defense equipment. So the structural opportunity is definitely there, and we continue to remain very positive on that space. Very near term, we do think that because stocks have done quite well this year and actually over past 3 to 5 years, over past 1 or 2 months, there has been a bit of a profit taking, in some of the individual names, and that actually, to our mind, makes valuations even more comfortable in this sector, which is poised to grow structurally.
Right, so defense sector valuation is now looking a lot more comfortable, Atul. That's a big takeaway. And the second one is also the industrials valuation look rich. What's the right valuation that we are looking at, and your view on this space as well?
Yeah, so on the industrial part, we have a fairly neutral view, in part because we do think that the slowdown which is happening right now will take some time to, be behind us. While we are also positive on capex growth over medium term, but we do need to see a few more data points, for to become much more constructive on this space. As far as the broader valuations in the industrial space are concerned, yes, I mean, we do think that for most of the names, valuations, are still on the richer side, and as a result, we have neutral or underweights on many industrial names.
All right, Atul Tiwari, thanks so much for joining us. So with all the views coming in on the infrastructure capex cycle, many takeaways there. Thank you so much for joining us with all the insight. With that, completely out of time on this edition of Markets at 12, but do keep it with NDTV Profit. Thank you so much.
छुट्टी पे तो चिल कर।
मेरा बैंक मुझे चिल करने देता है। इंटरेस्ट पता कितना देता है? इतना सा, और वो भी यार 3 महीने बाद।
नॉट बैंकिंग विद एयू।
एयू एयू सेविंग्स अकाउंट में मिलते हैं अमेजिंग बेनिफिट्स, पेपरलेस बैंकिंग एंड हायर इंटरेस्ट भी हर महीने,
एवरी मंथ। सोच बदलो और बैंक भी।
High MTF rates hurting your profits? Why, what's your MTF interest rate?
Mine is 14.5%. It's cutting down my returns.
Then switch to Paytm Money. Their MTF interest rate is just 7.99% per annum. Pay less and trade more. Switch to Paytm Money.
Investments in the securities market are subject to market risk. Read all the related documents carefully before investing.
कल का भारत उन्हीं से बनता है जो आज सीखने, समझने और नई सोच रखने का जज्बा दिखाते हैं। और इसी जज्बे को सेलिब्रेट करने आ रहा है अदानी सीमेंट फ्यूचर एक्स क्विज इन एसोसिएशन विद एनडीटीवी इंडिया। फ्यूचर एक्स सिर्फ एक क्विज नहीं है, ये एक नेशनल लेवल चैलेंज है जो स्टूडेंट्स की नॉलेज को टेस्ट करता है। अगर आप क्लास 9 to 12 में हैं और तैयार है अपनी नॉलेज को टेस्ट करने के लिए, तो फ्यूचर एक्स क्विज इज योर चांस टू पार्टिसिपेट एंड एक्सेल। सो पार्टिसिपेट, कम्पीट, स्टैंड आउट और बनो फ्यूचर बिल्डर्स ऑफ भारत। एनरोल नाउ।
Anytime is a good time for multi-asset allocation funds. Invest in equity, fixed income, gold, silver through one fund.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
फॉरेक्स ट्रेडिंग अभी एक ट्रेड में सिक्सर। अक्का।
प्रसिद्ध पहले सेफ्टी वरना क्लीन गोल्ड। अनऑथराइज्ड प्लेटफॉर्म पे फॉरेक्स ट्रेडिंग यानी नुकसान, धोखाधड़ी और कानूनी कार्रवाई का डर।
मतलब नुकसान की हैट्रिक। इसीलिए आरबीआई वेबसाइट पर जाएं, ऑथराइज्ड लिस्ट जांचें। आरबीआई कहता है
जानकार बनिए, सतर्क रहिए।
KSH International Limited now launches an initial public offer of equity shares of face value of 5 rupees each in the price band of 365 rupees to 384 rupees per equity share. Bid offer opens on Tuesday, December 16, 2025 and closes on Thursday, December 18, 2025. For risk factors and other details, please refer to the red herring prospectus available on the websites of the SEBI, the stock exchanges, the book running lead managers and the company.
टीवी पर पहली बार
साली बुज़दिल पाकिस्तानी आर्मी।
हिंदुस्तान की जमीन वापस लेना हमारी जिम्मेदारी।
बटालियन 609 शुक्रवार 19 दिसंबर शाम 7 बजे शिमारू जोश पर डीडी फ्री डिश चैनल नंबर 53।
Very warm welcome to Walk the Talk. I'm joined by one of the world's top foreign affairs gurus, Fareed Zakaria. Welcome.
It takes decades to build trust and it takes moments to break trust.
The United States recently came out with a new security strategy doctrine.
In this moment of extraordinary power and dominance, Trump's vision of America in the world is to retreat, to shrink, to shed its influence, make America a regional power again. For 80 years it's been a global power. We want to be a regional power.
welcome. You're watching Profit Buzzers right here on NDTV Profit. My name is Puneet Zaveri. With me is Anushi Wakhara, and over the next hour or so, we'll try and get you all the key stocks, all the key stories that are buzzing in trade today and that you should have your focus on. Before we do all of that and a lot more, let's first look at how the markets are doing, because it's been another day of consolidation across the benchmark indices as well as on the mid cap and the small cap index, but largely a day where individual movers are in focus. So the Sensex down 230 points, so is the Nifty. Let's look at the heat map very quickly on the Nifty 50. And that's largely going to be something that we'll start the show with, because on a day like this, where you are seeing stocks like Shriram Finance, SBI, and Aisha being the top three gainers, you have the losers list slightly more longer. So 30 stocks of the Nifty 50 are in red as we speak. And BSE 500 is quickly what I want to highlight as well in terms of individual names, because those are the ones that are driving the momentum in the market. One of the biggest stock today, apart from, is of course Meesho, and we'll discuss that in the show, but also AkzoNobel. You saw the large trade being played out on AkzoNobel, and hence the stock is down today. Also on IGL, there's a brokerage note by Nomura, which is focusing on the positives, up 6.5% as we speak. Amongst others, Avanti Feeds as well as India Cements is also up in the green today. But largely, let's pull up what Meesho is doing right now, because it's arguably one of the key stocks of the day, up 20% as we speak, and the momentum has continued to build up on this stock. We are focusing on it and starting the show with it today. It's also because we're starting the show with Trending in Trade. It's a new segment that we've started here on Profit Buzzers. It is a snapshot for you on the stocks that are making the most noise in trade today. And as usual, Jasmeet is joining us, and we'll start with Meesho. Jasmeet, what is leading to the positive up move today?
Well, thank you for that. Meesho has been in focus. It's been almost a week since the stock has listed, and on the listing day, we see a gain 45% in the stock, and since the issue price of 111 rupees, the stock has nearly doubled. And what's leading to the rally today are not the volumes, basically, there's a brokerage note. So we have UBS, which has initiated a buy rating on this particular stock with a target price of rupees 220. Now what they see is the overall shopping market in India has been growing, where they also make a note stating that the villages to the rural charts are demonstrating attraction when it comes to the online shopping, where they also see a substantial growth runway by FY30. Meesho has already been cash flow positive in last 2 years, though the company is still loss-making. A loss-making company sees shares with a traction of almost doubled in a week. Well, that's something which will be in focus. While they also make a note saying that they have visible path to profit and cash generation through the FY30 and FY26 going forward from here on. Well, lastly, they see the contribution margin, adjusted EBITDA margin, to make a mark of 6.8% and 3.2% by FY30. So it is a brokerage note, is the reason the stock is buzzing in trade today, and it's nearly hit the intraday high and up almost 20%.
Thanks so much for that, Jasmeet. But let's quickly pull up the chart for Meesho since listing, and you will see that the stock has effectively doubled in terms of returns for shareholders at this point of time. And there you go, 94% returns for all those lucky investors who bought in the IPO. It's also done well for investors who bought it post-listing of almost 160 to 170 rupees is what listed on. Since then as well, done very well for investors. But let me welcome in Prashant Tapse. He's the Senior VP Research Analyst at Mehta Equities at this point of the show. Prashant, very good afternoon, and thanks so much for joining in today. All those investors who also bought in, as I mentioned, post-listing have made good money on Meesho. Valuations have started to inch up now, but it's the momentum rather a lot positive for Meesho. If someone wants to consider it even at this point of time, firstly, would you recommend that trade, and what should they watch out for?
So before recommending, I think one should understand the business model of Meesho. I think that's a great model right now. It has been called as Amazon of Indian markets. I think the way how the active users have been shifted from last 10 crores to almost 50 crores as on the listing, I think that is creating a lot of buzz in the markets, creating a negative working capital cash flows, positive cash flows, as well as trying to be a bit positive very soon. So I think the business market for Meesho is around tier 2 and tier 3 cities. A lot of middle class is growing very fast. Even I am the user of Meesho in the recent times. So I think with this consideration, I think the growth is very superb. But yes, you rightly pointed out, valuations are slightly stretching out. I may not be a fresh buyer at 215, 216 today, but yes, any fall, any reason to have a profit booking attempt, and then I can, if I get it at 170, 180 again, so I think that would be a right price for me to re-enter.
Okay, so that's on Misho, currently locked in that upper cricket is what we are seeing. But the next stock in focus is Ahluwalia Contracts, which is buzzing in trade today on the back of an order win, stock being up over 5% today. Jasmeet, talk to us about this one.
Well, Anushi, if you look at this particular stock, the stock has had a good fundamental run, while even the margins have stayed pretty strong, between 8 to 10%. If you look at the overall 12-month chart of the stock is almost flattish, down about 8.5%, 9%, and the buzz in the stock is coming today on the back of this order which the company has won. The current order which company has received is for rupees 888 crores from the Bihar State of Tourism and Development, while this order is in regards to the EPC work in the Sita Mahir district of the company, and the order timeline for this particular order is next 42 months. If you look at the overall order book of the company as of the latest quarter, that is Q2, the order stands at roughly 18,000 odd crores with a guided range of execution in next 2.5 years. So all in all, we see positive news for this particular company, and a strong order book with a growth outlook given for next 2.5 years is something that is bringing the overall momentum for this particular stock.
Okay, so that's regarding Ahluwalia Contracts. Prashant, now coming to this particular counter, year-to-date basis, we've seen a correction over here. With all of these infra players, in fact, while we've seen order wins coming in picture, the order book execution is something that we need to flag off. What's your view with this?
I think, yes, you rightly pointed out with respect to the execution of any infrastructure companies in terms of executing the orders in time. I think Ahluwalia Contract has been doing well from last many quarters, and even if you see the Q2 earnings, they have done better well, and even the EBITDA margins have improved by at least 200 basis points versus the QOQ 9% EBITDA margins. Again, considering the strong order book, valuations are very comfortable right now with the 20 forward P and price to book valuation of 2.5. And with the good ratios of ROCs and ROEs, I think one should consider going fresh on the positive way.
Okay, so that's with regards to Ahluwalia Contracts. Now, next stock in focus is Shriram Finance, and there's a lot happening on this counter. Earlier, there were reports about MUFG taking stake in the company, but right now, the focus is on the fundraising plans. Jasmeet, talk to us about that as well.
Well, thank you for that. The stock has been buzzing in trade today. If you look at the one-year chart for this particular company, we see the momentum building up, and it's up almost 45% in trade. While today the stock is buzzing on the back of a fundraise where the board is supposed to meet. If you look at the fundamentals of this particular stock, the stock is doing really well. And in terms of the financial margin, also stays stagnant at 30% mark. Though we see a slight downtick in the previous quarter, but the fundamentals still remain strong. Now, if you look at the recent news, we say that the board to meet on 19 December to consider a fundraise via equity and other means. While the board is planning to do this fundraise via rights issue, preferential issue, qualified institutional placements, or the other permissible notes. While this particular fundraise has created an overall positive momentum in the stock, given that the particular fundraise will be used in a development which will impact company's top line going forward. That's what's leading to the stock's rally in the current time.
That's the view for Shriram Finance. Prashant, coming to you on this one, what is your view now? There's a lot of investor interest in this particular counter on the back of other developments as well. Now we'll be watching out for this fundraise, but what could be some of the key highlights why the companies wants to raise funds is a key question as well.
I think the company is into vehicle finance of the commercial vehicles. I think the way how commercial vehicle industry is growing, if you see the sector is growing at a 15 to 16% CAGR from last 2-3 years, I think the demand is really good. I think Shriram Finance has a very good hand in terms of servicing the demand for commercial vehicle loans. So with this again with growth, I think there are needs of funds, and that is the reason why they are raising funds. Even on the valuation side, very comfortable. The company has already rallied a bit in last 2 months, but I think even at this point of time, the price to book valuation as well as the ROE looks very good for me at the very positive way for next 1 year.
Got that view, Prashant, but another stock that's in focus, and we haven't discussed that too much this year, it's Saregama India. Let's pull up that stock, what it's doing trade. And today it's down 3.9%, but there's a positive update that's coming in phase for new partnership that Saregama has formed, and Jasmeet is going to take us through all the details.
Well, rightly said, the news seems to be positive for the stakeholders, but the stock is in red. If you understand the partnership, but before that, let's quickly pull out the one-year chart of the company. The stock is down roughly 26% on a year basis. In terms of the recent fundamental update, we see that the margins have been reducing for this particular counter from 35% back in 2022. Currently, it stands at 30% around 28 to 29 odd percentage going forward. Now, while that is something which will be a crucial point to watch out for, talking about the recent update for the particular company, we see that the company acquires 51% stakes in the Bhanushali production for rupees 325 crore, and they believe this to be a positive EPS assertive by FY27. While the street clearly did not take it in the right way, given that there's possible chances that, the second half of the year might not see any uptake or any revenue contribution with this particular acquisition. Further, FY27 will be a crucial year to watch out of how this particular investment of rupees 325 crore really works out for the company.
Thanks so much for that. It's definitely a key one, given for Saregama, of course, but also given that it's going to such a big brand of Bhansali Productions, it's going to be a key one that we'll continue to monitor. Prashant, on Saregama, is it something that you track? Because you also saw a lot of interest in this space. Tips Music, when listed in the start of the year, also got a lot of streets attention. Any quick view on Saregama?
If you see last 5 years, I think with Tips as well as Saregama both have done very well in terms of ROIs. But again, the recent earnings are not so good, and the pressure in the margins, pressure in the markets, again, that is creating a lot of buzz to have some kind of profit booking from the old investors. I think that is giving the right pressure for the price to come down. Again, in terms of valuations, still I am very much not comfortable. I think one should wait for the second half of this financial year to give some kind of earning presentation. But again, the news was positive. Despite that, there was some kind of profit booking attempt from the large investors. So I am a bit negative on the short-term period.
Yes, so not so optimistic view is what we are seeing for Saregama India. But moving on to the next one in focus is Indian Overseas Bank, which is in focus on the back of an offer for sale. Just maybe talk to us about this as well. What's the purpose of this OFS that we're looking at?
Well, Anushi, before going to the particular news, let's understand the key financial of this particular company. The company has reported a profit in the previous quarter with regards to financial profit. If you look at the overall performance, we saw a loss coming in the previous 2 quarters, but the previous quarter was a positive for the company. If you look at the chart for last 12 months, we see that the stock has been beaten down. It's down almost 37% from the highs in the beginning of the year. Now, in terms of the recent news is about the government to disinvest 3% stake in the company via the offer for sale. While this offer for sale will take place over 2 days, December 17th and 18th, while this includes government selling roughly 385 million shares, that's about 2% stakes in this particular company. While they have an optional to offload additional 1% stake going forward, depending on the circumstances. Now, in terms of the pricing, that's roughly at 34 rupees, which is roughly a 7.6% discount from the market price, which was closed yesterday. And today the stock is trading almost at that particular price. So the stock has been adjusted by the discount price the government was offering for the offloads. Now, in terms of the holdings, if you look at the government, they roughly own 94% stake in this particular company. So all in all, we see a negative news for this particular company, but it's still wait and watch of how the stock reacts going forward, how this investment takes place, and what are the new investors that are going to enter the stock.
So that's with regards to Indian Overseas Bank. Prashant, coming to you on this OFS, what do you make of this development? It's to meet the minimum shareholding requirements as well. Government currently holding about 96% of stake or so, 94% of stake or so. What is your view?
I think not so good. I think in terms of valuations, it's trading at a very high P by PV, price to book valuation at almost 2 times, when other good larger PSU banks are available at less than 1 price to book valuation. So I think still the government is taking a lot of time to get into that norms of SEBI for 75%. But I think a lot of pressure will go to, even for the medium term, there will be a lot of OFSs will keep the stock under pressure. So I am a bit negative on the stock as well as on the counter.
In fact, this year-to-date period has seen more than a 30% of correction as well. So that's Indian Overseas Bank. But it's time that we slip into a short break. We'll be right back. There's lots more lined up on the other side. So do stay tuned to NDTV Profit.
Very warm welcome to Walk the Talk. I'm joined by one of the world's top foreign affairs gurus, Fareed Zakaria. Welcome.
It takes decades to build trust, and it takes moments to break trust.
The United States recently came out with a new security strategy doctrine.
In this moment of extraordinary power and dominance, Trump's vision of America in the world is to retreat, to shrink, to shed its influence, make America a regional power again. For 80 years, it's been a global power. We want to be a regional power.
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations. And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
What does Sufism mean to you?
Sufism is about love. Higher ideals are more fascinating than normal love song or anything. Talk about Khwaja Mere Khwaja, Kun Faya Kun. It's all about higher ideals. I'm bringing the same spirit to Delhi. So book your tickets from District app. See you Delhi.
...2025 has been a tremendous year for markets, money and milestones. And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
They rule the world. 1 billion hearts. Now, meet the champions who made the nation proud. The Indian women's cricket team at the NDTV Indian of the Year.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
Hi, welcome back. You're watching Profit Buzzers right here on NDTV Profit. I'm Anushi Vakharia and with me is Puneet Zaveri. Now, an interesting sector that we should be watching out for is the seafood space. Now, what's happened here? If you just look at the shrimp exports, they are on track to hit record levels, and this is in calendar year 2025. The expectation is what we are looking at. Along with that, the exports also for the US markets are expected to remain on the positive side. We of course had developments with regards to free trade agreement with EU as well. So that's also another area that we are seeing. But you know, as per the INCRED note, what we are seeing, it's Chingalala time for all of these companies as data defies the pessimism. So just on that note, I want to welcome in the guest who will be speaking about this. It's Nitin Awasthi, analyst at INCRED Capital. Mr. Awasthi, in very interesting way, you've put out the first line, it's Chingalala time as well. I just want to understand what's making the street excited for the developments ahead. We've already seen in terms of the domestic and the export side that there are strong developments which have taken place. But what should be the one analyst watch out for?
Simply put, the pessimism which was there, which stated that these guys are in a very hard spot right now, that has to be moved out of the way because the data clearly states that we are still in a very positive zone. We're still very likely to end the calendar year with record numbers. And that is something which is very important. Over and above this is, of course, something important which has happened in the last 3 months is the EU-UK development. EU and UK, the whole market as such for Indian guys were very hard to get into. We barely had a presence there. It was very tough as a market to crack. Apart from just the trade barriers, the non-trade barriers were so high that almost all exporters had given up on that market. However, case in point being, in the last 3 months, you have over 100 plus factories which have got approved for EU and UK. This is something which was not happened for the last 8 years. And this market as such is going to add a substantial amount of increase to the overall pie of India. So if you look at the whole pie of India, we were only concentrating on growth we could get from the current export markets, namely US and China, a bit of Japan, but US and China were the main markets driving the growth, and it was only the growth which were coming in this market that could be the additional growth for the pie as such. But the UK and EU coming in just expands the pie. This is something this industry has not seen for a very long time. That expansion of the pie is what is the most exciting thing within the industry right now.
Right. So, Mr. Avasthi, while EU and UK present a multi-billion dollar of an opportunity for these players out there, just want to understand, there's been an overhang with the India-US trade deal as well, and US being a significant portion of all these exports that we are looking at. How should one assess this particular market? What would this trade deal development mean? What kind of announcement should one watch out for?
As of now, the worst is on. Very simply put, we have the highest tariffs we have ever had in the US market. So I think this could be a parameter to judge how bad things can get. It is where we are at right now. Even though the tariffs are where they are right now, 50% just the normal tariffs, Trump tariff, whatever we put it, the other tariffs which are there on this industry would push it closer to 60%. Now, that being the case in point, we still are not losing out on share in this market. The latest numbers still very clearly state that we still have 40% market share in this industry within US. And all the products that India is currently exporting to the US, it's very hard to replace them. And it doesn't look very likely that they will get replaced. Even if some country tries to get into this value-added segment of the shrimp industry, it will take at least 2-3 years just to get there, where India is currently. So the share hasn't moved. So if that is the way to judge it, then we can see that we, at the worst possible time, we have 40% market share, we're not losing anything. And then everything from here is just going to go higher.
Right. Nitin, very good afternoon. Thanks so much for joining in today. It's Puneet this side. So that's something that you spoke about, the space and what's led to the higher numbers, which is visible in the export data as well for the first 9 months. How should an investor play this theme? Because there are limited players, only 3 that are listed in this space, but there is a clear market leader in Avanti Feeds. There are also a couple of very interesting opportunities that you mentioned in the report as well. So if someone wants to play this space who not invested earlier in this, how should one go about it according to your analysis? And who would be one of the biggest beneficiaries in the next maybe couple of years?
Firstly, let's just distinguish between the players. Avanti Feeds is a shrimp feed, majorly a shrimp feed player, while the other 2 companies within the report, Coastal Corp and Apex Frozen, they are predominantly shrimp exporters. Avanti does have an exposure to the shrimp processing and exports business through its subsidiary, which is Avanti Frozen Foods. So there is a distinction in the primary business model itself. So I think either an investor looking to get into or look at this industry, I think rather than company specific, it's the industry which will dictate where he wants to go. If you're looking at the feed bit, you do not have a choice but Avanti. If you're looking at the processing bit, of course, pure play, you would only have Apex.
Mr. Avasti, coming to these picks that you've given for Apex Frozen and Coastal Corp, you have a target of over 76 to 86% for both of these counters. I just want to understand the key growth levers, so whether it would be on the P&L side, in the note you've mentioned about raw material prices easing as well, which would aid that margin expansion. But even in terms of balance sheet, I believe that Apex Frozen is one wherein they've seen debt reduction as well. So talk to us about that as well.
Primarily, these two companies, because they were smaller in size, they have got hit way worse when the cycle was turning on the downside. But what has happened interestingly over the last 4 years period where the industry has suffered is that cash flows were continuously still made by these companies. Although P&L level, they might have done a slight loss, but cash flows were still coming in. And this 4 years of tough period has actually helped them through those cash flows pay off a lot of their debt. So at a point of time where growth is right there, you also have a point where the balance sheet is the strongest they have been in. I think the current interest outgo, if you look at a 12 months trailing basis for Apex, it will be the lowest the company has ever done. Similarly, the guys like Coastal also will be on the similar extent. Of course, Coastal, you have to factor in that the Coastal subsidiary, Coastal Bio, has their ethanol plant which has come up. So that has a different division that has, in that balance sheet, of course, there is interest.
Nitin, very quickly, just the last couple of questions, because, Budget 2025 was very kind to this space in a sense. What are your expectations from 2026? You mentioned a couple of things in your note as well on government's effort to streamline the shrimp exports, as well as what could be the potential upside if the India-US trade deal happens, because most of, and if you can answer that question also, if it's, because a lot of it's not baked into the estimates yet, right? So what could be the upside if the trade deal happens with the US whenever it does?
By the way, it is baked into the numbers and it's baked in from next financial year. So yes, there is a time period where this can happen, where the trade deal can happen within the current financial year itself. However, the way the exports business is placed, the shipment which is going to go out today is going to only reach there and get cleared in the next financial year.
Sorry, Nitin, you said it's already baked in numbers. I think your audio was a little patchy at that time.
Yeah, it baked into the number with the scenario of the trade deal happening by the end of this financial year.
Got it. Perfect. Well, Nitin, we are completely out of time, but a longer chat definitely warranted just pre-budget. We appreciate your time here on NDTV Profit. Look forward to our next conversation as well.
Okay.
Well, that's, on the shrimp space, and it's a key one that we continue to monitor as well. But time for a very quick break. Lots more action on the other side. Stay tuned.
What does, say, 11 years of Modi compare with in a global context?
He's going strong. Part of it is a weak opposition. Part of it is he's very disciplined. This is his life. It's why I've said that Modi is probably the most consequential prime minister since Nehru. And he's reshaped politics. He's reshaped the nature of the kind of master narrative of Indian history.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
What does Sufism mean to you?
Sufism is about love. Higher ideals are more fascinating than normal love song or anything. Talk about Khwaja Mere Khwaja, Kun Faya Kun. It's all about higher ideals. I'm bringing the same spirit to Delhi. So book your tickets from District app. See you Delhi.
...2025 has been a tremendous year for markets, money and milestones. And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
Welcome back to Profit Bazaar right here on NDTV Profit. Let me now welcome in Gaurav Sharma, the Associate VP and Head of Research at Globe Capital for the next half an hour of the show. Gaurav, let me just take this first question with you because we were discussing the shrimp space and what it's done for stocks like Avanti Feeds, Apex Frozen, amongst others. On the charts, do they suggest buying into it right now?
Yes, hi Puneet, and good afternoon to you, good afternoon to Prashant and to the viewers as well. So talking about Avanti Feed, yes, it is looking attractive at current levels. Buying is coming in constantly. It has started its up move a little back around 700 odd levels, currently trading about 861. Although it is way ahead from those levels, still there is slight room towards 920, 925 odd levels left in the stock. So I think fresh positions can be considered at these levels as well. Traders can maintain a stop at 835 and look for targets close to 925.
Well, let's also look at, Vodafone Idea now, because there's no immediate call on a relief package for the stock just yet, or for the company just yet, and that's the exclusive we are getting in. Now, the government is moving very cautiously, mindful of its 49% stake and the market sensitivity as Vodafone Idea shares remain volatile. Let's bring in my colleague Shrimi to give us all of this and a lot more on this exclusive report.
Yeah, so the government is not expected to take an immediate decision on the relief package for Vodafone Idea, with the centre adopting a more measured and cautious approach, according to people familiar with the recent discussion. And in fact, sources tell NDTV Profit that the government is careful about taking any sort of step that could have direct bearing on the company's valuation, particularly given its 49% stake in the Vodafone Idea. So what we've been given to understand at this point, that any policy move indicated is being assessed not just for its fiscal impact, but also for the potential market implication. In fact, sources said that during recent discussion and even internal meetings, the government reviewed Vodafone Idea's several business and operations parameters and even the stock prices, which has continued to display the sharp volatility. And that's the sense of cautioning is coming, as stock sensitivity to any policy cues is kind of pretty reflecting on the stock prices. So as a result, a final decision is likely to take some time. Government preferring to move gradually on the relief proposal and examine all sort of options before arriving to any conclusion. Official even said that there is no urgency as such, and they're evaluating the broader consequences in a way. And as we know that Vodafone Idea has submitted 2 to 3 proposals to Department of Telecommunications seeking relief, and this is coming after Supreme Court has given permission to government to reassess the AGR issues, AGR dues around 83,000 odd crore. So the deliberation has started, but it's moving gradually and slowly because government is taking all steps keeping a lot of things in mind at this point of time is what indication we are getting, because they are trying to sort of balance that we need to sort of sustain this company, but at the same time there has to be a clear sense that it shouldn't be disrupting the entire company valuation, and it shouldn't go against the market sensitivity, and that is the consideration is there before finalizing any sort of relief package.
Thanks so much for that, Shrimi. But Prashant, and there's no easy way of asking this question, because while there is an obvious answer on Vodafone Idea, would you suggest that once this relief package comes in the way it does, investors can start to look at it again from a fundamental angle?
I think already investors have started to see this as a fundamental angle, with a lot of hopes of governments doing something which will be only benefiting the Vodafone Idea in terms of survival. I think it will take its own time. I think, government have done a lot of mistakes historically, and they don't want to disturb the sector because there are only three players and we cannot do anything which may go wrong with the sector specific, because it's a very strategic sector for India as concerned. But I am very much positive and very optimistic. Yes, the downside is open. The risk reward ratio, where the risk is still more. I think again, 6-7 rupees can be a level where risky investors can see from the current level also. But again, considering the move, how government is going forward with respect to helping the Vodafone, with respect to giving some kind of relief, with respect to getting some kind of reduction in the interest, what they have charged down, I think for next 6 months to 12 months, there will be some kind of big movement in the stock as well as in the sector.
Got that view, Prashant. But, when you look at the other counter that's also in focus, which is Ola Electric, and the bad news just keeps following the company, because yet again, yesterday, founder Bhavesh Agarwal sold some stake in the company, almost 2.6 crore shares, and that's almost 0.6% of the total equity. Now, this comes at a very interesting time, because it's almost down 55% from the company's issue price and a discount to its IPO price as well. So, concerns were there of what was the reason for this sale. And the company had issued a clarification that they had sold the stake at 34.99 rupees per share, largely to pare down the pledge shares amount. So they have relieved the pledge now by paying off some debt that was at the promoter level of almost 260 odd crores. And that's the company's issued statement as well. But what's interesting is, while they have confirmed that this pledge of 3.93% stake has now been released, as per NSE data, there was roughly around 13 crore shares that was pledged at the end of last quarter. So while we await the number, it will be something that we continue to monitor as well as to what happens with the other 10 or 9 to 10% stake that the company has. Barring that, the founder, of course, still continues to hold 34% stake in the company. But when you also look at the other factors that have been dominating the news flow for Ola Electric, it has been what's happened in Q3 of FY26, which is the quarter that's ongoing as well. Apart from that, also is the factor that the company's market share has been continued to fall at this point of time. It just reported 8% market share in the November month of 2025. It's down from almost 30% that the company held in her whole of FY25. So that was a key concern. The other key factor is also the fact that for Ola Electric in Q3, which is October to year to date essentially, they've only sold about 27,000 odd units. So from October 1st to December 16th of this year, they've sold 27,000 scooters compared to almost 84,000 units that they sold in October to December of last year. So it's almost down 60% in terms of sales. And coming at a time where such a big discount is something that investors are looking at as well. They've also reduced their guidance amongst others. So Prashant, actually, let me come back to you on this one. Post Q2, we saw the company reduce their guidance from roughly about 3.2 lakh units to 2.2 lakh units. Revenue guidance was also cut by almost 1,000 crore rupees for FY26. Do you think that this correction warrants to look at the stock yet again, buying into it, or would you just avoid all the bad news?
I may not avoid this stock right now, but I think all the bad news are getting discounted in the price today. What happened yesterday, again, we all know promoters sold some stake to counter the pledge share, which would have made a lot of big noise if those pledge shares come into markets for open selling. So I think promoter has done the right step to control the price action in the market. But yes, the problem remains same with respect to the quality of the products. and the guidance which they have reduced. But I think the battery segment is doing something slowly, doing better than expected what market was assuming. So once the battery segment which gets into place for their own vehicles, I think that will solve a lot of problem. Even the profitability may increase going forward from the next financial year. For me, yes, there is some kind of downside from the current levels, but I think the way it has fallen down, there can be an opportunity to start accumulating the stock on every dip.
Got the view. But Gaurav, also on the charts, anything that you can suggest in the near term, because it did see a good up move today, and all of those gains are getting discounted, corrected into. What would you recommend?
See, it is actually underperforming. You've just stated the sales figures, and they are just diminishing. On a quarter-on-quarter basis, the quarterly numbers are declining from 1,200 plus crore of sales figures recorded in September 24 to 690 crores of sales recorded this time around. And so our profitability is also a concern here. I don't think a meaningful recovery would be coming in anytime soon. Therefore, at best, I'd prefer to avoid the stock.
Avoid is what Gaurav recommends. But another counter that was in focus was Vedanta. Now, yesterday we did see that key approval coming in for NCLT. And today, Kotak Security has upgraded the stock to a buy, and they've hiked the target price also to 650. They mentioned, amongst others, that the demerger approval will add to the strong commodity tailwinds for this counter, with all key commodities like silver, aluminum, as well as silver trending strong as well. But Prashant, let me come to you very quickly for a question on this, because there seem to be that a couple of key verticals like aluminum aren't yet in the price. Do you see further upside now that the approval has come in? Somewhere around 700, 800 levels that investors could watch out for Vedanta?
I think it looks very difficult for me for a more upside from the current levels. I think more than 600 can be a stock where it goes a very expensive if the demerger doesn't happen in next 3 to 6 months. So I think considering the demerger very soon in terms of cards, I think the recent rally from almost 430 to 570, 775, there has been already discounted in terms of all the positivity what is going to happen in the demerger. From current level, I think the upside is very limited to 600, 620 on the best case scenario. If investors want to buy, I think we have to wait and watch for a good level to add.
Also, Gaurav, very quickly on Vedanta, any view?
We are maintaining a positive stance for Vedanta. This also is the parent company for Hensing, which is flying high, and we maintain a bullish view on that stock as well. From a technical standpoint, I see the stock testing 600, 620 zones pretty quickly.
Gaurav as well as Prashant, thanks so much for joining in today, giving us your views across a whole bunch of stocks and spaces. We look forward to our next conversation. But viewers, let's slip into a very short break. On the other side, a very special conversation with the management of Science Semiconductors as well as Navitas, which is the new partnership that they've done with the company. Stay tuned to NDTV Profit.
Very warm welcome to Walk the Talk. I'm joined by one of the world's top foreign affairs gurus, Fareed Zakaria. Welcome.
It takes decades to build trust, and it takes moments to break trust.
The United States recently came out with a new security strategy doctrine.
In this moment of extraordinary power and dominance, Trump's vision of America in the world is to retreat, to shrink, to shed its influence, make America a regional power again. For 80 years it's been a global power. We want to be a regional power.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
he has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
What does Sufism mean to you?
Sufism is about love. Higher ideals are more fascinating than normal love song or anything. Talk about Khwaja Mere Khwaja, Kun Faya Kun. It's all about higher ideals. I'm bringing the same spirit to Delhi. So book your tickets from District app. See you Delhi.
...2025 has been a tremendous year for markets, money and milestones.
And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
They rule the world. 1 billion hearts. Now, meet the champions who made the nation proud. The Indian women's cricket team at the NDTV Indian of the Year.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
रहमान सोनू निगम के लिए जोरदार तालियां।
Welcome back to Profit Buzzers. Now, a key conversation that we are having with the management of Science Semiconductors now, and that's a 100% subsidiary of the IT company Cyient. It's on the back of the new partnership that they have stitched in with Navitas, and this is to accelerate, global GAN adoption amongst other key products. So, to talk more about this, let me welcome in Suman Narayanan. He's the Chief Executive Officer of Science Semiconductor. As well as Chris Alexander, who's also joining us. He's from the Navitas. He's the president and the CEO of Navitas. Gentlemen, thanks so much for joining in today. Suman, to start us off, could you talk us through what is this particular partnership all about, and what Science Semiconductors benefits from bringing this product to India?
Well, thank you, Puneet, for having us today. It's a pleasure to be here. At Science Semiconductors, our mission is really to build tomorrow's custom silicon together with a strong focus on power efficiency and real-world impact. Our partnership with Navitas is a strategic step towards building a complete end-to-end GAN ecosystem in India, where we combine Navitas's GAN technology with Science strength in ASICs, ASSPs, and power IC design. So the vision really is to, like I said, establish a self-sustaining GAN system. Through this partnership, Navitas and Science Semiconductors intend to co-develop GAN products, digital and mixed signal ICs, and GAN-based system modules designed and enabled in India, targeting the India market specifically. The partnership is also to make a robust supply chain and manufacturing ecosystem to support the Indian government's Make in India initiative.
Chris, let me also come to you very quickly. How do these GAN products actually help in India and the acceleration as well? What could be that benefit be for Navitas as well?
So Puneet, thanks as well on my side to having me here today with my partner Suman from Science. So as you might know, Navitas has been one of the pioneers in GAN business for the last 10 years, and we really kind of drove the acceleration of this technology to drive higher power efficiency. What we are doing here with Science is to simply accelerate the adoption in India. We believe India will be a very key market for the future in terms of how we drive more efficiency in high power market, and combining capabilities and doing this partnership with Science kind of benefit both of us. From our side, combining our GAN with the Science capability on analog mixed signal will allow us to provide full solution to the customers. And as we provide our GAN technology to Science, we'll be able to offer our customers a local solution and support, as Suman said, the Make in India initiative from the government. So we believe combining those two companies coming together will really accelerate the market in India, which is our goal.
Suman, what could be the go-to-market strategy and any timeline that you can provide us with?
The collaboration starts immediately through design and engineering engagement. If you looked at India-specific ICs and custom ASSPs, we're working through with Chris and the team on the customer development cycles. We expect early solutions, especially on the GAN modules, in 12 to 18 months timeframe, followed by probably a broader ecosystem maturity as well.
Suman, you're also targeting India's high voltage as well as the high power market segments that, as you mentioned, such as AI data centers, electric mobility. It is one of the key buzzwords that we are hearing right now. Any kind of insight that you can offer us how you're going to do that?
Yeah, I mean, if you look at where India is scaling on EVs, on renewable energy, industrial automation, and data centers, these are all very power intensive sectors, where efficiency, density, and reliability matter, right? GAN actually enables higher efficiency. It enables faster switching and smaller systems. It just makes it really ideal for India's growth phase. If you look at where we are with the power consumption in India, I think it's expected that over the next couple of years, it's going to consume, the data centers will consume like 75 terawatt hours per year. It's almost like 2 to 3% of the nation's electricity. So GAN adoption is super important for you to save power. And it's still early, in India, but India has a unique opportunity to leapfrog and lead this drive.
Chris, do you also want to add something on this of what that benefit could be?
Yeah, no, Puneet, is very simple. What we see as a GAN leader is the ability for silicon and traditional silicon to be able to provide higher level of density and efficiency as tapped out. Okay, and GAN becomes now mainstream and will be mainstream in all those power-hungry applications that Suman mentioned. Of course, data centers, as you said, is the buzzword, but if you look at electrical mobility, which is a very big market in India, will continue to grow, as well as any form of energy grid infrastructure and industrial will benefit from GAN. So really kind of, we believe with this effort, we'll be able to provide a lot more efficiency in the power system in India.
But Suman, in terms of, and let's put some numbers here, how big could this be in the overall scheme for Science Semiconductors in terms of revenue?
Yeah, I don't want to speculate, but GAN has a huge opportunity in India. I mean, I would significantly see double digits in GAN in the next couple of years in terms of both growth and in terms of revenue in millions of dollars. So I feel like with the Navitas GAN, we have a unique opportunity to capitalize on this market.
Chris, there's also this very interesting line that you mentioned in the press release that this will further accelerate the time to market for developers as well as for OEMs across the region. When you mention that, how could they benefit in these product applications?
Yeah, so this is a very good question, Puneet. Thank you. Actually, GAN is not easy to drive and it's not easy to implement. It's still early for power customers to understand how to use that new technology. So by working with Scient, what we provide is full solution. So this partnership will have multiple aspects. One is combining the analog mixed signal capability of Scient with our GAN technology, providing solution at the system level, which will help customers implement GAN, as well as providing a stronger local support. I mean, Scient has a pretty strong team in India. I think we'll be able to provide customers even more local support. So really kind of making it easy for the customers to use the technology and, as we said from the beginning, to accelerate it and accelerate this adoption.
Finally, Suman, what do you see as the current scenario in India for these products, and how does this particular gap get filled?
Yeah, I think if you look at what we are doing, right, we are acting as India's anchor. We're enabling access, doing the qualification, engineering collaboration, and the ecosystem collaboration, right? So over time, this also will start to support both the packaging and manufacturing pathways in India for Navitas. So we're investing today, working closely with Navitas on actually starting on the modules and kind of using the modules as a way to quickly start. As Chris mentioned, you have to start with something that's easy to design in, and people are still using GAN. They are getting used to using GAN. So local engineering support is going to be important. Modules are going to be important. And then making sure we provide the right support to the customers for the end application is going to be important to kind of start this launch.
Well, Suman as well as Chris, thanks so much for joining in, giving us that perspective on what it could mean for Scient Semiconductors, as well as in terms of revenue, what that shape could be for the company. But viewers, that's all the time we have on this edition of Profit Bazaar. Stay tuned to NDTV Profit.
What does, say, 11 years of Modi compare with in a global context?
He's going strong. Part of it is a weak opposition. Part of it is he's very disciplined. This is his life. It's why I've said that Modi is probably the most consequential prime minister since Nehru. And he's reshaped politics. He's reshaped the nature of the kind of master narrative of Indian history.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
What does Sufism mean to you?
Sufism is about love. Higher ideals are more fascinating than normal love song or anything. Talk about Khwaja Mere Khwaja, Kun Faya Kun. It's all about higher ideals. I'm bringing the same spirit to Delhi. So book your tickets from District app. See you, Delhi.
2025 has been a tremendous year for markets, money and milestones. And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get
Good afternoon. You're watching Small Cap Bazaars on NDTV Profit with me, Somit Sarkar, and my co-anchor Varsha. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade either on the back of price or volumes. So what's on the show today first? Firstly, we'll be speaking about Apex Frozen Food. The stock is up over 8%, in fact over 10% in trade. Volumes are nearly 2 times its 20-day average, and recently Incred had come out with this note where they had an ad rating with a target price of 520. Second up is the management of Synthesis Tech. The stock is down nearly 53% on a YTD basis, and recently the company has signed an MOU for enterprise geospatial and AI-based solution. So it will be important to know from the management what's the way forward for the company. When it comes to Delta Water, that stock is up 8% in trade. Volumes are up nearly 30 times its 20-day average. And Sunil Singhania, PMS Abacus, also owns a stake in this company. And lastly, we'll be talking about EPAC Durables. That stock is up for the 4th consecutive session in trade today, and it has gained over 25% in trade. In fact, close to around 28%. So what is the reason why the stock has been buzzing? We'll try to get some details on that front as well. But firstly, if you look at the benchmark, yet again a weakish trade. The benchmark, that is Nifty 50 index, is trading around the 25,800 level. The Nifty Bank is down around 150 points. However, the Nifty IT index, that continues to trade in green. But when it comes to small cap, Varsha, what's been buzzing there?
Yeah, let me start with Roto Pump. If you see, the stock is up. This is buzzing on the back of acquisition of shares by its promoter. So actually a very good thing whenever, your promoter buys his own stake in the company. That's a skin in the game, and that's the reason the stock is buzzing. There you go, the stock is up almost 11% in trade today. Then you have Walcher Nagar Industries also. Let's pull up that chart. Let's see what that stock is doing. That stock is up almost 7% in trade today. Now there are expectations that the atomic energy bill will be passed, but let's see what that comes out. And Walcher Nagar Industries will be one of the companies who will benefit from it. Apex Frozen and Delta Water are also some of the companies which are buzzing in trade today, as Somit mentioned. Let's talk about losers though. You have Exicom Tele, which is under pressure as of today. You have SEPC, which is down. This is after gaining after 2 trading sessions. This was on the back of order wins. Today the stock is down, is under pressure. You have Yasho Industries as well, which the stock is under pressure, though Yasho Industries is actually doing a lot of capex. We may see revenue coming out of capex maybe in the next 2 to 3 years. Then you have Wellspun Investment also, which is under pressure. I think this is the second or third day the stock is under pressure. So overall, Somit, lots of companies are actually in news today.
Well, let's start off with the first company that remains in focus today, and that is Synthesis Tech. Recently, the company has signed an MOU, but on a YTD basis, the share prices are down. So let's try and decode on what's the outlook and way forward for the company. And let's welcome in Abhay Kimatkar, the MD of CS Tech AI. So firstly, to start off with, when we last spoke, you did guide us that you are aiming for a double-digit growth and the outlook looks quite promising. Firstly, can you guide us how has your order book grown since then till now? Where does the order book stand at?
Yeah, thanks, Shomik. Thanks for the question. The order book looks pretty optimistic. In the second half, our focus is majorly on the strong order book which we have, and we are turning that into the revenue and cash for this complete H2. The company expects to keep growing at a healthy pace. mainly from water, infrastructure, city and administrative projects in India, and from technology, some of the work from overseas as well.
This is Varsha this side. Welcome to NDTV Profit. Sir, the last con call that I heard, you were expecting major order book or rather order in Q3 and Q4. Since that you've received only 4 crores of order, if I'm right. Just wanted to understand, are you still on track when it comes to expecting the major orders in Q3 and Q4?
Absolutely right, Varsha. We have a strong visibility. We have strong pipeline. We are primarily into the government space, so those order books are still in the offing. We will be receiving those orders in next quarter. It usually passes from one quarter to another. I mean, there is a process, but yes, we are very much in the offing, and we will be aiming to get those orders. We are pretty confident of closing what numbers we have anticipated.
Sir, if you could give us some idea for what is the total amount of order that you have placed bid for, and in past, what has been your success ratio?
So, Amik, that will be quite forward-looking because we do not do that. But yes, we are pretty optimistic what numbers we have speculated and what targets we have kept for internal assessment, and we have given to the boards. We will be fulfilling those. That's for sure.
Please, you could give us how much, what is the total amount of order inflow that you're expecting could happen overall in the second half?
What we have achieved till now, we would be almost keeping those. We may cross whatever we have achieved so far.
Sir, on that note, sir, you were expecting 600 to 700 crores of order in Q3 and Q4, if I'm not wrong?
Yeah, the numbers are correct. We are still in the fray, and we will be getting those orders.
And also, sir, we all know that there has been pressure when it comes to Jal Jeevan mission projects. Just wanted to know what is your exposure, and the 600 to 700 crores of order, does that include the JJM projects also?
Few of those, but we are not completely dependent on JJM. JJM is one of the component in our pipeline. We still have a robust pipeline apart from JJM. We are heavily relying on other projects which are almost on the verge of winning. We have bidded, and those projects we would be getting in due course of time.
So
please.
So when it comes to creditors, I believe it was around 100 odd crore in the second quarter. Has this number improved? Has your working capital cycle improved?
Yes, definitely. If you see last 3 years, we have improved upon the DSOs significantly. We have categorically planned our collections and even selected our customers accordingly. The customers who pays on time and as per the milestone and deliveries. So we are very much on the track what we have anticipated.
Right.
And
Sir,
cruising. Yeah.
Sir, I understand you have improved your working capital cycle in the last 3 years, but what I wanted to know is that your aim is to bring down your working capital cycle to 120 days. Are you anywhere near that target? What is your current working capital cycle?
Current DSOs are about 200 plus days, but yes, we would be definitely, because what I just said, that we have planned it, and accordingly whatever plan we have carried out last two quarters, we are very much in sync with what we have committed.
Understood. Also, sir, on the margin side, and let's talk about some financials. Your margins, if you see, year on year and quarter on quarter also has improved now because of the more higher margin projects that you're bidding. Just wanted to know, what should an investor expect when it comes to sustainable margin for FY26 and beyond?
So you can see the last few quarters we have improved upon the margins. Our EBITDA is increased compared, because we have completed the low yield or the low margin project. Last 2 years we've been really working upon getting a high value high margin project in GIS, engineering and technology space, and we have been able to win those projects where we have a good margin, and probably quarter-on-quarter execution has also improved upon. We'll be seeing good margins in future as well. We'll be continuing that growth, what EBITDA growth we are envisaging. We'll definitely be cruising on that.
Right. If you could give us a ballpark number, sir, or any range if you could give us when it comes to EBITDA margin.
See, we've been able to come to a 20% kind of margin, EBITDA margin, and we'll be improving upon those as well.
Internal target that you have set on, sir?
It's not a target, but yes, what we plan, we are there on that.
Right. And when it comes to the top line growth, the double-digit revenue growth target, that continues to remain intact?
Absolutely right. We will be there on the task. We have already created plan for the growth, revenue as well as the PAT margins. So both are in place.
Last time, sir, you also mentioned that the company is looking to do few acquisitions, 2 or 3, specifically in the UK and the US market. Anything, any developments on that front?
Yeah. We are evaluating a few companies. The process is on. That process takes its due course of time. The due diligence is happening. But yes, we are very much on that. We are expanding on those regions. We wanted to have good logos or good customers. So we are identifying people in geospatial and engineering space as well as the mobility. Where we can gain market space there. So the companies who has a good presence in those markets, we will be aiming to acquire this.
Right, sir. Thank you, sir. Thank you for joining us and giving us the way forward for Census Tech. Well, let's also welcome in our fundamental guest for the show today, Astha Jain, Senior Research Analyst with Hem Securities. Astha, you heard the management double-digit revenue growth target. Though the order win has been weak, the management is confident that they will be able to meet up the guidance that they had given earlier. What is your view? How confident are you that they will be able to achieve this guidance of 600-700 crore order win?
Good afternoon to everyone. See, talking about, first of all, their numbers were exceptionally well. If we talk about their rise in the top line or the net profit, because first half numbers were really good with a growth of around 143% they have shown in the net profit for the first half of the financial year 26. Talking about their order book, as of now, the order book stands somewhere around 1,092 crores. And what we believe that if management is pretty much optimistic of, increasing it from here, then definitely we should have that, faith and continue to hold this counter, because in fact, their financial performance was also very, very strong. Apart from the order book issue, if I look after their healthy, financial performance, along with the healthy demand which we are seeing from this kind of order book, and the customer confidence is still there. I believe that the most important part of this financial analysis is that in fact they have a cash surplus also. So in case if management is executing on the desired lines, then definitely it will be a good stock in the long term horizon. However, in the short term, still there are certain uncertainties regarding that. So I believe that in the short term, this counter can move more downside from here. So idea here is not to buy this counter just on the basis of strong financial numbers they have posted. Let's see how the order book turn out to be, and then make any call for buying. Right now, we believe that the stock can fall till the level of 800 to 780. So idea here is to just wait and watch rather than making any decision regarding the buying in this counter.
Thank you so much, Astha, for that view. But Astha, stay on with us, viewers. It's time for a short break. More on the other side. Stay tuned.
Very warm welcome to Walk the Talk. I'm joined by one of the world's top foreign affairs gurus, Fareed Zakaria. Welcome.
It takes decades to build trust, and it takes moments to break trust.
The United States recently came out with a new security strategy doctrine.
In this moment of extraordinary power and dominance, Trump's vision of America in the world is to retreat, to shrink, to shed its influence, make America a regional power again. For 80 years it's been a global power. We want to be a regional power.
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
What does Sufism mean to you?
Sufism is about love. Higher ideals are more fascinating than normal love song or anything. Talk about Khwaja Mere Khwaja, Kun Faya Kun. It's all about higher ideals. I'm bringing the same spirit to Delhi. So book your tickets from District app. See you Delhi.
...2025 has been a tremendous year for markets, money and milestones. And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
They rule the world. 1 billion hearts. Now, meet the champions who made the nation proud. The Indian women's cricket team at the NDTV Indian of the Year.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock.
Welcome back. You're watching Small Cap Buzzers, but before we go on to the small cap stocks, let's get in Sharad to understand what's been buzzing in the FNO side.
Well, there's nothing much buzzing in the FNO side, and the markets are entering something called as a fatigue zone. Even the VIX numbers, if I look at, there's nothing much there for the option players. Only if you're very disciplined and having a good asset allocation, maybe you'll have a chance. But largely it's even Stevens, SBI, Axis Bank, they are showing strength. Some IT names are also there. And on the selling side, we are seeing HDFC Bank, ICICI Bank, both of them actually dragging the BankX also. Trent down 1.5%. So concerns are definitely there in the markets, but it's a very short range if you look at it on the Sensex point of view. Contracts also, nothing much happening here. Either way, the options contracts are looking, be it the put side as the call side, and moving ahead in BankX also the story remains the same. But the constituents are heavy when it comes to ICICI Bank and HDFC Bank. That's the drag coming in, and the drag is actually going up. But the other side, SBI is trying to hold up the fort, and that's why we are seeing the divergence in the BankX. The story remains the same for the contracts here as well, and no major trade actually coming out in this option segment. Also, let's pull out the key long build-up. APL, Apollo and Hindustan Zinc make it to the list, but the strength is not that strong. A short covering also, the candidates include Canara Bank and Bank of India. PSU banking space has done well and it's holding up. Long unwinding shares, if you look at it, this includes Amber Enterprises and PI Industries. There was some sell calls also from our technical guest in yesterday's trading session. Today, we are seeing that move and short build-up happening in Max Healthcare and Polycab. That'll be pretty interesting to see these stocks. So stock-specific movements are happening largely, but options market remains in a very sleeping mode.
Thank you so much, Sharath, for all the details. Well, moving on, let's see what EPAC Durable is doing because shares have gained over 28% in the last 4 sessions. Today, if you see, the stock is up almost 4%. Now, the 28% gain over the last 4 sessions is after hitting a 52-week low post Q2 results. The rally comes despite management cutting FY26 guidance on weak RAC demand. But, let's go across to Puneet for more details. Puneet, over to you.
For that, it's definitely seen a very stellar move in the last 4 sessions, as you rightly said, 28%. Post quarter 2, the stock had actually corrected 24%. To 251 odd levels, and since then we are starting to see this move. What's also interesting is that the company actually post quarter 2 earnings cut its FY26 guidance for the room air conditioner space in terms of growth. So there the anticipation is almost 0 to 1% flat growth essentially for FY26. It's a commentary that's similar from someone like an Amber Enterprise, where they are expecting industry growth to be 0, but Amber will grow at 15. It won't be the case that way for EPAC Durable. For EPAC, what's also been the other case that there was a 35% reduction in the AC industry in quarter 2, and for EPAC that reflected in a 76% drop in revenues from the room air conditioner space. Inventory also continues to be quite elevated, so that will be the other thing that we'll continue to monitor in quarter 3. Management, while speaking to NDTV Profit on 10th of December, highlighted that it will be a year of flat growth, and the borrowings, which had increased to 740 crores odd in H1 of FY26, will start to see reduction once inventory normalizes. What I'll be watching out for, though, will be that brokerages like DAM Capital have actually cut EPS targets by 40% for FY26 and 27, and what happens in Q3 will be something to monitor. And the Hisense partnership is expected to come in that capacity of almost 1 million units by March of 2026. So these will be the 2 key aspects I'll continue to monitor post quarter 3, as well as the results when they start to come in.
Thank you so much, Puneet, for all the details. Well, Astha, a lot of concerns, at least in the short term, considering the inventory pressure and plus, management cutting its FY26 guidance as well. What should investors do now, because the stock has run up in the last 4 sessions? What would you advise to investors?
My advisors hold on this counter, although I still believe that there is a more upside potential left in the counter. The price target which we are giving to this counter is at around 355 to 365. Now, talking about their numbers were okay, because what we have seen that their room AC segment has seen a decline, and there were certain reasons behind it. But what is, a surprise, or what is a major positive from their commentary when they have given it during their announcement of the numbers, that they have added 4 new customers also. So I think that was a great, thing, that they are still adding good customer, and small domestic appliances segment is also recording a strong growth. So my idea here is that the problem is with the industry. This is not a problem, but we have seen that this is happening at the broader level, not at the company level. The issues are. So I think that stock may move further upside from here. And right now we are giving a whole recommendation with a price target of 355 to 365.
The next stock in focus is Apex Frozen Food. The stock is up more than 10% in trade, and this is after Incred came out with quite a bullish note, where they had an ad rating with a target price of 520 on the counter. They believe that the company's EU upside is quite visible, and though it will be delayed, but it won't be small for the company, and also believes that the balance sheet looks quite healthy at the current levels. Well, let's listen to what Nitin Awasthi of Incred had to say.
The data clearly states that we are still in a very positive zone. We're still very likely to end the calendar year with record numbers. And that is something which is very important. Over and above this is, of course, something important which has happened in the last 3 months is the EU-UK development. EU and UK, the whole market as such for Indian guys were very hard to get into. We barely had a presence there. It was very tough as a market to crack. Apart from just the trade barriers, the non-trade barriers were so high that almost all exporters had given up on that market. However, case in point being, in the last 3 months, you have over 100 plus factories which have got approved for EU and UK. This is something which was not happened for the last 8 years. And this market as such is going to add a substantial amount of increase to the overall pie of India.
Counter in focus is Denta Water. Now the stock is up 15%. Volumes are nearly 23 times its 30-day average. And this is after the company actually came out with a press release where they mentioned their growth plans, and they also mentioned that Abacus, which is managed by Sunil Singhania, owns a stake in the company. Later they retracted that statement. But despite this, the stock is gaining in trade. Let's get in Jasmeet.
Well, thank you for that. The stock has been buzzing in the trade on the back of the key event when the company mistakenly came out with a factually incorrect press release as of 16 December, which is yesterday. Well, what did the press release say was the press release contained details about the portfolio of an investor, which is Mr. Sunil Singhania. Well, they also released about their aspirational goal guidance going forward. While the Sunil Singhania currently owns 1.3% stake in the company as of March 2025, and his investments is roughly worth 12.2 odd crores. Now, in terms of the guidance, management guides a 300 crore top line by FY26 and by 500 to 525 odd crore top line by FY28. Well, this particular guideline does match with the management's Q2 con call details. So that's what creating the overall buzz in the stock. But on the other hand, well, the factual check guidance passes the test of what it actually management states. So on the back of the entire synopsis, we see the stock is buzzing in trade today.
Thank you for joining us. Thank you, Astha, for giving us the details of the stock that we discussed. Well, with that, it's a wrap on this edition of Small Cap Bazaars. Stay tuned and keep watching NDTV Profit.
What does say 11 years of Modi compare with in a global context?
He's going strong. Part of it is a weak opposition. Part of it is he's very disciplined. This is his life. It's why I've said that Modi is probably the most consequential prime minister since Nehru. And he's reshaped politics. He's reshaped the nature of the kind of master narrative of Indian history.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
What does Sufism mean to you?
Sufism is about love. Higher ideals are more fascinating than normal love song or anything. Talk about Khwaja Mere Khwaja, Kun Faya Kun. It's all about higher ideals. I'm bringing the same spirit to Delhi. So book your tickets from District app. See you Delhi.
'25 has been a tremendous year for markets, money and milestones.
And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
They rule the world. Won a billion hearts. Now, meet the champions who made the nation proud. The Indian women's cricket team at the NDTV Indian of the Year.
The markets move fast.
And so should your portfolio.
Hello and welcome to India Market Close. You are watching NDTV Profit. I am Sharad Dubey and with me is Soumit Sarkar. Looking at the markets today, we are seeing another range-bound move happening with a negative bias coming in. Nifty below the 25,800 mark and Nifty Bank also showing no major support as well. It looks like we are entering into a short, narrow range of the market, and also globally also it's looking like that, because next 48 hours a lot of macro announcements will be coming in. Let's look at the stocks where the action is coming in. Let's pull up the Nifty constituents and see where the overall movement is happening. Shriram Finance and SBI, these are the financial names. They are doing actually well in trade, up almost 1.5%. Certain consumption names also in the green and IT names as well. But a very narrow range coming in for other players as well. But the downtick coming especially in select consumption and life insurance names. SBI Life, HDFC Life, falling more than 1.5%. Apollo Hospital and Max Healthcare, that's a concern as well. We'll be looking at it, why there is a sudden fall in the medical related names as well. Let's pull up the sectoral indices where what the action is. Let's just get them in. Only the PSU banks and the metal space there are shining bright, but the rest everywhere else it's showing a downward tick, and the bigger gashes coming in especially for the realty, defense, consumer durables and media as well. Media, of course, last trading session was doing well, but then the reversals have started coming in. But everything is still on a major basis in a very small range. Let's just pull out the advanced decline ratio before we head to Soumit for the broader indices, and that number that was 3:1 in the closing session yesterday. Today also the number is somewhat same. That means small caps and mid caps are still bleeding and the divergence is pretty high. Soumit, let's get in the broader indices, how they are performing, and I think it's a stock specific market today.
It's a stock specific market despite the fact that the broader indices are down. Few stocks are still gaining in trade. IGL for that matter, that is up 5%, and we'll talk more about that later on the show. Then there is Aditya Birla Fashion, that's up around 3.5%. Aditya Birla Real Estate, after the approval that has come in from CCI for acquisition of the paper business of ITC, that stock is gaining 3% in trade, followed by stocks like India Cement, Kirloskar Oil, M&M Finance up anywhere between 2.5% to 3% in trade. On the flip side, if you look at, there are stocks like AkzoNobel down 13%, and this is largely because of the big block deal that had come in from the promoter's side, and this block deal happened at a steep discount of 10%. Saregama, after they announced a big acquisition, Indian Overseas Bank, given the fact that there is an OFS going on from the promoters, from the government's side, Praj Industries, HBL Engine, GMDC and SCI down anywhere between close to around 4% in trade. And if you look at much broader indices, then there is Aquas Limited, Misho. These two counters, in fact, both were recently listed. Misho is up 20% after UBS initiated coverage on the stock. Aquas Limited up around 12% in trade. Thangamile Jewel, Avanti Feeds, in fact, it's not only Avanti Feeds but also Apex Frozen Food that has been gaining in trade. Apex Frozen Food is up more than 10%, while Avanti Feeds is close to up around 3% in trade. And apart from that, if you look at stocks like APL Apollo, Bank of Baroda, they're also gaining close around 2 to 3% in trade. But Sharad, how's the market setup looking like?
Well, Soumit, the market setup is showing signs of fatigue, at least for the next two trading session. It definitely looks like that. You check the options data, also nothing much happening. The India VIX, that has come down below the 10 mark. Now what happens is, in case some major event happens, then we might see a major spike. 50-day EMA has actually come in the key levels because certain 20-day EMA levels have been broken. Rupee remains volatile even if RBI interventions come in. Still that record low levels, 90-91, looking at this segment. But certain segments, there is some bearish sentiment definitely developing as most of the indices are near the day's low. US macro data announcements will be coming this week. That will also determine the Fed's rate hike trajectory. And also the threat of unwinding of yen carry trade. Bank of Japan comes up with their overall results and the bank hike expected to come in this Friday. And European markets, they are opening with a negative bias. DAX is definitely on the positive, but net it is still a very small narrow range and can go either way for the next 48 hours as the global sentiments come in. But stock specific news flow is also very much important. So Amit, what you are gathering there?
Well, let's also welcome in our technical and the fundamental guest on the show today, Kush Bora from kushbora.com and Sudeep Bandopadhyay from IndiTrade Capital. Kush, coming to you firstly, we started off on a positive note, but then we not only failed to hold on to 25,900, but now we are also below the 25,800 levels. What is the strategy that you are recommending?
Hey, hi Samit. Hi Sudeep. First, a very good afternoon to you and to all the viewers. The best strategy is no strategy right now. In the sense, it's a good idea to just wait and watch. Let me give out a couple of data points for that. First, as I said, this is a no trade zone for Nifty. The reason being that there is support at the 25,700 mark, which was the recent swing low. Also, the PCI is at 0.73, suggesting that an immediate support could come in. So, of course, so close to support levels, you can't go short. Now, if you see the last three trading sessions, the formation on the Nifty has been lower high, lower low formation, very clearly suggesting that there is resistance on the upside. Markets to make an attempt to move higher, but find supply pressure at higher levels. So not a market that you could go long either, right? Plus, there is an event, like Sharad mentioned, on Friday, you've got the BOJ interest rate cut decision, which is very critical. Markets perhaps preempting some of that and positioning themselves for that. So ahead of an event in a tight zone where markets aren't really going anywhere, I think it's a good idea to stay put, wait and watch, and let the event pass, and then perhaps take a decision. So on the Nifty and similarly on the Bank Nifty right now, I would suggest a no trade for the next couple of days at least.
And any stock specs?
Of course, stock specific action are plenty. So you have to consider that. Going with a mix of a long and a short, like I have been doing for the last 3 days. And incidentally, as you would guess, the short calls have been working a lot better. On the long side, though, I have Jamna Auto. We had discussed this stock about 2 sessions ago for a target of 130 and 133. The 130 target has been nearly hit, as in the high for the stock has been at 128.99 yesterday. So very close to that. Positive movements on this one when the market is correcting. So relative strength are plenty. You could continue holding on to this or create a fresh position for targets of 133 and 136 and a stop loss at the 125 mark. So Jamna Auto is a long call. Now on the short side, I've got REC. Yes, the stock's been beaten down, but if you see the last few days price and volume action, despite the kind of beating that the stock has taken in this calendar year, it just continues to slide lower, key support levels being taken out. So on the downside, 332, 328 are your targets. 338 is where you keep that stop loss. So REC is a short sell call.
All right. Sudeep, good afternoon. Sharad here. So largely the markets, it seems like they're in a fatigue mode. But if you have to pick any domestic facing company, which is having a lesser exposure globally, and irrespective of what happens to India-US trade deal, if you had to pick something as a defensive, what would it be? Would it be something in the FMCG pack, or you look something, say like an L&T or something in capital goods segment?
Well, since you mentioned the name L&T, it has been my favorite for a very long time, and L&T continues to remain my favorite. They have international exposure, but that international exposure is in West Asia. The order book is now roughly around 50% from global markets and 50% domestic. International order book is with the incremental margin. So the overall margin profile is improving. The fantastic opportunity for the company, and they are seizing that opportunity. They have a defense business within as well, which is, of course, the potential is significant. or construction, infrastructure is booming, and L&T is taking the advantage of that. Cap goods also is getting a boost, and again, L&T is the forefront there. So, prices have moved up a bit, but still, I think it's still reasonably priced if you are looking from a long-term perspective. If I have to look at the other segments, other sectors, I think consumer durable is one which is going to benefit in a big way and is benefiting. Both GST rationalization as well as income tax relief given to common man does help consumer durable. With the onset of festive season and the consumer durable buying season, I think they should start doing well. One company particularly stands out, which I've been pointing out to investors, is Eureka Foods. Post the change in management, I think things have become much better there. They are in segments where the demand is humongous and continuously growing. They are clearly leaders, whether it's water purifiers, room fresheners, or vacuum cleaners. They are clear leaders, and the opportunity in all these segments for growth is infinite. So I think even valuation-wise, it does look interesting. So I think both these companies, Larsen & Toubro in the large cap segment and Eureka Foods in other side, can be looked at from an investor's point of view for a slightly long-term view.
Right, moving on to our next segment, that is stock of the day. And today we are putting spotlight on IGL. That stock is up nearly 5.4% on an intraday basis, and this is the biggest move that we have seen for this counter since October 7, 2025. So there are 4 reasons why the stock is gaining in trade today. Firstly, is the Nomura upgrade. The second reason is the falling gas prices in the Asian market. Analysts continue to remain bullish other than Nomura as well. And valuations are cheap after the recent correction that we have seen. Firstly, let's speak on the Nomura upgrade. Now, they have upgraded the rating to buy from neutral and have also hiked the target price to 230 from 215. Now, they are saying that the margins of the company will see support from lower taxes and lower transmission tariffs. Apart from that, the DTC transition, that is the bus transition in the Delhi market, is nearing an end, and this will aid the volume growth for the company going forward. They are expecting the demand trend could recover as this transition is coming to an end. And lastly, as per the brokerage, the risk reward is quite favorable after the recent correction that we have seen of 15% in the share prices of IGL. Now, the second reason why the stock is gaining in trade is the fall in gas prices. Now, if you look at the Asia spot gas prices, they have come down to $9.4 per MMBTU, which is the lowest prices that we have seen since March 2024. And this lower gas prices will lead to lower gas cost and boost the unit margins for the company. Now, if you look at the analyst view for all the other the consensus analyst view, 66% of the analysts that are tracking this counter have a buy rating on the stock. And if you look at the consensus target price, it stands at close to 229 rupees, which suggests an upside, a potential upside for the next 12 months of 19%, even after this 5% move that we have seen in trade today. And lastly, if you look at the valuations for IGL, the 12-month forward valuation stands at 14 times, while the 5-year average is 17 times. So the valuations are also on the cheaper side. So that's the reason why the stock has been buzzing in trade, and that's the reason why the stock is our stock of the day today. Sudeep, coming to you on IGL, valuations continue to remain cheap, and even the prospects are looking to be much better after the recent corrections that we have seen. How are you reading into this counter?
Well, I have been liking it for some time because of the valuation logic. There has been a lot of volatility in this particular sector. There has been a lot of regulatory, I would say, changes as well. And that kind of rattled the investors to an extent. And they had been, trying to exit the counter. But at this stage, I think it does look interesting. Valuation also is reasonable, I would say. And from a long-term perspective, it does look good. One has to remember that you have to be prepared for certain amount of volatility based on a lot of happenings and announcements which keep coming on a regular basis. But if you are in for long-term, I think it's a good price to get it.
All right, that's a good price to enter IGL current levels also. But let's get in Sammaan Capital also. The stock is in the day's low as well. Reports are suggesting that the next hearing of Sammaan Capital case will be in January as well. And see, the stock is at the day's low. It's almost 2.5% down. Kush, I just wanted to check a fast technical check on this stock. The stock is volatile and it's waiting an important event in a week or so. at least in the month of January. Any kind of technical opportunities are coming in this counter, or you will stay away from it?
So, broadly, I like the counter, and we've discussed this multiple times in the past, and it's had a stupendous run. Now it's seeing sharp runs of profit booking. It's in the bear clutch, and also, like you said, there's this hangover of the news that will continue to cap the upsides. So I would suggest a wait and watch approach on this one. If you have a position, yes, you could continue holding on to this one with a trailing stop loss at the 200-day moving average of 135. But if you don't, I wouldn't suggest buying right now. Because as I said, you do get selling pressure on the upside, and once the news is, or rather, once the matter is settled, perhaps you'll get a fresh lease of life, and then you can consider. So for now, existing positions can be held. New positions, wait and watch.
Existing positions, please hold it. New positions, wait and watch. Sudeep, what would be your views for Sammaan Capital? There is, of course, an overhang still. It remains. And Supreme Court has asked CBI to take these documents related to the case on the ED and SEBI as well. That means there will be some overhang in the stock. But are you tracking this? And yes, what would be the view for that?
Well, I completely agree with what Kush was mentioning from a technical point of view, on fundamental basis as well. I think it's better to wait and watch. There was a lot of excitement in the counter. The huge amount of FDI, which has been agreed, I think was a very interesting thing for the company to happen, and it would have been great for the growth. Unfortunately, the Supreme Court instruction came for re-examining a lot of old issues. That did create some confusion, though it doesn't affect the investment directly, but obviously there is an overhang in the counter, and it is better to wait and watch and let things settle down before venturing into taking fresh position here.
Right. Moving on to commodities, from equities to commodities, which have been powering through 2025 with a massive bull run. Gold, silver, aluminium and copper all have outperformed the Nifty by a big margin. In fact, if you look at crude, that has been the only laggard here. Let's understand why. Shreyansi is joining us with all those details.
Well, absolutely, Somit, and just like you rightly pointed out, you're looking at a bull run when it comes to the year 2025. Let's also quickly take a look at what's happened here, because metals have in fact outshined the Nifty, and we'll be taking a look at the gains as well coming in for some of these metals. But you do have gold, aluminium, as well as copper largely notching those gains coming in, other than silver, of course. Let's quickly take a look at the moves coming in as far as some of these commodities are concerned. So you do have Nifty at 9%, 62% uptick coming in on a year-to-date basis for gold and silver. In fact, it's been 121%. So that's stellar run that you've seen for silver prices as well. But let's also quickly take a look at some of the crude as well as base metals as well, because you do have crude 23% downtick, and bottom of the barrel is something that we've just about scraped, is something that we're seeing this week as well. But on a year-to-date basis, 23% and 13% for aluminium as well as copper at that 32% as well. So those are some of the gains that you're seeing coming in, which largely outshines 9% gains coming in for the Nifty, barring crude of course. But you do have that record run, best year since 1979 when it comes to gold as well as silver. So third consecutive year of gains coming in for gold, and for silver is the second consecutive year of gains as well. So that's something that you're seeing in terms of the record run that we've seen for both of these metals. Let's also be talking to you about the ETF story as well when it comes to some of these, because you do have global gold prices that continue to underperform largely versus your domestic ETF prices, and global silver largely in line with those ETF returns that you have coming in as well. But let's also be talking to you about the triggers, because when you take a look at gold, you've seen that robust ETF inflow trigger coming in for gold prices. Other than that, a bunch of other triggers. So de-dollarization is something that you're looking at, and robust industrial demand has also helped silver as well. So that's something that we should be looking at. Quickly taking a look at some of the other triggers for silver as well. Now, this is a metal that you're seeing EV demand and solar boom in, and that in fact is something where you do have the silver lining coming in the form of tariffs, because it's also been added to the critical list of minerals by the US Geological Department, and that's also something that has been a very important trigger coming in for silver prices as well. Quickly taking a look at some of the other commodities as well in terms of some of the returns there. So you do have aluminium that in fact makes it to that list. So there's an uptick of about 13% coming in for aluminium, like I talked about, where you do have supply disruptions, and that in fact couples with increasing automotive demand, and that's something that you see reflected in that price with that 13% uptick there. For aluminium, let's also be taking a look at copper as well as crude. So uptick of about 32% when it comes to copper, because you do have supply disruptions, and you've seen a year of supply disruptions through and through for copper. Demand tailwind is also something that you're seeing coming in. From data centers, you do have demand and electrification as well. So that's copper for you, 32%. Lastly, let's also quickly take a look at crude as well, because a downtick of about 23% is something that you're seeing coming in for crude prices. China's industrial slowdown is something that we've seen slowing down. And you do have that global demand impact sort of being penciled in when it comes to crude. Higher global interest rates is also something that you're looking at when it comes to crude as well. And let's also talk to you a little bit about the road from here on, because we've covered the prices by and large, but silver is heavily overbought. The monthly RSI or relative strength index is at 87. So yes, there's a little less room to grow, but brokerages still remain quite bullish when it comes to silver. Gold as well, though, it's overbought, and that's something that you're looking at, but brokerages by and large remain a little bit neutral when it comes to this one. Aluminum and copper is where we see a little bit of strong momentum that might just continue. Lastly, there's crude, where there's limited room for a downside, but you've seen some surprises come in on the downside front when it comes to crude. So what I want to wrap up with is that the center of gravity seems to be shifting when it comes to crude to sub $60 a barrel levels. So that's something that you're seeing coming in for all of the commodities, but it's been a year of a bull run for sure.
Right, Sudeep, any equity play coming out of this commodity rally that we have seen specifically when it comes to metal?
Well, I've been positive on Vedanta for last 1 year, and I continue to maintain my view. I think if you want to have exposure in metals, and I think you should buy Vedanta. But number one, aluminium. Our view is that for the next couple of years, aluminium prices are going to remain firm globally, and that will definitely help Vedanta in a big way. We all know what's happening with silver. And, the only company producing silver in India, which is listed, is Hindustan Zinc, which is a subsidiary of Vedanta. Performance has been fabulous, and it's going to provide incremental returns going forward. On top of all this, I think there is a value unlocking happening when the demerger finally gets through. So Vedanta is one metal company we should not miss out, even at current levels.
Kush, I have a query, especially Ola Electric. Just the stock is in the day's low. It's down 3.5%. Initially, it wasn't down that much, but there's a news. Last trading session, we saw the promoter selling stake as well, and company came out with their commentary. But the stock is cracking. Will this be any kind of a bottom fishing or a, value hunting in this space, or will you see this stock cracking more? And if yes, what's the stop loss?
Sure, there are a couple of stocks that I generally don't, give a positive view on, and certainly you'll never find that on our advisory. Some of them being Idea, Z Entertainment, SpiceJet, etc. I think very soon I might just add Ola Electric also to that list. You did have a glimmer of hope, about a month or two ago, but that's been heavily sold into stock at all-time lows on the back of heavy volumes. I think you should just perhaps avoid the stock entirely if you don't have it already. And if you do, it's a good idea to exit at the current levels rather than wait for another 10-20% kind of a drop and then exit.
Right. Okay. Another counter that I wanted to discuss is on MCX. Now, we are seeing kind of strong volumes coming in because of the higher prices. In fact, dealers are indicating that revenue exchange could be nearly revenue transaction income could be nearly 40% higher on a sequential basis. Sudeep, any view on this counter MCX?
Amongst the exchanges, we have been liking MCX for quite some time, and we believe that that view continues to remain there. Look, a couple of things are happening. Valuation-wise, MCX is relatively better when you compare with the multiples at which BSE is quoting. On the other hand, the commodity traction globally is definitely adding wins to MCX. The third part is introduction of newer option contracts will give further income opportunity to MCX. So all these things augur well for MCX. So, every opportunity buying MCX is a good idea.
Another stock that remains in focus is Misho. Now that stock has doubled in the last 6 trading sessions compared to its IPO price. In fact, today after the UBS note, the stock has hit an upper circuit of 20%. Let's get in Jasmeet first to understand what exactly is UBS saying in this report.
Well, thank you for that, Sumit. Now, before we get into the details of what the brokerage note says, let's quickly understand the stock performance. While the stock listed at a 45% premium at 161 odd rupees, and since the last 5 and 6 trading sessions, the stock is up almost double the issue price of 111 rupees. Now, in the last 5 trading sessions, the stock has gained almost 35%, and the stock did see a strong interaction and traction for the IPO from the institutional side as well. If you look at the overall revenue compounded growth of last 3 years, it stands at 18%, and the company has been cash flow positive over last 2 years, though the company is still making losses at the net level. Now, in terms of the UBS note, what they see is they initiate coverage on this particular stock with a target price of rupees 220. Now, they make a note stating that from the villages to rural areas, the overall online shopping trend in India is growing, where they also see a growth trend line going forward up until FY30. In terms of the growth, they see substantial growth runway for the company going forward as well. Now, the visible pathway for profit and cash generation both remains intact for the company, while lastly the contribution of margin and EBITDA stays strong, reaching at roughly 6.8% and 3.2% by FY30 of this brokerage note. Post the brokerage note, the stock has been buzzing and has hit the upper circuit and up almost 20% in the trade today.
Thank you very much, Jasmeet, for that. Sumit, this becomes a 6 din mein paisa double story.
Less than a kiss day.
Exactly. So this is a good move, and we call it the Amazon of India. That's what the street is talking about. Sudeep, I want to get your views also on this. Amazon of India, Meesho, the business model seems a bit different, cash flow generating as well, asset light. What's your view on it initially? There was a strong IPO pop also, but now I think there's sustained buying happening institutional level.
Well, it's getting into a little scary zone, honestly. I did like Meesho. I do like the company. I do like their focus on free cash flow, which the management has been repeatedly talking about. They're still not on a PAT, PBT level. They still haven't reached positive state, but their focus on free cash flow is definitely commendable. And I think the model is robust. There is scope for expansion, which is excellent. But I think the valuation has moved up too much in too short a period of time. I don't think I will recommend a buy at this level. It's better to stay away from the counter, and if somebody is holding, it's probably worth looking at booking profit now. There will be better opportunities coming later to buy the stock again. 1 month lock-in period will get over, and there will be some selling, obviously. So I will give it a pause at this stage. Good company, no problems, but not at this valuation.
Kush, I know that definitely you cannot give a technical view when it comes to Meesho because there's not much of a trading history. But have you looked into the delivery volume number or the shares that have been traded? Is it that there is very less freely available shares? That is one of the reasons why the stock might have hit an upper circuit?
Sumit, before that, I think 6 दिन में पैसा डबल बोल के आप बहुत सारों की डूबती नाव को ना उम्मीद दे रहे हो. Of course, that's on a lighter note. No, but yes, the stock has seen a stupendous run. The volumes actually on the days when the stock is higher have been significantly higher compared to the days when the stock has gone sideways. And again, there haven't been too many of those anyway. So, like you rightly said, very limited data to give any kind of view on. But the volume action for the last couple of days has been healthy. If Sudeep says not a good idea to buy now, then certainly not a good idea to buy now.
All right. Thanks a lot, Sudeep, for that view as well on Meesho. But as we slip into a very quick break, let's listen into Sridhar Sivaram. He's the investment director at Enam Holdings on the earnings story, where he says growth has been missing for 6 straight quarters, but he believes that the tide is turning it. Listen in.
One of the biggest determinant for the markets to perform is earnings growth. And we've been missing that for 6 quarters now. Hopefully, the next 6 quarters will be far better than the previous 6 quarters. So that's how I would put it.
But it looks like that?
Yeah, to us it looks that FY27 we should get about 15 to 18% earnings growth. So if that plays out, keep in mind that we also have a low base. So that is a reasonable number to expect.
very warm welcome to Walk the Talk. I'm joined by one of the world's top foreign affairs gurus, Fareed Zakaria. Welcome.
It takes decades to build trust and it takes moments to break trust.
The United States recently came out with a new security strategy doctrine.
In this moment of extraordinary power and dominance, Trump's vision of America in the world is to retreat, to shrink, to shed its influence, make America a regional power again. For 80 years it's been a global power. We want to be a regional power.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
What does Sufism mean to you?
Sufism is about love. Higher ideals are more fascinating than normal love song or anything. Talk about Khwaja Mere Khwaja, Kun Faya Kun. It's all about higher ideals. I'm bringing the same spirit to Delhi. So book your tickets from District app. See you Delhi.
'25 has been a tremendous year for markets, money and milestones. And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
They rule the world. 1 billion hearts. Now, meet the champions who made the nation proud. The Indian women's cricket team at the NDTV Indian of the Year.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need straight from the experts. Welcome back. You're watching India Market Close, and it's an interesting day of trade. You can call it that because of all of the action once again in the rupee. Isn't that the case? If yesterday you had 91 and the big screaming headlines, oh, rupee at all-time low, then the Reserve Bank of India comes in and moves things quite dramatically. Let's take a look at where the markets are at the last 1 hour of trade, right? You have cuts of about 0.25% for the Nifty 50 and more or less trading at the low point of the day, having broken below that 25,800 25,700 mark, and once again you will look towards that 25,700 mark for a little bit of support heading into the end of the year. Look at the broader markets as well and see what the mid-cap index and the small-cap index are doing at this point. Down about 0.6%, again at the low point of the day for the mid-cap index, and about 0.7% for the small-cap index, as of which I would hazard a guess to say that the advanced decline ratio will likely be at the widest point of the day in favor of the declines. Let's pull that up as well, and that indeed is the case. A few packs are actually doing reasonably well and bucking the trend, and one of them is the PSU banking pack. So let's ask Mr. Chokkalingam what he thinks about that. He's joining us on this last leg of the program. Mr. Chokkalingam, thanks so much for taking the time, of course, with economics research. What do you think about the PSU banking pack? And there are quite a few names that come back into focus now, and a few instances of the government selling stake as well. IOB in focus on account of that, isn't it? What would you prefer, though, in this space?
Certainly, I would prefer Bank of Maharashtra because it is trading at around 1.4, 1.5 times price to book value. I looked at IOB, it trades at close to 2 times price to adjusted book value. But then IOB also looks a phenomenal stock for long term because it also got a very high exposure to low cost deposits. Net NPA is among the least, and fabulous credit growth. Year on year, credit growth of IOB is 21%, which is really amazing as compared to industry growth of 11%. But valuation is slightly stretched. But otherwise, for long-term investor, IOB. But for short to medium to long-term investors, Bank of Maharashtra would be my top pick. And on the entire PSU banks, I am very optimistic because the low-cost deposits are very high. Net NPAs general have come down a lot. But of course, there will be NIM pressure because of the continuous rate cut by RBI. So there will be once again some pressure on the NIM, net interest margin, in December quarter as well. So beyond that, opportunity looks great for PSU banks.
On to our next segment, that is Profit Intelligence. Today we have tried to map the movement of Indian currency and the sectoral indices that are there in India. Firstly, if you look at the Indian currency, that has depreciated by nearly 6.3% this year. Now, in the last 15 years, more than 5% depreciation is something that we have just seen 5 times. Which are those years? Firstly, it's 2011 when the rupee had depreciated by nearly 18.7%, followed by 2013 where we saw a depreciation of 12.4%, in 2018 close to 9.2%, in 2022 11.3%, and in 2025 so far close to around 6.3%. And how have the sectoral indices moved around this period? That's what we have tried to do here. And firstly, if you look at the major index, that is FMCG, that has been a clear gainer. Every year when rupee has depreciated, Nifty FMCG has managed to report gains on those years. Average gains have been close to 13%, and the Nifty Real Estate Index on the flip side has been the major loser in all those years. Average losses of close to 32%. Now, unlike the market belief that IT sector stands to benefit because of rupee depreciation, at least the share price move does not show that, because Nifty IT has managed to gain only in 2 out of the 4 instances where we have seen that rupee has appreciated by more than 5%. And the Nifty Bank and Auto has also reported gains for only 2 out of the 4 instances. And when it comes to the Nifty Metal and Nifty Pharma Index, they have gained only 1 out of the last 4 years when rupee has depreciated by more than 5%. But that's what has happened so far in this year. What has been the follow-through impact for the rupee? Now, whenever we have seen a depreciation of more than 5% for a rupee in a calendar year, the next 3 months or the first 3 months of the next calendar year, there rupee has managed to report some appreciation always. Now in 2012, because in 2011 we had seen a biggest depreciation, for the first 3 months of 2012, rupee has appreciated by 4%. In the first 3 months of 2014, rupee appreciated by 3%. In 2019, first 3 months, rupee appreciated by 0.9%. And in 2023, also we saw an appreciation of around 0.7%. So given the trend that we are seeing in 2025, for the first 3 months of 2026, there could be some reversal in the rupee movement. And how have the sectors moved in the first 3 months of the next or the following calendar year? FMCG, again, a clear winner. 5.5% is the average gains. Every year it has managed to gain. IT, 3 out of the 4 years it has managed to gain with an average gains of 3%. Bank, 12% average gains, 3 out of 4 times. Real estate, 10% average gains. Now do remember that real estate has been the major loser. So for the following 3 months, it has reported gains of around 10%, and 3 out of the 4 instances, it has reported a gain. Apart from that, it's Nifty Pharma, which has also seen gains in 3 out of the 4 instances with average gains of 3%, while Nifty Auto and Nifty Metal have managed to gain only 2 out of the 4 years, and the average gains have been anywhere between 1 to 5 odd percent.
Very interesting data points, Sumit, that you pulled up, and I wonder if you can also have a look at what the monetary policy was during that time frame, and whether you can also think about whether we were in a low interest rate environment and whether that flowed through, happened for the real estate sector in the months that followed, because often all of this is tied. But Mr. Chokalingam, the question to you is that there are very clear beneficiaries, and of course this could be one measure where the RBI is not as aggressive as it has been in the past, even though it did intervene today. It's allowing the rupee to reach a certain level because it's benefiting exporters at a time when the external sector is uncertain. But what would you pick as the key beneficiary of this, and something that does not do too well? Something like an aviation company, for example, would not do well with the rupee depreciating sharply, right?
Yeah, very interesting question. There are 3 aspects to it. On RBI, I think it's a smart strategy not to intervene aggressively now, because last 5 years, whatever interventions the central bank had, it's not playing out fruitfully, because 5 years the rupee has cumulatively fallen by approximately 20% against dollar. So it is better not to become too aggressive till US deal is signed, so that we conserve whatever profit RBI already made in the currency transaction intact. Now coming to rupee depreciation, interestingly, I am a student of economics, keenly watching, studying economics. Very interesting development across the world. In contrast to economic theory, the depreciation of currency is not helping exporters in a significant manner. Last 5 years, rupee is down 20%, but if you look at all 3 to 4 large IT companies, their operating margins are down 200 to 400 BPS. So that's a very strong evidence. And secondly, even at the macro level, in the last 10, 20 years, the rupee has depreciated, but our exports are not growing in a big way. And that is the case all over the world. Still, I would suggest IT stocks. It may not help IT companies to increase the profitability, but at least they would become a defensive in the light of depreciating rupee. It may not give you positive benefit, at least negative benefit will not be there. And psychologically also, people are very comfortable in this sector, which is earning thousands of crores of dollars in rupee terms. And now third, coming to aviation sector, definitely it's an impact, but the investor has to see on a balance, what is the net impact compared to rupee depreciation, what's happening to the oil prices. Now from the peak, the oil price in a 1 year time frame is down 27% crude oil price. And whereas rupee, as your colleague also pointed out, roughly about 6.5% down. So therefore, fortunately, aviation sector has a biggest advantage of oil price falling much more than the rupee depreciation. So they would be the net gainer of this changing environment.
Yes, so aviation and your IT segment, that's something you should be watching out for. But just let's pull up the shrimp stocks. They have been doing really well in the day's trade. Let's get in Coastal Corp, Avanti Feeds, and even Apex Frozen Foods. All of them stocks are doing really well in this kind of market, and sectorally we are seeing a strong up move coming in. Apex Frozen is up almost 70%. But these stocks are in focus after the European Union and the UK deal, which will be positive for the sector. Nitin Avasthi, the analyst of InCred Capital, answers the question. Listen in.
The data clearly states that we are still in a very positive zone. We're still very likely to end the calendar year with record numbers. And that is something which is very important. Over and above this is, of course, something important which has happened in the last 3 months is the EU-UK development. EU and UK, the whole market as such for Indian guys were very hard to get into. We barely had a presence there. It was very tough as a market to crack. Apart from just the trade barriers, the non-trade barriers were so high that almost all exporters had given up on that market. However, case in point being, in the last 3 months, you have over 100 plus factories which have got approved for EU and UK. This is something which was not happened for the last 8 years. And this market as such is going to add a substantial amount of increase to the overall pie of India.
Very interesting header was there. It was called Jhinga Lala. The interesting pun was there, and interesting the prawn is called Jhinga as well. But Kush, I know that whether you don't like or not the prawns, but the stock specific, if you look at it, Avanti Feeds is there, and even Apex Frozen Foods is there. Generally, these are low volume cash counters, but over here, anything else is there? Like a significant up move can come in from here, or generally the good news flow comes and then profit booking comes in these counters. What will your advice be?
Yeah, so Sharad, that's not something that will be on my plate. I'm a pure vegetarian, but I do enjoy a good word play. I really need to know who came up with that. It was just magnificent, the Jhinga Lala. No, I like Avanti Feeds in particular. It is on the verge of a cup and handle formation breakout technically. The breakout level comes in about 865, slightly higher. But in a market like this, if it does move higher and gives you that breakout, I think significantly higher levels of about 930 and even 975 are on the cards. This is a very healthy move backed by good volumes and, as you pointed out, backed by good news flow as well. So 865 is the mark. If you have a position, should continue to hold. If not, just wait up a little bit. Once you get a closing above this level, you can play for higher targets, on Avanti Feeds and keep your stop losses at the 820 level.
All right, Sharad and Kush might be saying Jhinga Lala, but are the traders doing the same, or are the dealing rooms saying the same? That's the question that I will ask Samit. That is not the case, is it?
Well, yes, not the case, given the fact that we have again seen a sharp correction coming in from the day's highest point. Few stocks that dealers have highlighted in trade today. Firstly, it's Polycab. A big block deal took place in the opening hour of trade, and dealers are indicating that a prominent mutual fund, in fact, what they are saying is that Motilal Oswal was the mutual fund which could have been a seller in trade when it comes to Polycab. The second stock on the list is Restaurant Brands Asia. There are buy flows on the lower levels on the large HNI desk. Dealers are indicating that the Everstone Capital exit deal could be announced anytime soon, and a promoter of a listed pharma company could be a potential buyer of this stake of Everstone in Restaurant Brands Asia. So that would be an interesting counter to watch out for. When it comes to Walchand Nagar Industries, that company is also seeing some buy flows on the large HNI desk, and despite the weakness in the market, that stock is up around 5%. In fact, at one point of time, it was up as much as 10 to 11% in trade. Now, there are buy flows on the large HNI desk. A prominent influential investor has been accumulating shares in trade today, is what dealers have indicated. For M&M Finance, that stock is up 3% in trade, but dealers are indicating that there are sell flows on the higher levels on institutional desk. Both foreign and domestic institutions have been selling this counter in trade today, and delivery volumes are also expected to be on the higher side. Valuation is one of the concerns that dealers have highlighted for M&M Finance at this level. And lastly, when it comes to CG Power, that stock opened in green. In fact, it was up to 2.5% at one point of time, owing to the Economic Times report, which suggested that there could be a potential tie-up with Apple. But there are sell flows that dealers are saying that has happened on the higher levels, because they're not expecting much of a positive announcement to come in regarding this deal, and this deal might not be as positive as what the street was factoring in. Hence, some sell flows coming in on the HNI desk at higher levels for CG Power as well.
So very interesting stocks, Sumit, and a couple of those stand out, of course. Walchand Nagar in particular, and this is a stock that was in focus on account of the atomic energy bill that is being discussed. Of course, that is going to be passed soon in all probability. Essentially, it opens the doors for private players to participate in the generation of atomic energy with certain caveats. Of course, the raw material or the uranium, so to speak, will be under the control of the government at all points of time, and various other very key aspects to focus on. But Mr. Chokalingam, for a company like Walchand Nagar, and if we can pull up the slightly longer term charts as well, just to look at this, on the fundamentals, as a component manufacturer that participates in the creation of a value chain, if you are to move to a situation where you have just about 9 gigawatts of capacity right now, if to move to 100 gigawatts, this is a huge opportunity, is it not? On the fundamentals, this is a stock that has not performed incredibly well. But would you buy into this just purely looking at the potential for it being a part of a sunrise sector?
I mean, I find it difficult to buy because last 10 years or last 12 to 16 quarters, it has been making losses most of the time. And I would play on this liberalization of nuclear power sector through L&T rather. I am still negative on even small cap segment itself. So I would prefer L&T to play on this emerging theme rather than on Walchand Nagar.
Okay. So therefore, let me ask you, L&T is a buy for you at this moment?
Yes, I have a extraordinary conviction in L&T stock. Personally, I do not own, but I have extraordinary conviction.
Okay, so then let me get Kush Bora to weigh in on both of these. Walchand Nagar, though it has had a pretty decent run in the recent past, as Mr. Chokalingam has pointed out, the fundamentals don't look very good, at least if you look at the recent performance, right? And we don't yet know how this is going to turn out. It might well take a few years for this to take off. So on the technicals for both of these, L&T and Walchand Nagar, how does it look?
So let me get the easier one out of the way. 100% agree on L&T, Mr. Chokalingam there. Stupendous run in the last 3-4 months. After a long period of consolidation, I think bigger levels, higher levels are very much on the cards. 4,200 to 4,400, very much on the cards for L&T. So if you do want to park your money somewhere with a high degree of margin of safety, L&T is your stock to go to. 3,825, 3,800, just to round it off, is a good support zone. Maybe around those levels, or maybe just over, you could keep your stop losses there. So L&T is an easy bet at the moment. As far as Walchand Nagar goes, I think, Alex, this is a very interesting setup, not only in terms of price action that you've seen in the last 2 weeks, but also the volume action that you've seen. And the stock has a tendency of inching higher once you see this kind of a humongous accumulation that you've seen over the last 2 weeks. Now, if you draw a falling channel, which started in late July 2024, this is the first time that the stock is now starting to just inch above that. So I think you could perhaps give it a little more time, or close above 180 would be extremely encouraging. But once that happens, I think the stock is ripe for a big up move, perhaps to levels of 210 and even 240. So I have been very constructive on Walchand Nagar from a technical standpoint at least.
Right, there is a constructive view coming in for Walchand Nagar, but there is one stock where there is a lot of divergence views coming in. Goldman Sachs, CLSA, they have come out with their reports. It's a bulls versus bear scenario. I'll show you what's the differences coming in these scenarios, and it's very stark differences coming in for both the sides. One broking house is fully bullish, other is turned fully bearish. But what's the entire case? Let's have a look. CLSA views coming in is that Avenue Supermarts is relevant for India's urban mass consumers. That's a generic statement. But look at this concerns which is coming in for Goldman Sachs. They are stating that the store additions are running below the estimates which they had actually wanted. The second view which CLSA and Goldman have taken is that the FCF, which is nothing but the free cash flows, that could turn significantly positive on the store additions. And secondly, the earnings downgrade cycle, that still remains there, and that's a bearish view coming in from Goldman Sachs. Another important factor is that the business model has a deep competitive moat for Avenue Supermart, and it is still relevant today, while Goldman Sachs says there's a heightened quick commerce competition coming in H2 as well. So that's a concern which they are raising. Another view, if you take CLSA and Goldman, we see that the high conviction outperform is there. The target price, look at it, it is at 6,300 rupees. It's one of the highest in the street. But on the other side, Goldman Sachs, they have maintained sell rating and the target price is 3,425. See the gap between both the broking houses. But I'll give you one more scenario when I'm comparing CLSA and Goldman Sachs. They have stated industry specific. Quick commerce will be around 20% only of the FY35 urban consumption. That means a brick and mortar is here to stay. But when it comes to Goldman Sachs, they have stated that Blinkit's net order value will be higher than the net sales which DMart will come in FY27. So two sides of the story, and both of them are giving a very, very divergent kind of views for the market, and that is Avenue Supermart. Mr. Chokalingam, the question is for you. Avenue Supermarts, both sides, it's actually balancing it out, even the short term or the long term, and it's very confusing for me as well. Can you remove the confusion for us?
I don't have the numbers on, the quick commerce or digital commerce segment of Avani DMart. But if you see the performance of the company, the growth has sunk a lot in the recent years.
in the last 3 years particularly from FY23, the net profit is not growing in strong double digit. So for that kind of company giving 90 PE, I am little apprehensive. But it is subject to my lack of understanding of their foray into digital-based market. If they can make a progress, then it can be, the rich valuation can be justified. But I don't have that number.
That's a fair point. And, ultimately, if you have that kind of a multiple, you need to have the growth to justify that as well. And you've seen several instances over this year itself of those high multiples being punished, especially in scenarios where growth rate slows down. Let's very quickly address news, though, that has come in. Agencies have reported that the US is readying new Russia sanctions if Putin rejects a peace deal. Remember that the US has been pushing, and specifically Donald Trump has been pushing for a peace deal between Russia and Ukraine. That war has now gone on for years at this point. And the possibility, of course, is that the US is considering options such as targeting vessels in Russia's so-called shadow fleet of tankers used to transport Moscow's oil, as well as traders who facilitate those transactions. This, of course, could have a bearing on oil prices. Remember that oil prices have actually dropped quite considerably on account of worries of oversupply, and this is despite measures that have been taken in the recent past by the US against Venezuela. As of this morning, you had Brent crude that traded below the $60 per barrel mark, and that was something that was being alluded to by Mr. Chockalingam when he spoke about the aviation companies and the tailwinds that they have from the perspective of oil prices being low, because a large part of their costs come through there. But the oil sensitives are something that I want to ask you about, Mr. Chockalingam, as well. Downstream companies specifically, would you buy into any of them because we've seen soft crude oil prices?
So, they keep giving you tactical opportunities, and so otherwise, they generally don't benefit when oil price rises sharply or when oil price fall badly. So they don't get a direct benefit out of, steep fall in oil prices, even downstream companies. So short-term investors, traders can definitely consider these companies for short-term possible gain. But otherwise, for long-term investment, solid wealth creation, I will look for some other areas of investments.
Time to put the spotlight on the stocks that have been trending in trade today. Let's get in Jasmeet to understand what is in his list.
Well, thank you for that. Starting off with the stocks in my radar, first one would be Ahluwalia Contracts. With this company, the company received an order worth 888 crore for the EPC work, and the work involves in the district of Sita Mahir, and the work received is from the Bihar State Tourism Development Corp. The net order book for the company as of Q2 stands at 18,000 odd crores, and company has guided this to be executed next 2.5 years, and that's the reason the stock is buzzing into it, up almost 1.5%. But the next one is Shriram Finance, the board to meet on December 19th to consider fundraise via equity and other options. Well, this particular news has created overall positive sentiment for the stock, given what the management is going to use for this particular fundraise. Well, the management has the following option for the fundraise, that's through right issue, preferential issues, and the QIPs. The third stock in my radar is Saregama India. While the company forms a strategic alliances with Banashali Production Announcers, and the company to acquire 51% stake in the company for rupees 325 odd crores. With this news, it also includes the company to subscribe to 9,900 odd compulsory convertible preferential shares by the company. How will this help the company going forward? Is firstly, it will increase the market position in the video segment for the company. Secondly, it will further consolidate the overall market leadership for the music industry as well. The stock is in red today, down almost 8%. Given this particular deal will be EPS assertive from FY27, that something has created overall negative sentiment for the company, given there won't be any positive news in the H2 of the company. Well, the last one in my list is Indian Overseas Bank. The government to offload roughly 3% stakes in the company via the OFS. The OFS is set to take place 2 days at December 17th and December 18th. Government is selling roughly 365 million shares, roughly 2% stakes in the company, with a 1% stake of adjustment where they can increase the stake to 3%. Now, in terms of the floor price, that stands at 34 rupees. With the current fall in the share price, the share is almost selling at the same price where the floor price was set yesterday. Now, in terms of the overall OFS, is undertaken to meet the minimum public shareholding requirements by the government, and as of the current date, the government roughly holds 94.6% stake in the company. So these are the stocks in my radar which are buzzing on the back of the news flows.
Absolutely. And quite an interesting transaction, isn't it? The stock might be reacting negatively, but this is effectively any creatives that emerged from Sanjay Leela Bhansali on the music side get the rights to sell with Saregama. But having said that, I do want to point out India Cements. And this is a stock that is up as much as 6.5% on pretty substantial volumes. As things stand right now, it's over 3 times the 30-day average from what I can see on my screen. Kush, would you get into this at this moment? What are you seeing on the charts? Is it supportive of an up move from this point as well?
It is, Alex. This is a breakout. This is a very clear breakout. 425 was the zone that the stock was resisting for the last month and a half or so. Was consolidating, broadly, with that as the resistance, and on the downside about 380, 375. Now with this kind of an volume-backed breakout, I think the momentum will just only pick up from here on. I think, the kind of moves that you're seeing against the market trend also augurs well for the stock. So from here on, don't be surprised to see the 455 and even 480 kind of levels, being hit on the stock. Support zones close to the 410 mark, so risk reward ratio after the breakout also very favorable. And mind you, while the rest of the cement pack has corrected quite sharply, this has just gone sideways and consolidated, and it's now giving you a breakout. So I think this is ripe for an up move. 480, 485 kind of levels very much on the cards.
And sharp climb in the volume is, even as we're speaking, right? It's heading to over 4 times the 30-day average. We have to slip into a very quick break. On that note, let me thank Kush Bora for joining us today. Kush, absolute pleasure as always speaking to you, and speak to you really soon. We'll be back on the other side to talk about more stocks and also give you a few BTSD ideas possibly. So do stay tuned.
What does, say, 11 years of Modi compare with in a global context?
He's going strong. Part of it is a weak opposition. Part of it is he's very disciplined. This is his life. It's why I've said that Modi is probably the most consequential prime minister since Nehru. And he's reshaped politics. He's reshaped the nature of the kind of master narrative of Indian history.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
What does Sufism mean to you?
Sufism is about love. Higher ideals are more fascinating than normal love song or anything. Talk about Khwaja Mere Khwaja, Kun Faya Kun. It's all about higher ideals. I'm bringing the same spirit to Delhi. So book your tickets from District app. See you Delhi.
'25 has been a tremendous year for markets, money and milestones. And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit. The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
They rule the world. 1 billion hearts. Now, meet the champions who made the nation proud. The Indian women's cricket team at the NDTV Indian of the Year.
Welcome back to India Market Close, and joining us is Shivangi Sarda from Motilal Oswal. A very good afternoon to you, Shivangi. Not much happening in the markets when it comes to the overall momentum, especially in the options trade segment. What would be your views coming in for Nifty and Nifty Bank right now? And you can give a positional view also, looking at lack of volatility to say in the markets on an intraday basis.
Very good afternoon, Sharon. Thank you for having me. So we've seen that markets have kind of become a little jittery of late. And of course, if we talk about the positional view, we are seeing that support zones are being respected and sticked onto. But then again, follow up at the higher zones is missing, which is again making the upside capped. So lack of decisive move on the either side for Nifty as of now, and we are expecting this to continue for the next few sessions till the time it manages to cross and hold above 26,000 levels for a fresh leg of rally to begin. So we would watch out for 25,700 as an important support here, because these are the levels where there is quite a lot of smart buying that was seen earlier in the previous week as well. But overall, we've seen that, some of the sectors have dampened, because of which the entire broader market is becoming a little bit volatile. On the other hand, if we talk about the banking index, this one has been quite resilient. And, for that matter, we are seeing that PSU names are driving the entire momentum. In fact, from the last, from the last 3 months consistently, we've seen Bank Nifty make higher top, higher bottom, and it is comfortably trading above the 58,500 support base. So this would be an important level as a cushion for Bank Nifty for the upside move towards 60,000 levels. So this would be the take to watch out for Bank Nifty. Of course, this is more stronger, and we could watch out for the PSU names here.
And Shivangi, amid such jittery moves in market, what would be your top picks?
So for the top picks, of course, as we've spoken about the strength in Bank Nifty, the first pick on my radar is SBI. We've seen that this stock has been resilient from the last 5 years, consistently making higher top, higher bottom. Of lately as well, we've seen that it has been trading in an upward sloping channel. And after touching the lifetime high levels earlier, in the previous month, we've seen that there was some bit of softness, and it has retraced exactly from a good level to again build up strength from the last 5 trading sessions. So now this one's looking quite positive, getting ready to trade above its 50 daily exponential moving average. And this one's a buy for the next immediate targets of 1,000 and then positionally 1,020 levels. And we could watch out for a support at 960 zone.
That's the view coming in for Shivangi, for SBI. But let's move focus to mutual funds. They had a tough year in 2025. Flexi cap funds saw mixed year with some delivering double-digit gains while others saw steep losses. Meanwhile, mid caps and small caps also showed sharp contrasts, with only a handful beating the benchmarks. Before we go across to our guest, let's go across to Alex for a deeper dive into this best and the worst performers across these categories. Alex, there's a lot of divergent trends coming this year for the mutual funds this time.
Absolutely. Look, it's been a tough year for investors in general, but mutual fund managers have also had it tough. And we'll talk about a few segments and you'll see what I'm talking about. Let's start with the largest segment as of November, and that's the flexi cap category. And remember, this is where the fund manager gets a blank slate. They can go wherever they want in the market to pick their funds. But the schemes that have done well, and you'll see the return profile as of last Friday here, this more or less will give you a perspective of the full year. Then the ones that have done well are the ones that actually have a large cap focus. And that's because the broader markets have actually underperformed. On the flip side, you see the ones that have underperformed, and there is a significant underperformance. Samco, a relative new entrant to the mutual fund space, has underperformed in a big way. This is a decline of 19.5%. and an underperformance to the benchmark of as much as 26+%. And that's because they have a very concentrated portfolio and the selection of stocks has not done very well for them. Let's take a look at the multi-cap fund, and this is where you see the impact of the large cap bias for some of these portfolios that have done well, because the multi-cap requirement is to have at least 25% allocation towards mid-cap and a similar allocation at the very least to the small cap space as well. As a result of which, the best performing fund has only done 7.9%. And it's not very much if you think about it. Inflation, of course, was at what? An average of 2.5% or 3% or thereabouts, or even less. So you've beaten inflation, but it's nothing really to talk about in a cheerful manner. On the flip side, the losing end, you actually have Samco once again that features in this list and is down about 8%. Again, portfolio selection seems to have gone wrong for this mutual fund scheme, but a few others as well that have played momentum in the past, that have done really well in the past, have not done well in 25 because that momentum was missing. Take 4.3% declines for the quant multi-cap fund as an example for that. Let's take a look at the small cap space, and here's where there are a lot of talking points, because you have actually, these should show up in red because there are actually declines, but you have two schemes in the entire category that have positive returns. Quantum, which is actually pretty conservative, even in its small cap selection, that is up about 3% or so. And you have PGIM India that's just about nudging into the green territory. But most schemes have actually lost money over the course of the year to date. But the good thing is that 21 schemes in the entire universe, it's a little over 30 schemes, have actually managed to beat the benchmark. What that means is that the benchmark has actually lost ground and these guys have lost less than the benchmark. In the mid-cap space, all but only 4 schemes have actually managed to beat the benchmark in the year-to-date period, and these are some of them. ICICI Pru, once again featuring in that list, 9.3% gains. Mira Asset doing particularly well as well. Invesco India and HDFC Mid. On the flip side, you have a few that have stood out as bad performance. Very interesting, Motilal Oswal, that actually ranked among the top gainers in 2024, has not done particularly well in this particular year, that is 2025, down about 10.8%, and you've seen some of the selections that they've done that haven't done particularly well for them, the worst performer, but you have 2% declines for HSBC as well. Just going to close out with the flows into the category because these have been robust. Let's look at a few of these schemes that I've mentioned, right? On a consolidated basis, you have actively managed equity mutual fund schemes that have gotten inflows of over 3 lakh crore rupees. And quite a bit of that has come through in the form of SIPs. You've had record numbers on a monthly basis quite a bit over the course of the last few months. 3.2 lakh crores into active equity. A large part of that, 70,000, nearly 71,000 crore into flexi cap, and mid cap and small cap have actually gotten reasonable inflows as well over the course of 11 months. As much as 80,000 and 89,000 actually crore going into the broader market. So really the question is, where do they deploy? Where do fund managers deploy? They've had to gravitate more towards the large caps because of the underperformance, guys, of the broader markets. And that really is something that you will take into the new year. Perhaps you will see some of these broader market funds once again perform. At least that will be the hope of the investor.
Well, yes, that's the hope. And as the saying goes, mutual funds sahi hai for a lot of investors who are there in the long-term basis. But Mr. Chokalingam, I would like to take this entire segment only which Alex was discussing, the AMC stocks. That's something which the street is especially bullish on a long-term basis. ICICI Pru, AMC, IPO, the subscription numbers were at record levels. If you had to pick something from this space, which AMC stock would have a better risk-reward ratio right now, and what would be your view on that?
Certainly, there is no doubt about the long-term prospects of AMC stock. All of us know that there is a possibility of doubling the AUM of the entire industry in the next 5 to 6 years. But short term, I expect a little more pain. There is a possibility of at least another 5-10% correction can happen because even yesterday, the media report saying that regulators are looking at cutting down the fees. I believe if we have to reduce the the power of FII, we have to grow further the local book, and that means taking the AMCs to rural and semi-urban area and cut down the cost of investing, and that is likely to happen. So, however, still, if I have to buy for medium to long term, I would go with Nippon Life, and for that matter, even ICICI Mutual Fund.
Right. Moving on to our next story. In fact, as per our sources, the Securities and Exchange Board of India is scheduled to meet today and to consider and clear several key market-related proposals. What are these proposals? Let's get in Ridhima to give us more details.
So the SEBI board meeting today will be discussing regulations on mutual funds, IPOs and internal governance. Now first coming to mutual funds, there could be reduction in the expense ratio, which is the fees paid by the investors to the AMCs for the fund management. In that space, 15 basis point cut could be seen in open-ended schemes and 25 in the closed-ended schemes. Statutory levies like the STT, GST and stamp duties could also be excluded, and a performance-linked fees could be introduced so that based on the performance is what the investors pay for. Secondly, the brokerage fees reduction is also expected as per our sources. In the cash segment, 12 to 2 basis point cut can be seen, and in derivatives from 5 to 1 basis point. Basically, the brokerage is the cost which AMC pays to the stockbrokers. So the reduction would lead to better returns for the investors. In the IPO space, the prospectus could become shorter now. 15 to 20 pages is what our sources tell us, so that the investor can understand about the companies upcoming for the IPO. And changes in the lock-in rules for pledged promoter shares is also expected, where a technology could be introduced to tag them during the IPO process. And conflict of interest for SEBI officials could also be the point of discussion for better transparency for the investors. Other than this, there could also be discussions for the stock broking rules to simplify that, and more opportunities in the debt market trading could be created for the investors. That's all we're catching from the SEBI.
Mr. Chokalingam, I remember when earlier this news had come in regarding the commissions that mutual funds pay to broking companies. That was expected to be reduced. Any view that you have on the listed broking names like Nuvama Wealth, because these stocks had seen a sharp downtick when this announcement had come in?
Yeah, definitely short-term negative, because apart from possible cut in the brokerage, already you saw the media report of NSE cash market volume going down. Because of a severe meltdown, over 30-35 lakh crore of market cap has been eroded from small and mid cap from September 2024 peak. That has definitely impacted the trading volume and therefore brokerage revenues. So even December quarter is going to be little setback for many. So I would be negative, on brokerage stocks in the short term.
Let's talk about some small cap buzzers and a few of the top trades that you might have made at the start today. A few of these have gotten double-digit gains. Let's get Varsha in to tell you about which stand out here. Varsha?
Well, thank you so much. I'm going to talk about three stocks, starting with Apex Frozen Foods, then EPAC Durable, and Denta Water and Infra Solutions. If I, starting with Apex Frozen Foods, if you see stock is over 8%, trading at volume of over 2x of its 20-day average. InCred, in fact, has a buy rating on this stock with a target price of around 520 rupees. Then you have EPAC Durable, which is up for the fourth consecutive session. In the last four trading session, the stock is up almost 28%. The stock has corrected 24% though post reporting Q2 FY26 results, and the stock was at 52-week low before run up this week. Then you have onto the EPAC Durable also, the company is expecting flat FY26 revenue, and also there are some concerns when it comes to the inventory, and which is why if you see there's been increase in the borrowings as well. Next on the list is Denta Water and Infra Solution. If you see stock is up 8% in trade today. Volumes are trading at 30x of its 20-day average, while company has mistakenly came out with factually incorrect press release on 16 December 2025. So these are three stocks which are in focus when it comes to small cap.
So interesting counter out of these three stocks that were just highlighted by Varsha is EPAC Durable. Now for the calendar year, for the financial year FY26, the company is not expecting any growth. The stock has been on a tear for the last 4 trading sessions. It has gained more than 28%. Mr. Chokhalingam, have you tracked this counter EPAC Durables? Any view at the current valuations? Would it be a good time to enter this counter?
No, just now I looked at the basic fundamental parameters. I find valuation is stretched at current prices.
Okay, but on the charts then, Shivangi, let me ask you, do you think that most of the gains might actually already be in the price, or do you think that's potential for the upside?
So, of course, we've seen that this entire space has gained a lot of momentum. And of lately, this particular stock on a week-on-week basis, we've seen that there has been a negation, and it's wiped off the entire losses of the last 4 to 5 weeks. And we've just seen that volumes have spiked in the last 2 sessions. But of course, this has to sustain at these levels to again, further build up momentum, because in this year itself, it has seen a downfall of more than 50%. So, quite a volatile stock. I would recommend having a strict stop loss in hand while trading this, or the best would be to avoid such stocks and move into better momentum stocks.
Momentum stocks we are speaking about. Shivangi, what are your BTST picks?
So we've seen that markets have, somewhat become a little jittery, but we are seeing some of the banking space stocks are still holding up. I am looking at a few PSU banks which are closing in quite positive. So Can Bank would be one of those stocks where we've seen that there has been quite a lot of good buying interest right from the start of the tick today. In the last hour itself, we've seen that volumes have picked up even when the price has become a little steady from the last 4 to 5 hours. But overall, we are expecting the momentum to continue. We could see this for the next upside move towards 155 levels and a stop near 148 zones.
A few more stocks in the broader markets that are losing ground quite considerably, right? Of course, AkzoNobel stands out here because of the promoter selling the block deal that took place at a very steep discount to yesterday's closing price, which is pretty much stuck at that lower level, right? 13.5% lower at this point. It's pretty much very close to where the deal took place. IOB losing about 6% or thereabouts. Again, this is a stake sale by the government taking place. Saregama losing ground. HBL Engineering. Data Pattern stands out, down about 5% at this point, possibly at the low point of the day. Is it? Yes, it is. So let's... oh no, that was HBL. But yeah, Data Patterns at the low point of the day as well. Shivangi, on the charts, what would you do with this one? Would you exit if you have the opportunity, or would you hold on?
Looking at Data Pattern, we've seen that some weakness has been persisting here from the last 5 weeks, and we've seen that this stock has consistently given up all the gains of the last 2 months. So somewhere we are seeing that, any minor attempts of recovery are also, being failed. So I would recommend a little wait and watch here to watch out for the support levels where this stock finally, halts, because it has actually managed to breach both the important support levels at 25.50 and then again, 24.90 levels. So we will have to watch out for this one.
Okay, all right. Talk about a few more stocks from the broader markets. In M&M Finance stood out, of course. You had Somit telling you that there are buy flows for this particular counter. It's up about 3% and at the high point of the day today. So, Mr. Choklingam, if I were to ask you about NBFCs and specifically on M&M Finance, in past quarters, they've had a little bit of challenge on asset quality. In your opinion, do you think that that might be over and things might be looking up, because they have a focus on vehicle finance as well, don't they?
Definitely, by being part of Mahindra Group, it can come out of that and then it can improve. But however, when the interest rate cycle is reversing so significantly, at this juncture, it is slightly negative for NBFC because overall lending rates in the system itself is coming down, and NBFCs normally they borrow and lend. So therefore, situation like this, the PSU banks are far better. However, long-term investors can hold M&M Finance. Short to medium term, I don't expect much return. For long term, yes, because it is just trading at a 2.1 time price to book value, which is very comfortable valuation for long-term investment since it is a part of M&M Group.
Okay, let me ask you about a couple more then, and I'll come to you, Shivangi, on these, right? So you have IGL, which we've discussed on the fundamentals, and there was actually an interesting brokerage note that came through earlier today and trading with gains of close to 5% at this point. Would you buy in at levels of 192, sub 200 levels? Are they still attractive?
So yes, of course, looking at IGL, we've seen that crude oil price movements have had a major impact in the cap up today. We've seen that this stock has actually kind of not performed this year at all. It is down by 7.5% on a year-on-year basis. But then, of course, it has still outperformed the sector. But of course, there has been quite a lot of weakness in this. And we are seeing that the stock actually has a nature of kind of sinking after a breakout. So after today's breakout, I think it's important for the stock to hold above 190 levels for again to build momentum, and then cross 200 zones. But then it'll be important to watch out 190.
And the broking house takes also, they are taking their views on the stock. Orkla, let's pull out that stock. That was one of our brokerages. We had spoken about JP Morgan initiated over, which is a target price of 745, but there were some concerns in this counter, especially it's been just 2 months since they have been listed. So this is going on the negative side where we are seeing sell-off happening, but net they have been bullish on the industry, JP Morgan. And the second stock is Meesho. We had discussed this earlier. UBS has initiated a buy with a target price of 220, stuck in an upper circuit over here as well. Shivangi, of course, Meesho has a lower, you could say, history, and even when it comes to Orkla. But in the current situation, Orkla, do we see some more stop losses getting triggered in this case? It's already down almost, you could say, 15-20% from its IPO price, or is there any value buy scope here?
Yes, Sharad. So, very less data to actually comment any of, the technical perspective. But of course, the stock has kind of lost momentum from the time it has, come into listing. But then again, we'll have to also discount the fact that the market has been quite weak from the last 1 month, and there has been a lot of volatility throughout. So I think this would be a little, waiting around here, because it has kind of taken a little bit support near 600 odd levels. So if it manages to hold above 600, then we could expect some stabilizing here. Of course, the opening levels still feel a little, time consuming as of now, looking at the current momentum.
All right. By the way, we've been speaking about India Cements. It is now one of the top gainers on the Nifty 500, 8+% gains, or very close to 8% gains. And take a look at that volume, right? 5.36 million trades taking place. It is 7.5 times the 30-day average. The quick question to you, Mr. Chokalingam, at these levels, do you still see value or do you still see it as attractive? Would this be a pick for you in the cement space, or would you pick something else, or none at all?
Certainly not India Cement on the basis of value, because it is trading at an enterprise value of $110 per ton, which is fairly priced. And also last 2 years it made losses. But however, I may still go wrong if I give sell call, because I don't know whether there is any tactical opportunity in terms of Ultratech taking the possible decision to amalgamate. If that happens, then tactically there is a possibility of further upside. But fundamentally, absolutely, it is fully valued at current price.
Right, thank you very much, Mr. Chokalingam and Shivangi, for giving your fundamental and technical views. But on to the closing for the markets. Today itself, we see a narrow range coming in with a negative biasness, market coming into fatigue. And we see for the third straight day, global markets are under pressure. Nifty likely to end below the 25,850 mark, and the Nifty Bank, that itself also we see a minor recovery coming in, but still in the red below that 59,000 mark. Let's pull up the constituents of the Nifty index, and we see largely it's even Stevens, but Shriram Finance, SBI and certain metal names are holding the fort. But when it comes to the losers, we are having financials taking a big dip. ICICI Bank, HDFC Bank, which is there on the lower screen. Life insurance stocks, SDFC, SBI Life also seeing sell-off, and Max Healthcare, Apollo Hospital, Trent and Bajaj Auto, they are also coming to the list for selling. Let's look at the sectors, how things have moved, and largely the PSU banks, metals and the pharma are in the green. IT also select pockets we saw green, but majority of the broader indices, realty, consumer durables, defense especially, they are seeing some big profit taking in these counters as well. Also, apart from this, let's pull out how the overall advance decline ratio is faring, and like yesterday closing, it was around 3:1 in favor of bears. Today also the story remains the same. That means for 2 straight days, no support coming in mid-cap indices, likely to close near the day's low. Story repeats again for the small cap indices, no value buying attempt coming in. There are volumes drying up in the market. BSE 500 contributors, that's something to look at. India Cements, Alex pointed out, that's up 10% top gainer. IGL was our stock of the day. M&M Finance and even AB Fashion also seeing a strong up move. But select NBFCs have started showing value buying as per my channel checks from HNIs and some institutions as well. AkzoNobel, Block Deal Impact, Indian Overseas Bank, also the OFS opened, and the defense stocks, they have taken a tanking as well. Also Colgate interestingly comes to this list where the stock is down 4%. So this is the overall the BSE contributions which we have seen in the markets. But let's look at how the next 48 hours or the 24 hours pan out, and a lot of important macro data will be coming. Japan's foreign bond investment, that will be coming in, and December 19th, Bank of Japan is expected to hike the rates also, and that's why the risk of sentiment is coming. Donald Trump will be speaking at White House today in Washington DC, so the markets might react in the morning early session. Interim dividend announced from Indian Oil and dividend yield stock, that's why I mentioned it. Aeroflex Industries fundraising is there for tomorrow. The stock will be in focus. Anchor lock-in coming in for 2 counters, Fujiyama Power, and the second one being Europratik, which should be in your radar. But largely, we can see the markets are in jittery and stuck in a narrow range. And that's all, folks, today for India Market Close. Up next, Himangshi gets you Market Express.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
What does Sufism mean to you?
Sufism is about love. Higher ideals are more fascinating than normal love song or anything. Talk about Khwaja Mere Khwaja, Kun Faya Kun. It's all about higher ideals. I'm bringing the same spirit to Delhi. So book your tickets from District app. See you, Delhi.
...2025 has been a tremendous year for markets, money and milestones.
And we have tracked it all right here.
As the year winds down, we bring you the big moments.
Hello, good afternoon and welcome to Market Express on NDTV Profit. I'm Himakshi Bahugna. Over the next half an hour, we'll track the top market movers, stock-specific action and also the key triggers driving the trade. Let's get straight to the action and see how the markets have fared today. So the benchmarks, it was a tepid day if we look at the Dalal Street with Nifty ending the day near day's low and also below 25,900 levels. If we talk about Sensex, so that also shed more than 80 points and Sensex also lost more than 80 points. Advanced decline ratio, if we look at, was sharply tilted in the favor of the declines. And if we talk about the sectors, so most of the sectors have ended the day in red with media and defense leading the losses. PSU, banks and IT remain very resilient. Now let's look at the key stocks that were buzzing in trade today. First up, we have Meesho. So UBS has initiated coverage on Meesho with a buy rating and also a target price of 220 rupees. The brokerage calls Meesho a game changer in India's e-commerce space. Now, democratizing the online shopping from villages to rural charts, rural carts, UBS is seeing a substantial growth runway through FY30, and this is backed by a clear path to profitability and also cash generation. Now, contribution margins are projected at 6.8% by FY30, while the EBITDA margins could reach 3.2%. So, in short, UBS believes that Meesho is well positioned to capture India's next wave of digital commerce. Another counter is Ahluwalia Contracts that has bagged 888 crore order from Bihar State Tourism Development Corporation for EPC works with a timeline of 42 months. So this adds to an already strong order book of 18,057 crore rupees as of September 30th, which is slated for execution over the next 2.5 years. So the latest win reinforces Ahluwalia's position as a key player in the large-scale infrastructure and the tourism projects. Next up, we have Shriram Finance that has announced that its board will meet on December 19 to consider a fundraise. So the company is exploring options including a rights issue and also a qualified institutional placement. So this move comes as Shriram looks to strengthen its capital base and also support the future growth plans. And Saregama is set to acquire 51% stake in Bhansali Productions for 325 crore rupees. So the deal marks a strategic move into the premium film content and is also expected to be EPS accretive by FY27. So with this acquisition, Saregama strengthens its foothold in the entertainment space, combining music leadership with marquee film production capabilities. Now, big development at Ola Electric. Founder Bhavish Agarwal has sold 2.6 crore shares, or probably 0.6% stake at 34.9 rupee per share, which is a steep 53% discount to the IPO price. So the company clarified that the sale was to fully repay a promoter level loan of 260 crore rupees, and importantly, all the previously pledged shares, about 3.9%, will now be released. So post this transaction, the promoter group will continue to hold roughly 34% in the Ola Electric. Now, another counter that has been buzzing is the Indian Overseas Bank. So the government is set to divest a 3% stake in Indian Overseas Bank through an offer for sale over 2 days. So this plan includes selling 2% upfront with an option to offload an additional 1%. So the OFS floor price has been fixed at 34 rupees per share, which is 7.6% discount to the current market price. So the divestment is aimed at meeting the minimum public shareholding norms, as the government currently holds 94.6% in the bank. Next up, we have Kotak Securities that has upgraded, Vedanta to a buy rating and also raised its target price to 650 rupees from 550 rupees. And they have cited strong tailwinds from the recently approved demerger and also the firm commodity trends. So aluminium remains in sweet spot with the growth and margin accretion drivers. Now, Kotak sees a very clear upside there, projecting EBITDA could be, 10% higher in a bull case scenario, which would value Vedanta at 770 rupees per share. And viewers, Indraprasth Gas was buzzing after Nomura upgraded the stock to buy from neutral and also hiked the target price to 230 rupees. So the brokerage expects margins to improve on lower tax and also transmission tariffs, while the transition to DTC is nearing completion. So setting the stage for volume recovery after a sharp correction, Nomura says that the risk reward has turned favorable and making IGL a compelling play in the city gas distribution space. Next up, we have Kane Semicon that has partnered with Japan's Mitsui and AOI Electronics to strengthen India's semiconductor manufacturing ecosystem. So the collaboration will focus on enhancing the capabilities in the design, advanced packaging and also material readiness. So key players for chip production. This strategic, tie-up aims to really accelerate India's semiconductor ambitions and also build a robust local supply chain under the Make in India push. And viewers, Vikram Solar's board has approved a massive 4,371 crore of capex plan for phase 1 of its battery energy storage system business. So this investment will be undertaken through its arm, VSL Power Hive, and also includes commissioning a unit in Tamil Nadu. The project will add 7.5 gigawatt per hour of cell manufacturing capacity, and this is also expected to be operational by FY29. So the capex will be funded through a mix of equity and debt, and this is marking a big step in India's clean energy and storage ambitions. Viewers, NBCC has secured 2 new orders worth combined 345 crore rupees. So the larger order, that is of 333 crore rupees, comes from IIT Mandi for construction of academic blocks, while another 12 crore rupee order is from Kandia SEZ. So with these wins, NBCC's order book stands strong at 1.28 lakh crore rupees as of September 2025, and this is to be executed over the next 2.5 years. Another stock that was buzzing was Waaree Renewables, and it has inked a long-term power purchase agreement for 300 megawatt solar power project with the leading global tech giant. So the deal strengthened Waaree's position in the renewable energy space, with its unexecuted order book standing at a robust 3.48 gigawatt GWP as of Q2. So this partnership underscores growing corporate demand for the clean energy and also Waaree's execution capabilities there. Time now to take a look at what sources are telling us. Looks like there's no immediate relief in store for Vodafone Idea. Sources are telling NDTV Profit that the government is moving cautiously on a relief package for Vodafone Idea. Officials say that the centre is wary of any steps that could really impact the valuation, given its 49% stake in the company. So Vodafone Idea shares have been volatile, adding to the market sensitivity around the proposal, and a final decision could take time as the government weighs options slowly. So meanwhile, Vodafone Idea has reportedly submitted 2 to 3 proposals to the Department of Communications for consideration. And on to some more corporate action now. The Reserve Bank of India is back in the market with a decisive intervention to halt the rupee's one-way slide. So the central bank sold dollars aggressively on Wednesday, stepping in as the rupee weakened close to 91 to a dollar mark. Now, following the intervention, the currency has staged a sharp intraday rebound, strengthening to around 89.75 before settling near 90.28. So bankers say that the RBI appears uncomfortable with the pace of the depreciation, calling levels near 91 overly stretched. So today's move echoes the central bank's heavy-handed actions seen in October and also November, when it intervened multiple times to break the persistent downward momentum. Notably, this time the RBI entered the market shortly after onshore trading began, sending a clear signal that it will not tolerate a disorderly move in the rupee. Next up, we have ICICI Prudential Asset Management that has scripted history in India's primary markets. The company's IPO has garnered bids worth nearly 3 trillion rupees, or about $33 billion, making it the 4th most subscribed IPO ever in India. So the $1.2 billion issue closed on Tuesday and now ranks behind only Reliance Power's 2007 offering, LG Electronics India's IPO earlier this year, and Bajaj Housing Finance's issue in 2024. So institutional investors led the charge, with QIB portion subscribed an eye-popping 124 times. Market participation, market participants are saying that strong, parentage and a robust outlook for India's mutual fund industry made the IPO an attractive bet. So the listing also sets the stage for a record fundraising year, with several large financial firms tapping the markets in 2025. And Tata Chemicals has raised 1,500 crore rupees through the allotment of non-convertible debentures, that is the NCDs, via a private placement. Now, in a regulatory filing, the company said that it has issued 1.5 lakh listed unsecured, rated and redeemable NCDs, each with a face value of 1 lakh rupees. So the debentures carry a fixed coupon of 7.06% and also have a tenure of 2 years and 364 days. So the issue was allotted to identified investors using multiple yield allotment methods. Tata Chemicals also said that the NCDs will be listed on the debt segment of the National Stock Exchange. So the allotment was approved by the internal committee of the company's board, marking another step in its fundraising plans through the debt market. And a major twist in the global media consolidation story. Warner Bros. Discovery is likely to reject Paramount Skydance's hostile takeover bid worth over $108 billion. Now, according to Bloomberg, the Warner Bros. Board has serious concerns around the financing structure and also key terms of Paramount's all-cash offer. So the board is expected to take a call as early as Wednesday and also may even urge the shareholders to vote against the proposed takeover. Meanwhile, Netflix continues to emerge as the front runner. Sources are saying that the Warner Bros. Board believes Netflix proposal offers better strategic value despite Paramount Skydance coming in now with a higher bid. So Netflix was the first to make a move earlier this month, setting off a high-stakes battle for one of Hollywood's biggest studios. And Xiaomi has begun expanding the rollout of its latest HyperOS 3 update in India, bringing Android 16 and a host of new AI-driven features to more devices. So this update, which was first unveiled at Xiaomi's September launch event alongside Xiaomi 17 series, is now being pushed to a wider lineup. Now, according to the company, eligible models include Xiaomi 14, Xiaomi Pad 7, Redmi Note 14 5G, Redmi 13, Poco F7 and Poco M7 Pro 5G. So HyperOS 3 comes with refreshed system animations, new widgets and also AI-powered writing and editing tools aimed at boosting everyday productivity. So users can manually check for the update through the HyperOS section in their device settings as the phased rollout continues across the country. And Apple is exploring a deeper footprint in India's semiconductor ecosystem. According to a report, the iPhone maker is in early stage talks with Indian chip makers to assemble and also package components used in phones. Sources are saying that Apple has held preliminary discussions with CG Semi, which is setting up an outsourced semiconductor assembly and also testing facility in Gujarat. While talks are still at a nascent stage, this marks the first instance of Apple considering chip assembly and packaging in India. So this move could significantly strengthen India's ambitions to become a global semiconductor hub and a key focus area for the Modi government. Viewers, Apple has crossed a major export milestone in India. So according to a report, the company has exported a record $2 billion worth of iPhones from India in November alone, which is the highest monthly figure for the current financial year. So with this, the total iPhone exports from India in the first 8 months of FY26 have climbed to $14 billion. Now, Apple now accounts for nearly 75% of India's total smartphone shipments in November, which stood at $2.7 billion. So most of these exports came from Apple's manufacturing facilities in Tamil Nadu and Karnataka, where Tata and Foxconn operate multiple plants. And according to reports, OpenAI is in talks with Amazon over a potential investment that could exceed $10 billion. So while the details are still fluid, the proposed agreement may also include OpenAI using Amazon's in-house artificial intelligence chips. So the discussions come after OpenAI's recent restructuring, which has given it greater, flexibility to raise the capital and also partner with players beyond Microsoft. So Microsoft has already invested over $13 billion in OpenAI, but no longer holds the right of first refusal. So as its compute provider, any deal would mark a very significant expansion of Amazon's footprint in the generative AI race and also underline the intensifying battle for compute and also capital in the AI ecosystem. Viewers, in Dehradun, an FIR will be registered against the owner if a pet dog bites someone. So, following the incidents of dog attacks, particularly by aggressive breeds like Rottweilers, the municipal corporation in Dehradun has formulated rules regarding dog ownership. So, under the Dehradun Dog Licensing Bylaws 2025, in addition to the mandatory challan action, an FIR can also be registered against the owner if a pet dog bites someone. So, moreover, the corporation can take the dog into the custody. The new rules also require obtaining a license for dogs older than 3 months and also a mandatory anti-rabies vaccination certification. On to some more national news. Breathing Delhi's air right now, it's almost like smoking 8.5 cigarettes a day. So the capital's AQI has touched 340, which is firmly in the severe category. And in response, GRAP stage 4 is now it's in full force. So physical classes are shut for younger students, offices are operating at half capacity, and only BS6 compliant vehicles will be allowed to enter the city from tomorrow. So construction activities have been completely halted, coal-based tandoors have been banned, and vehicles without valid PUC certificates won't even get fuel. So authorities are urging the residents to switch to the public transport as Delhi is battling one of its worst winter pollution spells. On to some more national news. Brihan Mumbai Municipal Corporation has taken down over 2,100 illegal banners and posters of political parties across Mumbai. So this crackdown comes as a part of a drive and to maintain civic order on the city roads. Officials are saying that this action, targets unauthorized displays that violate the municipal norms and also obstruct the public spaces. So the removal campaign is expected to continue in the coming days to ensure compliance ahead of the upcoming political events. And Maharashtra government has issued a strong warning to Ola, Uber and Rapido over what it calls serious violations in their bike taxi operations. Transport Minister Pratap Sarnaik has said that the companies were granted temporary permissions to run e-bike taxis but were found using petrol bikes, ignoring the safety norms and also failing to follow the prescribed regulations. The remarks come after recent incidents, including a passenger death and also a harassment complaint by a woman rider. So in the past 15 days, 36 FIRs have been registered against the platforms, with most of the cases involving Rapido. So a compliance report is due within 2 days, after which the state may, take stricter actions, including possible termination of the services. And the Income Tax Department has conducted a raid at Bastion Pub, owned by actor Shilpa Shetty, on St. Mark's Road in Bengaluru. So the high-end pub, known as one of the city's most expensive, is under scrutiny for alleged non-payment of income tax. So officials began inspections early this morning and also continue verification at the premises. Sources are saying that more than 10 officers have arrived in 5 vehicles to carry out this operation. Now on to some global news. The US administration under President Donald Trump has announced a major expansion of its travel ban, adding several more countries to the list of the nations whose citizens face entry restrictions or even outright bans. So the expanded policy bars or limits travel from countries including Burkina Faso, Mali, Niger, South Sudan and Syria, along with travel documents issued by the Palestinian Authority. So in total, restrictions will apply to about 20 additional countries, increasing the overall number under full or partial bans to nearly 40. So this move is set to take effect from January 1st of 2026. And the US has ordered a blockade on oil tankers entering or leaving Venezuela, escalating the sanctions against the country's energy sector. So this directive, signed by President Trump, targets vessels linked to sanctioned entities and also aims to choke off the revenue for the Maduro government. So officials are saying that the move is intended to enforce the compliance with the existing sanctions and also pressure Caracas to restore the democratic processes. So analysts are warning that this blockade could disrupt the global crude flows and also raise geopolitical tensions in the America. And the US is threatening retaliation against the European Union over what it calls unreasonable technology regulations. So Washington argues that EU laws like the Digital Markets Act and Digital Services Act unfairly target American tech giants. So the US Trade Representative said that all the options, including trade measures, are on the table. The EU insists its rules apply equally to all the companies and also aim to ensure fair competition. This standoff could actually escalate into a broader transatlantic trade dispute. And on to some sports news now. Global football icon Lionel Messi visited Vantara, a wildlife rescue, rehabilitation and conservation center founded by Anant Ambani in Gujarat's Jamnagar last night during his GOAT Tour 2025. So he participated in traditional rituals and also interacted with animals. Photos from his visit have been released by Reliance and show Messi participating in Ganesh Puja, Hanuman Puja and Shiv Abhishek at the temple. So Messi was accompanied by his Inter Miami teammates Luis Suarez and Rodrigo De Paul. So this was the final leg of Messi's India's visit. Now, the Academy has unveiled shortlists for 12 categories ahead of the 2026 Oscars, and Indian film Homebound has earned a coveted spot. So, directed by Neeraj Ghewan and starring Ishan Khattar, Vishal Jetwa and Janhvi Kapoor, has made the list in the Best International Feature Film category out of 15 contenders shortlisted worldwide. So final nominations will be announced on January 22nd of 2026, with winners revealed at the Oscar ceremony in March. With that, viewers, it's a wrap on Market Express. Thanks for staying with us as we track the key stocks and market-moving developments through the session. For all the latest market updates and deeper insights, stay tuned to NDTV Profit. I'm Himakshi Bhogna. Thanks for watching.
Very warm welcome to Walk the Talk. I'm joined by one of the world's top foreign affairs gurus, Fareed Zakaria. Welcome.
It takes decades to build trust and it takes moments to break trust.
The United States recently came out with a new security strategy doctrine.
In this moment of extraordinary power and dominance, Trump's vision of America in the world is to retreat, to shrink, to shed its influence, make America a regional power again. For 80 years it's been a global power. We want to be a regional power.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
What does Sufism mean to you?
Sufism is about love. Higher ideals are more fascinating than normal love song or anything. Talk about Khwaja Mere Khwaja, Kun Faya Kun. It's all about higher ideals. I'm bringing the same spirit.
Well, wearing an N95 mask in winters in Delhi is as essential as wearing warm clothes. Over the years, we have seen things evolve. Delhi, which was majorly known for Delhi ki sardi, but now Delhi is known for Delhi ka pollution. Over the past few years, the situation has worsened so much that even right now as we speak, the AQI levels across different stations in Delhi NCR are shooting up. The government is doing whatever it can, may it be the Delhi government or may it be the union government, but right now I'm bunched by a host of startup founders that have come together as one team to figure out that how we can come together as one and curb the pollution. First of all, Ms. Shraddha Sharma, I would like to talk to you. What is the entire project all about? How come 40 startup founders have come under one roof?
Yes, actually, they are not 40. There are 1,000 people who have come under one roof. I moved to Delhi very recently, and there was a sense of helplessness that was unexpected. And I thought that what should we do? And then through Bharat Project, thousands of founders, investors, and people have come together together, because we can't just be cribbing and saying that ye hai. Matlab, what is the solution? And startups are known for solutions. Startups day in and day out work on this. So how do you get the smartest people under one roof and make this happen? And that's happening now with this project, and you'll meet some very outstanding people. What is also very what I would like to highlight is that any solution at scale in our country needs to involve the authorities and founders and solution providers and all these change makers, all of us coming together as 1,000 people are ready to help, support, assist the government in solving this issue.
Ma'am, but if we look at the timing, since Delhi pollution is not new, people in the city are reeling under pollution from a very, very long time. Yes. So why it took the industry so long to come together on this?
मेरा मानना है कि शुरुआत हम सबको खुद करना होगा. मैं तो अभी 1 महीने पहले दिल्ली आई हूँ और मुझे लगा कि मतलब दुखी होने से क्या होगा, मतलब सांस नहीं लिया जा रहा था और सोल्यूशन हमें खुद करना होगा. तो किसी और के बारे में नहीं कहना चाहूँगी कि इंडस्ट्री ने क्या किया, लोगों ने क्या किया. एक चीज़ कहना चाहूँगी कि सबके अंदर वो आग है, तुम्हारे मेरे हम सबके अंदर है कि सोल्यूशन करना है. मे बी वी जस्ट नीडेड समवन टू जस्ट ब्रिंग अस ऑल टुगेदर, और आज आगे हैं. एंड टुडे आई वुड से as we end December 2025, we are all committed. This bunch of 1,000 people, we are committed कि 2026 we are not going to see the same AQI, and this is not just going to be a story or a social media angst and post. We will solve, and I had the great opportunity of meeting the Honorable Chief Minister 2 days back at an award ceremony, and I told her about this initiative and all of us coming together, and she was very encouraged, and she said that she's going to meet all of us also.
Mr. Vishal, you are the founder of Quick Ride, which is a ride-sharing app. So what are you doing in order to curb the pollution?
Sir, so carpooling is an initiative which can be easily be implemented. It is a practice. It doesn't require any investment, doesn't require any money, and it is all about people coming together and sharing the ride together. So how do we implement is, let's say if I'm going to office today, I see first whether there are any people who are going from my area in the same direction. I join them and leave my car behind. If I don't find any matches, I take my car and share my empty seats, right? So that way I can reduce number of vehicles and reduce pollution. In Delhi, there are 75 to 80 active vehicles are there, right? And every year 7 to 8 lakh vehicles are getting added, and they are contributing to pollution. So if these 7 lakh vehicles out of 75 vehicles, 7 lakh vehicles starts carpooling, we can at least offset the new number of vehicles which are getting added and reduce the pollution. So that's the advantage of carpooling that we have. Quick Ride, we have made it configurable. It can very safe. 45% of our users are ladies, right? It is safe, it is customizable. If I want to travel with same gender people, I can travel with same gender, same company I can travel, only verified people I can travel. So a lot of security features are there which makes Quick Ride a very good solution for adopting carpooling.
Mr. Ishanand, you are a VC, and I'm sure that over the course of the past many years, there would have been many startup founders coming out with some or the other, anti-pollution solution. How much have you invested in curbing the pollution till now, and how do you plan to invest further?
Okay. So firstly, what I would say is it takes somebody to come out and speak about a problem right from the bottom of your heart. I think Shraddha has done that. It's taken all of us along. When I heard about this project first, my first reaction was within 30 seconds, I pressed the button and I said, I want to be part of this in whichever way possible. So we have funds. We have a fund in Europe called iCapital Ventures. We have one in Singapore called EST Growmore. And we have a circular economy, automobile-focused startup which is based out of Switzerland and which has gone viral in 4 countries. We have brought it to India and we've got 20,000 subscribers already. We want all these to be actively supporting this venture. Now, from an investment perspective, we have supported clean tech, we have supported agri-tech, we've supported carbon capture, and we've supported all these pieces around the world. Numbers for various confidentiality purposes I will not take, but we're actively supporting people in these spaces. Delhi has this problem. Our focus is to build an ecosystem. Our focus is to support an ecosystem. The innovator, the startup, is always good at what they do. They've developed expertise, they've developed a focus. Our problem is, do they always get support? They don't always get support. So our part in this is we want to make sure that every innovator, every startup, or every good initiative that needs to be taken up the curve and also scaled not just within the country, but also outside. Because at the end of the day, if a startup is not profitable, it will not survive. So our focus is to look at this entire ecosystem. Our focus is to make sure that whatever support, be it in terms of money, be it in terms of resources, be it in terms of connects, be it in terms of technology, be it in terms of good mentoring and good people who can help them put together this ecosystem, is available to them. Yeah, money will come. It's not just us. I can bring 10 others with me who will be very keen to put in money into startups that are innovative, that are solving a problem, and that are scalable. So I think our focus is that we are very committed to this. We are very committed to bringing in the best from around the world, not just locally, to help us solve our problems that Delhi currently has. And for that, I think the Bharat project, nothing like it. Thank you.
Mr. Singh, these days we are seeing that every household or every other office has an air purifier, but this is a very different and unique solution. First of all, please tell us about your startup and how does this really help to curb pollution?
Right. My name is Harjap. Company's name is Oxy Harvest. We are incubated at the Indian Agriculture Research Institute, Pusa, and the Entrepreneurship Cell in IIM Ahmedabad. So about 3 years ago, I was doing a project on trees for the forest department, where using a drone and artificial intelligence, we were counting the trees. And I thought it's a anti-pilferage project where we are counting trees to chori nahi ho. But I realized it was a climate change project. That got me interested in the climate change ecosystem. And I realized that algae is much better and much more efficient and faster than trees in doing carbon sequestration and absorbing pollutants. So we have come up with an air purifier, but it is different from other air purifiers because a normal air purifier would have a HEPA filter or fan. It will purify the air, remove the particulate matter, PM2.5, PM10, but the carbon dioxide in the room keeps getting accumulated. So we are breathing out at the rate of 20 liters per hour carbon dioxide. And if there are many people in a room not ventilated, that gets accumulated. And 900 ppm is the threshold that should be there for a healthy room. But in a metro coach I went, it was 3000 ppm. Not ventilated malls will have 4000, 5000, and it has a lot of health issues.
So how does this really work?
Yeah, so the bottom part is a normal air purifier, what any air purifier will do. But the other two chambers is where we put 8 liters of water and we put nutrient and algae.
So where does the water and algae go?
So there is one chamber here and one chamber here. So this gets entirely filled up with water. Then we introduce the algae and the nutrients from here and put on the air pump, and the air will pass through this, bubble through this and come out from here. So the algae will react with the gas and absorb the carbon dioxide and pollutants because that is nutrient for it, food for it. And from 1 month, it will go from light green to dark green, meaning that it will multiply itself and absorb the carbon dioxide and release the oxygen. And after 1 month, when we test the biomass, we can actually use scientific methods to see what all has been absorbed by it. And then the residue, the algae, gets used for other purposes. And now we're also coming up with outdoor versions so that at scale for a city-wide level, something can be done.
Ma'am, coming back to you, I understand that all of you are coming under one roof as under the Bharat project. But if we talk about the accountability, whose fault is this really is? Is this the Delhi government's fault or the union government's fault not to wake up in time? Because till one point in time, we used to hear that all of this used to happen. Pollution's main cause was stubble burning. But this season, we haven't seen any stubble burning. So what could it really be?
Yeah, in fact, I have to tell you that I had met farmers outside of Delhi, in the outskirts of Delhi, and they said that हमें हमेशा issue बनाया जाता है, मगर इस बार तो हम कह नहीं सकते कि issue हमारी वजह से है. But to your question, who to blame? I would say no one to blame and all of us to blame. So any society, any country comprises of the government, comprises of citizens, civil society, comprises of of the industry, corporates, business people, and comprises at the end a unit as an individual. And if you see, if I have to say that collectively we have failed, right? Because as citizens we are so many, so we could have come together and raised our voice. As industries, so many industries, Delhi is a rich place and there are so many manufacturers, industrialists, big people, rich people. They could have done something, and of course government over the years, but I would say that all of us together as society, we would say we are failing, because one of the posts which went very viral was about a young child, right? And that was a waking up moment where young children in Delhi, they are saying that where is the blue sky? The sky is grey, and they are growing up with that consciousness. Now, who do you think to be blamed? Who should we say that you are responsible or not? It is our children, right? And they are growing up in that, and I think that's why everyone has to be together, and equally anything in the world, if you see changes that have happened, mass scale changes, it's not just the government. We have to also support the government. And one thing I have to call out for the current government and for the Chief Minister, I spoke to her, so this is direct conversation with her, and extremely well intentioned, and she's committed, fully committed to make this happen, and that is something that I want to call out. Also, Honorable Minister Nitin Gadkari ji, he has said that the landfills that we have, which is actually a big contributor, he's actually gone on record to say by 2027, he said that all the landfills and the poison and the pollutants that come out of it will be addressed.
Right. Mr. Vishal, like we were talking earlier, you mentioned that you gave an example that out of 7 lakh cars, if 75 cars, they start carpooling, it will be really good. But do you feel that companies like you require much more scale, and for that do you need some more financial backing? I understand Mr. Ishanand is standing just next to us, but do you feel that VCs should focus more on companies like you?
Yes, certainly. I mean, one is, if VCs back startups like us, it gives validation to our idea that, we are in right direction. We are trying to make changes. So certainly it makes a huge difference with VCs backing us and, supporting an initiative like Carpool, which has only positives. Everyone wins in carpooling. Ride giver wins, ride taker wins, city wins, country wins, because, we are importing less fuel from the Gulf countries. So it's very good to see this Bharat project coming up in very short time. So many people have gathered together, and as ma'am said that शुरुआत हमसे होनी चाहिए. So what we can do in our capacity, we should start doing that.
Yes, ma'am.
I have to make a point, when it comes to investors, VCs, we should not forget that VCs are here to make money, to make profits, right? Like, let's be very clear, NDTV Profit, it is about making profit. And to expect VCs to have this kind of a philanthropic investment, I think it's also being a little hard on the investors. And the other point, again in Bharat Project, a change that we want to bring is, why not people like us in India? Why can't we have a mechanism? And that is again something that I want to and we want to drive this year, is that why can't someone like us, we have little bit of money, all of us can, why can't we crowd fund innovative ideas and solutions? That is prohibited right now in our country. We can't. So we are all relying on a very small bunch of investors to solve large, massive societal problems which involves all of us.
Right. So do you agree with ma'am when she spoke about that VCs just look for profits, but on humanitarian grounds, does the situation really change a bit?
So I'll tell you, there are two perspectives to this. VCs look for profit, but they're also willing to do some amount of philanthropy. Okay? However, at the end of the day, VCs are handling somebody's money. It's not coming out of their own pockets. They're handling investor money. They have committed returns. So there has to be a very delicate balance, and like Shraddha said, the problem starts with us inside. Okay, we are a land of 1.4 billion people. If out of 1.4 billion people, a small minority can't put together something and keep it at the side and fund initiatives like this, then we have a problem. Then as a country, we're really not looking inwards. We are only looking outwards. Yeah. And I think that's what we're all trying to drive home, yeah. Whether it's crowdfunding or other initiatives, yeah. corporates have a massive CSR budget. Okay, why can't 10 or 20 or 50 of the top nifty 50, for example, come together and say, I will put 0.5%, 1% of my CSR budget or whatever it may be towards making sure that we have a clean country where the skies are nice, the air is good to breathe, we have less rubbish on the roads. We can look more like a Singapore or a Hong Kong or whatever it may be. You know, there are times when I go to even smaller countries and I see they are so nice and clean. You know, people have that civic sense. Yeah, we need to build that in ourselves. VCs are willing to come forward. Okay, VCs, like I said earlier, want to make sure that they pick out innovative technology, they pick out good projects, they help you scale not just within the country, but also take you to other parts of the world. So, you know, the government has started saying it in the last few years, but I've said it for the last 15 years. Make in India for the world. Wherever I went and I spoke in public gatherings, whether in India or outside, my one line was always, make in India for the world. That's what we want to do. Yeah, we have the best people. We have great intelligence. We have people who don't do it here, but who go outside the country and who shine. Why can't that happen here? Okay, so money, I believe there's no dearth of money in this country. And it's available with the right people. It's available with people who matter. Okay, we've just got to find the right ways of coming through. VCs will play their own role. VCs will play their own role. They'll make sure that they go and support all the innovative ideas. They will make sure they support all the scalable ideas, not just within the country. They want to take you all over the world. Yeah, that's how we will make global Indian corporations. One of the goals always has to be that you don't just make a corporation that works within the country. You make a corporation that works around the world. We don't want the Apples and the Ubers of the world. You know, I would say, you know, why can't, you know, Vishal's company be bigger than Uber in years to come? Okay, it's not an easy task. It's a tough ride, but is it doable? It's always doable with the right resources. And we're there to support that. We'll build an ecosystem around us and we'll take it from there.
Coming back to you, Mr. Singh, this is a very innovative solution that you have brought out, but we are in a country which is very cost conscious. If we compare this with a normal air filter, what is the price gap?
Yeah, so the normal air purifier from various brands is about 12,000 rupees. Which is of the similar capacity. We have priced it at 17,000 because it's doing something over and above what a normal air purifier does, which is producing oxygen. So we are pitching it like an air purifier which makes oxygen, and the testing that we've done in the labs in Pusa is that this one unit of 8 liters is equivalent to 15 indoor plants. Our larger outdoor unit is about 17 trees. So that is the scale at which it can work. And a tree will start working once it matures. This will start working the second or third day itself, producing that much oxygen and reducing the pollutants.
But nowadays we are seeing that pollution is not just a rich man's problem. Even the poor people that don't earn much, even they are under the severe pollution. So would you do certain kind of a CSR kind of initiative, or probably take it to those places where there is a poor household area?
Right. So the outdoor solution that I was talking about, so we pitched it to some RWAs. So they were skeptical about it. So we are going to do it with CSR support, where I will select in Gurgaon or in Delhi a slum area. Slum area where the Juggi Jhopadis don't even have windows, so they can't even use an air purifier. So we have a system which will get installed on the perimeter, and we will prove that the AQI of that slum area is much lower than the neighboring posh areas. So that is something that we're going to do.
All right, one last quick word from all of you. Ma'am, I've heard all your points. I've heard the VC point as well. You're saying that it is a collective efforts, but in the next coming few months, what can we expect from Bharat Project to work on curbing pollution?
very clearly we are all very committed that whatever we are doing has to lead to an outcome, because anything like this we are putting all our time, effort, passion, and the support from the ecosystem, from the country, is unprecedented. So everyone is looking at us to come with some solution rather than just be a bunch of excited and passionate people who've come together. So one thing that we can expect, and I'm hoping, and through your medium, I'm really hoping that we can have some policy intervention which shows in ground changes, in ground result, and that we are very committed. We will knock all the doors. And today what I'm also what I've seen is that the government, the authorities, the bureaucrats are very open to listening. So that is very encouraging for us.
Mr. Vishal, one last quick word from you.
So through Bharat project, I would like government to support an initiative like carpooling, right? So government should take a separate initiative to promote carpooling among the residents and citizens. Singapore has very good, well-defined carpooling definition, and we need that to be implemented. Quick Ride has taken steps, has written to various government agencies to define carpooling as part of Motor Vehicle Act. So Niti Aayog has defined carpooling that when on a private vehicle, when cost is shared, it is not considered for hire. It is not a commercial activity, right? So what we need is, and our founder, Mr. Rao, he has met Honorable Minister Nitin Gadkari ji. He supported this initiative, but what we need is, it has to come in Motor Vehicle Act, so it becomes crystal clear, because sometimes lower level officers, they misinterpret the law, and they try to take it in a different way. So carpooling is an initiative which has to be a win-win situation. Everyone has to start adopting it.
Mr. Anand, one quick word from you.
Sure. So, first and foremost, I think there is money available. We've got to, have quick wins, as Shraddha mentioned. We've got to make sure that the government supports us, because any investor today wants to make sure that if they are putting in money somewhere, it comes under the ambit of government regulations, it's above board, it's legal, and it has some safety and security, because at the end of the day, it's money. And we've got to make sure of that. And secondly, the world is looking at us.
Mr. Singh, the very last word from your side.
Sure. So there are two parts to my business. One is the indoor air purification unit, because that will always be required, because 90% of the time we spend indoors, whether in office or at home. And the indoor air pollution is said to be 3 to 5 times more than the outdoor air pollution. So that is the part of the business I'd like to focus on. The outdoor air, where we are doing initiatives to clean the outdoor air, that part of the business I wish in future shuts down, because I don't want to make a solution to tackle air pollution which should not be there. So that is my last take.
So as you heard, thousands of startup founders have come under one roof, under the Bharat project. Everyone is doing the best that they can, but they expect continuous support from the government. Besides this, they also expect that the government, whatever policies that the government is making, especially to curb air pollution, it should actually be visible on ground. But now time will only tell us that how much time and how much synergy can Bharat project and the government can have together, so that people, especially in Delhi NCR, can breathe healthy air.
What does say 11 years of Modi compare with in a global context?
He's going strong. Part of it is a weak opposition. Part of it is he's very disciplined. This is his life. It's why I've said that Modi is probably the most consequential prime minister since Nehru. And he's reshaped politics. He's reshaped the nature of the kind of master narrative of Indian history.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
What does Sufism mean to you?
Sufism is about love. Higher ideals are more fascinating than normal love song or anything. Talk about Khwaja Mere Khwaja, Kun Faya Kun. It's all about higher ideals. I'm bringing the same spirit to Delhi. So book your tickets from District app. See you Delhi.
...2025 has been a tremendous year for markets, money and milestones. And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
They rule the world. 1 billion hearts. Now, meet the champions who made the nation proud. The Indian women's cricket team at the NDTV Indian of the Year.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी सब विदेश जाते हैं। The best app to use is the NDTV app.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
और रहमान। सोनू निगम के लिए जोरदार तालियां।
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Meeraj, Tamanna and the entire Profit team is also working super hard.
We We are joined by Mr. Anil Agarwal of Vedanta, which has just announced a mega demerger, which has been approved by NCLT. Mr. Agarwal, always a pleasure to welcome you on NDTV Profit. And this has been your dream for over a decade, Mr. Agarwal. In fact, in my interview more than 10 years back, you had said that each of the verticals will be listed separately, and that was your dream. How satisfied are you, and how will it create the shareholder value with this demerger?
I'm very pleased that you remember, because apart from you, I didn't say this word to anybody.
That's right.
And you carry on in your mind till today. So very nice. See, this is the need of our India is very important. So we need, but it has a reflection. This is the most tax-paying company. You know, we have paid almost 5 lakh crore of tax, 50,000 crore every year, tax-paying, largest job creation, because manufacturing creates phenomenal job.
That's right. And Mr. Agarwal, you have been one of the biggest, tallest names when it comes to metal and mining and commodities. Now that you have 5 companies and you have also stabilized a large part of your repayment schedule for Vedanta Resources, the overseas company which is in the private domain. Now with this restructuring of separate entities, what is the next step? Because in the mix of these 5 companies, you have 2 companies which are very profitable and the others are still at a nascent stage, at a very small stage. How will shareholders gain by holding stake in the companies of oil and gas, power, as well as steel and ferrous?
Let's start. Number 1 company which has AGL, Hindustan Zinc will have at the moment producing 1.2 million ton, going to produce 3 million ton. It has 1 million ton in South Africa and 2 million ton here. We have silver. India never produced silver.
That's right.
We invented producing silver.
Yes.
And then today we produce 800 ton of silver, 25% requirement of India. We are going to cater 100% requirement of India for 3,000 ton in 3 years' time.
Yes.
Aluminium, we are producing 30 lakh ton today. And we have a large mine, and we started that work. We are producing green aluminium plant, probably largest in the world, for 30 lakh ton. But demand is so high, whether it's a zinc or whether it's aluminium, is a double-digit demand, which is growing. Oil and gas is very close to my heart. The most important thing, most exciting thing is the oil and gas. Government policy has announced that everything has been dismantled, whereby it's literally like a self-sufficient, long lease of mine till the time the reserves are there, no approvals are required. So I'm looking at oil and gas to deploy 25 rigs at it, working on it, to produce 300,000 barrel to 500,000 barrel, to make it a 1 million barrel, and that in 4 to 5 years time. And it's an investment. Then you have iron and steel. Nothing is more important than the iron and steel. We are largest producer of raw material, iron ore. We were the largest producer, and ESL, steel company, has complete infrastructure to produce green steel, because we have complete availability of gas.
Yes,
we have special steel. So this is the steel. Power, I'm very, very excited, because our cost of power is going to be lowest. All are on the pit head of the coal. So we are going to produce 20,000 megawatt power
Right.
On the this power plant, which will be again very, very exciting. With the lowest power cost,
Yes.
because of the core proximity and plant what we have.
Right.
So all these 5 companies, I'm going to be demerged, and I'm looking as a vision that
Yes.
each company
Yes.
has the potential and will be
Yes.
like a Vedanta by itself.
Yes.
It will
So,
have the same kind of profitability
Right.
because of demerge and merge. If
Right.
it is merged, as it is, the multiples are very small.
right.
But
So,
when
Mr. Agarwal, I got it.
Go up.
Yes,
Yeah.
so you answered my question that what is there for the stakeholders of smaller companies like oil and gas, power as well as steel compared to aluminium and Vedanta Limited, which are much bigger. Now, the second question I want to ask you is that these companies, amongst all these companies, which one do you think is going to be the fastest growing segment going forward apart from the highly profitable aluminium?
All 5.
Okay.
All 5. Tell me there's maybe 5% difference.
All right.
Zinc is good. Zinc, aluminium, all this is going to things. The demand supply is so much in my sector.
All right. So
Yeah.
all 5 are going to be the growth engines for Vedanta Group on the whole. But Mr. Agarwal, I wanted to understand one thing. With this demerger process, do you think it will become much easier to focus on core business even in terms of fundraising, joint ventures and partnerships for the growth of each individual business? Is that part of the plan?
Each business is throwing so much of cash. Each business has a potential of throwing, whether it's the aluminium, whether it's the zinc, oil and gas, iron and steel. Iron ore is doing so well, and the power. So there will never be a constraint on the capex. And people will be queuing up because we have the capability. We have raised $35 billion. So with our balance sheet, there will never be a constraint. So far, we have not taken joint venture as a partner, but as it goes, we'll see what happens.
Right. And my final... Right.
Yeah.
And also I wanted to understand the dividend policy will remain same, and the royalty policy also presently that you're following, will those remain same for the company even after demerger?
I live for the dividend. Dividend policy, Vedanta will always be integral part. Dividend policy will always be, we are dividend paying company, will remain always dividend paying company. Very good. Thank you.
All right. Thank you so much, Mr. Agarwal, for joining.
All the best.
And congratulations.
All the
Thank
best.
you.
Catch up. Thank you.
Very warm welcome to Walk the Talk. I'm joined by one of the world's top foreign affairs gurus, Fareed Zakaria. Welcome.
It takes decades to build trust, and it takes moments to break trust.
The United States recently came out with a new security strategy doctrine.
In this moment of extraordinary power and dominance, Trump's vision of America in the world is to retreat, to shrink, to shed its influence, make America a regional power again. For 80 years it's been a global power. We want to be a regional power.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
What does Sufism mean to you?
Sufism is about love. Higher ideals are more fascinating than normal love song or anything. Talk about Khwaja Mere Khwaja, Kun Faya Kun. It's all about higher ideals. I'm bringing the same spirit to Delhi. So book your tickets from District app. See you Delhi.
...2025 has been a tremendous year for markets, money and milestones. And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी सब विदेश जाते हैं। The best app to use is the NDTV app.
They rule the world. 1 billion hearts now.
Hello and welcome to KYC. I am Sharad Dubey and let's start the show. Welcome to NDTV Profit. And first of all let's guess the company for our segment KYC. There are some hints which I had given earlier and I'm going to repeat them. It's a recently listed small cap IT company, but interestingly it works in the education segment, offering a lot of digital solutions in this segment. It also includes learning. But the stock is down 25% since its listing in November. It's a newly listed company, hardly a history of 2 odd months coming in, and that company would be in focus. And the company is Excelsoft Technologies. That's the first question we'll be asking. Why are we getting this company just after its IPO? What's the important news flow coming in? What will be the sustainable margins and revenue guidance for the company? That's what we are interested. Company recently come out with its Q2 numbers also. Further acquisition plans in the edtech space, company had mentioned. So we'll be asking them because company is having a significant cash buffer as well. IPO proceeds was largely used on the Mysore property. So some unanswered questions are there regarding the proceeds and what the incremental benefit would be coming in. AI Levit, that's a new product which I saw in the presentations. What will be the contribution for this? Because AI is very much important for even a product related or a SaaS company like Excelsoft. And which geographies will the company target? The expansion part. Generally, we see the American, European markets are there, but are they targeting some other markets? Is the Asia or Middle East region? That is something which we'll ask the company and their expansion plans as well. So these are the key points which we will be actually looking out for. But going ahead, let's just give the more details about the company. It's a very newly listed company, I would say. So there is still requires some time an effort to actually understand what this company is all about. The company was founded in June 12, 2000. That's an interesting date as well. That dot-com bubble crash area time was there. Also looking at the company, they're focusing on assessment, proctoring and learning solutions. Proctoring is of course there for interviews. The location is based in Mysore headquarters. The office is also there in Noida and Hyderabad. That means they are expanding geographically also. Looking at the growth highlights, the revenue was 195 crores in FY23 to FY25. That has gone up, not significantly, but yes, a decent growth, 233 odd crore rupees. Same story goes for PAT, but PAT has done well. So we will be of course asking why this has gone up. Core business is the vertical SaaS, software as a service company, and this is for learning and assessment. That's where we will be looking at. Also, the company serves enterprise clients. The B2B SaaS, it's one of the safest options for a product company, and 103 clients coming across 19 countries. This number is expected to change. Almost 1119 employees are there as of September 2025 as well. Also looking at these numbers, cloud-based platforms, these are
being done also to address the health sector, the agriculture sector and the nuclear sector. फिर शायद सुप्रिया जी का कहना था कि रिसर्च को क्यों छोड़ा. ऐसा नहीं है सुप्रिया जी, इस बिल में प्रावधान है. I'll just give you the section also where we have opened up the research to the private sector, which is of course in acknowledgement of the fact that we have several private sector institutes which are doing excellent research in several science domains. So why not get their benefit even in the atomic energy sector? अब अगर हमें उस लक्ष्य की तरफ बढ़ना है, क्योंकि इस समय हमारे पास 8.9 गीगावाट कैपेसिटी है, वो भी 2014 के मुकाबले में दुगने से अधिक हुई. उस समय हम 4.7 गीगावाट थे और हमारे पास 25 रिएक्टर है, जिसमें से एक अभी पूरी तरह फंक्शनल नहीं है. ऑन दी अदर हैंड, एक सदस्य ने ठीक फरमाया कि यूएसए इज 97 गीगावाट with 94 reactors, China is 55 gigawatt with 57 reactors. और हमारी contribution to the overall requirement is just 3%. And of course our renewable energy will also go up, but it may not be able to serve all the purposes, particularly in an era where we are going to go in a big way for the artificial intelligence, data processes and other things. And therefore, पहले तो ये समझना ज़रूरी था कि हमें what were the constraints in spite of all this. It is this government actually which in 2015 took the decision of opening the atomic energy sector to joint ventures, albeit joint ventures with public sector units, not with private. उससे पहले तो ये भी नहीं था. एक गोपनीयता के पर्दे में इस तरह से बंद रखा गया था कि हमने अपने साधनों को सीमित कर दिया. We became prisoners of our limited resources. लेकिन अब जब लगा कि एज आई सेड वी हैव टू फॉलो द ग्लोबल स्ट्रेटजीज, तो हमारी कंस्ट्रेंट्स थी कि हमारी इंस्टॉल्ड कैपेसिटी बढ़ाई जाए, हमारे रिसोर्सेज में बढ़ावा हो, हमारे गेस्टेशनल पीरियड्स रैशनलाइज हों, हमारे कुछ एम्बार्गोज विच कुड बी डन अवे, बिकॉज दिस इज द गवर्नमेंट विच हैज़ बीन वेरी फोर्थकमिंग इन ऑल्सो डूइंग अवे विद सम ऑफ द रूल्स विच हैड लॉस्ट देयर रेलिवेंस with the passage of time. And therefore, as a part of this entire thinking, the entire idea was to bring about an enabling law for an enabling ecosystem without, and underline, without of course compromising the security concerns of the nation. और इसलिए इन दोनों बिलों को और रेगुलेटरी बोर्ड के प्रावधान को ध्यान में रखते हुए एक साल तक बड़ी गंभीर मंथन भी हुआ, चिंतन भी हुआ. There were series of meetings at different levels, interministerial level, intersecretary level, with the scientific experts, with the industrial leaders, industry leaders, with stakeholders. We tried to understand their concerns, their requirements, and the idea was simply to move on, not to score political points, and I never meant to so. बट जो कि बार बार कहा गया कि नेहरू जी ने किया और आपने क्या किया, तो मैंने वो बताया कि जो नेहरू जी के किए हुए की ही नुक्ताचीनी की गई. सो विदाउट डिनाइंग व्हाट ही हैज डन, वी आर ओनली, बिल्कुल फाउंडेशन भी उन्होंने रखी, पहला रिएक्टर भी उन्होंने लगाया, उसको इंश्योरेंस में नहीं रखने का काम भी उन्होंने किया। हाँ, हम थे नहीं उस वक्त, जब हम आए तो हमने सजेशन दिया, लेकिन पहले चूंकि इसलिए बिकॉज आई वांट टू कम बैक टू दी नॉन पॉलिटिकल लाइन, इसलिए मैंने कहा पहले पॉलिटिकल स्कोरिंग वाला काम समाप्त हो जाए। अब इसमें इस बिल में 10 चैप्टर्स हैं, उसमें मैं सब के टाइटल्स में नहीं जाऊंगा, लेकिन जो चैप्टर 1 है उसमें न्यूक्लियर डैमेज को, जैसे किसी माननीय सदस्य ने कहा कि एनवायरनमेंट का क्या हुआ, फॉर द फर्स्ट टाइम द बिल actually finds a mention of the environmental damage and the economic losses as a part of the overall damage definition. And the regulatory scope has also been defined, covering medicine, agriculture, industry, ionizing radiations, because we have come a long way as far as the nuclear medicine is concerned. Supriya ji will bear me out. The Tata Memorial Center in Mumbai is one of the best in the world today. And I am proud to share with this house that very recently, in the last few years, 4-5 years, we are among the first to have come out with a nuclear medicine remedy for acute lymphoblastic leukemia for children, which is a kind of a blood cancer for children, and also a nuclear medicine driven remedy for, or possible remedy for prostatic cancers, which is on the increase with the aging and the long span of India's population that we are seeing these days. आप बात नहीं समझे, मैं न्यूक्लियर मेडिसिन की बात कर रहा हूं। अब ये पॉलिटिकल बात पे आप आ गए, अब उसको भी आप स्केल करने की जरूरत है। या आई एम कमिंग टू दैट। टाटा की भी एक्सपेंशन इसी सरकार ने की। इफ यू वांट टू बी पॉलिटिकल, टुडे वी हैव 11 टाटा मेमोरियल हॉस्पिटल्स इन द कंट्री, आउट ऑफ विच 9 आर फंक्शनल। अब मैं आपको 9 फंक्शनल है।
बेटे बेटे जवाब दोगे और ये बोलेंगे और ये बोलेंगे, आप किसी का जवाब।
और न्यूक्लियर ग्रिड हमने स्थापित की है, सॉरी कैंसर ग्रिड स्थापित की है, जिसमें 300 से अधिक अस्पतालों में किसी न किसी तरह से टाटा मेमोरियल सेंटर की कोई ना कोई कैंसर केयर सुविधा प्रोवाइड की है, वो भी इसी सरकार ने की है। लेकिन जैसा आपने ठीक कहा कि उसको भी आप स्केल करना जरूरी है, जैसे दादा कह रहा है, तो कहां से करेंगे? और इसलिए प्राइवेट पार्टिसिपेशन के प्रावधान का अध्ययन करने का प्रयास हुआ। अब जहां तक सेक्शन 3(1) है, तो उसमें जैसे सब जानते हैं, उसमें दोहराने की आवश्यकता नहीं है। उसमें कोई भी कंपनी उसका हिस्सा बन सकती है, जॉइंट वेंचर भी हो सकता है, जॉइंट वेंचर बिटवीन पब्लिक सेक्टर यूनिट एज वेल एज नॉन गवर्नमेंट एंटिटी भी हो सकता है। और सेक्शन 3(2) में अब ये कहा गया, अच्छा एक और बात कही गई कि साहब ये आपने स्पेंट फ्यूल की सही तरीके से रख रखाव नहीं किया। अब शायद हमारे दिमाग से निकल गया है कि स्पेंट फ्यूल का एक प्रावधान कायम है। देयर इज अ SOP for some time it is kept within the reactor, then afterwards about close to the reactor, which is called away from reactor, it is put about 10 meters deep for 30-40 years. And during the construction of the plant also, जब नया प्लांट होता है, जो सेफ्टी की बात की गई, हर 3 महीने के बाद उसकी इंस्पेक्शन होती है ड्यूरिंग कंस्ट्रक्शन। जब कंस्ट्रक्शन हो जाती है तो हर 6 महीने बाद उसकी इंस्पेक्शन होती है, इवन व्हेन इट बिकम्स फंक्शनल। फिर हर 5 साल के बाद लाइसेंस रिन्यू होता है, और उसके अलावा जो इंटरनेशनल एटॉमिक एनर्जी एजेंसी है उसकी भी सुपरविजन रहती है। अब ये SOP कौन बना गया? आपको जानकर अच्छा लगेगा, पंडित जवाहरलाल नेहरू 1962 के एक्ट में। अब आप कह रहे हैं इसमें गलती निकाल रहे हैं। ये वही SOP है जो 1962 की चल रही है, इस बिल में नई नहीं लाई गई। इन योर हेस्ट possibly to oppose the bill आपने इसको किया। The same safety measures are in place which were there in the Atomic Energy Act of 1962 under the then Prime Minister. अब कुछ सेफगार्ड्स रखे गए हैं, ये भी कहा गया कि सिक्योरिटी कंसर्न्स नहीं है। ऑपरेशन के लिए इजाजत होगी प्राइवेट पार्टिसिपेशन की भी, फैब्रिकेशन ऑफ न्यूक्लियर फ्यूल की भी होगी, ट्रांसपोर्टेशन के लिए, इंपोर्ट एक्सपोर्ट के लिए। लेकिन जिन बातों के लिए सेक्शन आपका जिन बातों के लिए पाबंदी रहेगी या कंस्ट्रेंट रहेगा वो रहेगा कि सोर्स मटेरियल एंड फिसाइल मटेरियल इन एनी फॉर्म प्रोड्यूस विद इन इंडिया रिपोर्टेड शैल रिमेन अंडर द सर्वेलेंस। वो पहले भी था। ये एटॉमिक एनर्जी एक्ट 1962 नेहरू जी छोड़ गए, हमने उसको कायम रखा है। आप कह रहे हैं वो सिक्योरिटी मेजर इज नॉट सफिशिएंट, वो सरकार के ही कंट्रोल में है। The source material and fissile material in any form produced within India or imported shall remain under the surveillance and control of the central government. वो भी है। Spent fuel जिसके बारे में चिंता की गई है, उसको कहीं भी प्राइवेट पार्टी को अलाउ नहीं किया गया उसका चार्ज। चाहे प्राइवेट पार्टी का भी रिएक्टर होगा तो जो स्पेंट फ्यूल है, जो मैंने प्रक्रिया जिसका विवरण किया कि कैसे उसको रखते हैं कुछ सालों बाद, वो सारी जिम्मेवारी सरकार के ही पास रहेगी। द प्राइवेट प्लेयर्स विल नॉट बी अलाउड टू लिफ्ट अप स्पेंट फ्यूल। इसी तरह के यहां तक कि हैवी वाटर, अब हैवी वाटर कोई एक्सप्लोसिव चीज नहीं है, इट इज सिंपली DTO। जो यहाँ केमिस्ट्री पढ़े लिखे हैं उनको पता होगा कि पानी को कहते हैं हाइड्रोजन ऑक्साइड, H2O। ये है DTO, डेट्रॉइट ऑक्साइड। सो इससे थोड़ा सा वो न्यूट्रॉन का एलिमेंट बदलता है उसमें, और उस ज़्यादा देर तक इस्तेमाल हो सकता है, ज़्यादा देर ये कूलेंट का काम कर सकता है, तो इट इज़ प्रेफर्ड। उस पर भी हमने प्राइवेट पार्टी को उसकी जिम्मेवारी से बाहर रखा है।
What does say 11 years of Modi compare with in a global context?
He's going strong. Part of it is a weak opposition. Part of it is he's very disciplined. This is his life. You know, it's why I've said that Modi is probably the most consequential prime minister since Nehru. And he's reshaped politics. He's reshaped the nature of the kind of master narrative of Indian history.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. A pretty significant announcement coming through from the Government of India through a gazetted notification yesterday. And this has to do with how your national pension scheme works. That is, if you are a non-government subscriber. Essentially, the requirement to put 40% of the corpus when you pull it out into an annuity product, that is into a pension product, has been halved. You only need to put 20% now. Let's talk about the implications of that and whether you should consider starting to invest in the NPS now that it seemingly has become more flexible. Joining me to talk about this is Dilshad Bilimoria, who's the Managing Director and Chief Financial Planner of Dilshad Consultants. Dilshad, thanks so much for taking the time. Let's talk about this big change. It only refers to non-government subscribers, does it not? And what is the significance of the change in your opinion?
Yeah, I think it's a big boost and it's come as a breakthrough. In fact, now I would say it's more or less doubled in terms of the commuted amount that you can take. So there are certain rules like depending on the amount. So if, for example, you have an 8 lakhs, lesser than 8 lakhs, and of course you've completed contribution of 15 years and you are at the retirement age of 60, the best news is that you can take the entire lump sum of 100% of whatever you've accumulated as your retirement corpus as a one-time outgo, and this is going to encourage a lot of people to use the NPS, especially the corporate-based NPS, because it provides a dual benefit. It even gives you the benefit in the new tax regime and the old tax regime, and it reduces your taxable income, and it grows as per your basic plus DA. So that's the fantastic thing that has come in newly.
So just to ensure that everyone understands this, right? Let's take an example. If you've accumulated over 12 lakh rupees, this relates to you, right? If you've over a period of time, if you've got a corpus of 12 lakh rupees, and first of all, you can defer this beyond 60 years, that's perfectly fine. But whenever you do decide to pull this out, whereas previously you had to put 40% of whatever you are investing. So take an example of 20 lakh corpus. You would have to put 8 lakh rupees into an annuity product. Now you only have to put 4 lakh rupees. You can withdraw that additional 4 lakh rupees, Dilshad. But the catch here is that 4 lakh rupees is taxable, is it not?
Yes. So now by default, if the accumulated value, like you said, is above 20 lakhs, which is above 12 lakhs, you need to annuitate only 20% of 20 lakhs, which is 4 lakhs. That will be taxable as per your tax slab. The remaining 80% can be commuted, of which 60% is tax-free, and the remaining would be taxable as per your tax slabs.
No. So let's look at the example, right? So in the example of 20 lakhs, Dilshad, just to drive this home, you're talking about 4 lakhs that has to be annuitized. It has to be invested in a pension product. What happens to the remaining 16 lakhs?
So of the 16 lakhs, 60% is tax-free, so which is roughly 9.6 lakhs. And the remaining about 8 odd lakhs will be taxable and can be commuted. So basically 80%, the entire 16 lakhs can be withdrawn. Part of it is going to be taxable, part of it will be tax-free.
Interesting. Okay, so we're very clear about how that works. Now you were mentioning the corporate NPS, which is something that is very lucrative even for those that have moved to the new tax regime, because the government rules provide for your employer contributing to the NPS on your behalf and that amount being deducted from your taxable income. How does this work, and what are the limits to pay attention to?
Yeah, it's a great thing. In fact, we encourage it when corporate benefits are given. This is the 80 B2 rule of the NPS deduction, and not the self contribution by an individual. The greatest benefit here, Alex, is that as your salary income increases, which is your basic plus DA increases, up to 14% of this can be deductible from the taxable income. And that amount is used to create your NPS account. it benefits both the employer and the employee, because for the employer, it's a deduction that they show in their books of accounts. And for the employee, their annuity or their corpus is actually growing every year as the salary increases. So say I get a 10% hike the next year, my salary contribution the contribution to the NPS is going to also increase next year.
And you can do this alongside your EPF contribution, Dilshad?
Yes.
Okay.
You can do it up to a limit of 7 lakhs between EPF, superannuation and NPS.
Okay, so that's the limit to bear in mind, particularly those higher salary salary brackets, right? It's something that you should definitely watch for. Now, the question is, since it's now much more attractive, Dilshad, to invest in the NPS, do you suggest that everybody should consider doing this? Or do you think that it's still restrictive and still more can be done? This is the government listening to a lot of people clamoring for it to be made easier to operate, isn't it?
Absolutely. I think it's a fantastic retirement saving tool, but I would think, the lock-in is still a kind of deterrent. There are kind of options that people look for in terms of liquidity, tax efficiency, which is again, a bit restricted, but returns wise, I think it is on par, compared to any other mutual fund, because you have a host of private players kind of offering these products as well. But I think in terms of the lock-in, and now of course it has increased, the benefits have increased. But if, for example, you're creating a small NPS corpus which is lesser than 8 lakhs, I think it's definitely hands down a win for you. And the other advantage is that the cost, right? The cost is so less compared to any other retirement products that we have today in the market.
Sure. Just to drive home the point on withdrawal and lock-in, this is either 15 years or the age of 60, correct?
That's correct.
And yes, any other reasons why you can withdraw before the completion of 15 years?
Yes, under 3 to 4 circumstances. One is if there is a medical emergency. 2 is if you're doing a construction of your house. 3 is if you're getting any of your children married. And 4 is any other emergency of a job loss. Okay. Under these circumstances, you can withdraw up to 4 times in the tenure of up to 60 years, but there has to be gaps of 4 years after every withdrawal.
But the last point, right, and you said that returns are more or less comparable with your mutual funds, particularly if you consider the post-tax, post-cost returns that somebody might generate from an NPS, right? But how do you select which one to go for? Do you gravitate towards the larger service providers or the larger entities?
Right. I would look at consistency in performance as one major, decision factor. And you have Kotak, you have HDFC, ICICI, UTI, SBI, etc. Each of these have their own philosophy, their own limits of how much you can invest in which securities, etc. And I would say look at least a 5-year kind of performance and then take a call in terms of deciding which provider you would go with.
Fantastic. All right, Dilshad, thanks so much for taking the time today. Absolute pleasure having you on the program.
Thank you so much. Thank you.
Now, as an exercise, we looked at the performance of mutual funds in a few key categories over the course of 2025, culminating in last Friday, that is the 12th of December. That pretty much gives you a sense of the entire year. I thought about asking my next guest what he thinks about these outperformers and underperformers and what you can take into the next year. Listen in. So first take a look at the flexi cap category, and you've seen some of the pretty old schemes in the category. The top performing schemes are HDFC Flexi Cap, followed by Tata, followed by ICICI Pru, and then you have Aditya Birla Sun Life and Bandhan. The average outperformance or the outperformance of these 5 is anywhere between 2 percentage points and 4.4 percentage points when you compare it with the benchmark, which is the NSE 500. But when you look at the losers, there is one that really stands out, and we'll find out why this degree of underperformance has taken place, and that is Samco Flexi Cap Fund. The underperformance is to the extent of 26% or more than that as of the 12th of December. Shriram Flexi Cap Fund, JM Flexi Cap Fund, and a couple of more stand out among those that have actually lost ground. What is interesting in the next category is the multi-cap category. And this is a category that actually outperformed flexi caps in previous years. And that's because of an outperformance in the broader markets that hasn't taken place over the course of the year so far, that is 2025, as a result of which the returns of the top performing funds are actually significantly lower than what you saw for the flexi cap schemes. The top performing fund is the Mirai Asset Multi-Cap Fund with gains of about 8% or thereabouts, followed by Grow with 7%, and the fifth best performer is Kotak with a gain of 5%, and the outperformance to the benchmark is not very significant for the fifth best performer, only to the extent of about 0.6%. Now the bottom performer once again is Samco Multi-Cap Fund. So clearly there's something that has gone wrong with regard to the selection that they've had in these two categories. And you have a significant underperformance for the others as well. It's not the easiest space, particularly when the alpha in past years has been generated by the broader segment. Now take a look at a few others. In the small cap category, there are a few very interesting takeaways. I won't get into the names, you'll see that on the screen, but there were only 2 schemes in the entire category that managed a positive return, and that too the best performing scheme only managed about 3% gains. But interestingly, 21 schemes out of the entire category have managed to beat the benchmark. So they've lost ground. They might have delivered negative returns, but they've still beaten the benchmark. The average returns was minus 4.96% for the category as a whole, and conservatism has actually worked. We'll speak about that with regard to quantum. And finally, for mid-cap, it's more or less a similar situation, but you have a lot more schemes that have performed better. 16 out of 29 schemes have actually performed better than average, and the average returns of the mid-cap category was only about 1.6%. So you've seen a significant underperformance for broader market schemes. What does this mean for 2026 though? Let's get in Mohit Gang, who's the co-founder and chief executive officer of Moneyfront, to tell you. Mohit, I don't know what you thought about my data collection skills, but what stands out to you about the list that I have, and also the takeaways that I had, which is broader market has underperformed, and that's reflective in the diversified schemes as well.
Hi Alex, thank you very much, and let me tell you with full amount of confidence that you have beaten all of us hands down when it comes to data collections.
No, but what do you think about the data?
No, it's a brilliant data, Alex, and has to be analyzed threadbare, to be very honest. I think, look, if you just see the stark trend, and I'll just encapsulate the broader trend first, and then perhaps we can dive down into the details. In the large cap category, we'll start with that. In the large cap category, there are only few, I think only 2 schemes who have beaten the benchmark. Rest every other scheme has underperformed the benchmark, and that speaks volumes about having confidence in active management out there, right? But given the way the markets have, large cap category has yet delivered the best performing year compared to any other category. So the returns out there are fantastic. Then comes flexi cap, which perhaps is again the second largest category in the market. And out there, the results are very, very startling, honestly. I think the big boys, the big daddies of the street have done exceedingly well, which is the HDFCs, the Tata, the ICICI, the Birlas. Honestly, the old big boys of the street, they've all done great out there. And the newer entities and the smaller entities who kind of try and assume a lot of risk, work with smaller AUMs, work at higher expense ratios, like the Samcos, the JMs of the world, have suffered a lot. Even in multi-cap category, I think the trend speaks for itself. That is, the big boys have, and few of the newer entrants have done reasonably well, but the overperformance or the outperformance on the benchmark is not very stark or very large. Mid and small, you have a lot many funds delivering negative returns, yet the outperformance over the index is good because the index itself in the small cap category hasn't done much. It's negative 7% YTD. So obviously there are schemes which have done better, but there is nothing to write home about, as in there are no schemes which have like exceptionally delivered positive returns in the category. They're all either flattish or negative to a certain extent. But yes, the outperformance on the index from the active category is quite evident out there in that category.
Okay, so you've summed it up. By the way, I was looking at the Amphi numbers, and FlexiCap is once again, just by a hair's breadth,
the largest category. Mohit, this is quite interesting, right? Because sectoral and thematic had become the largest, but now, as per the latest data, I'm looking at the screen right now, it's 5.45 lakh crore for flexi cap yet again, compared with 5.38 lakh crore for the sectoral and thematic category. But having said that, I want to talk about this because I've asked this to a lot of people, even fund managers lately, Mohit, which is that a lot of people are looking at equity markets and the returns over the last 1 year and saying, while we're for the benchmark Nifty 50 not too far away from all-time highs, our portfolios have not done well, and that is evidenced in what we've seen on the screen right now, right? So how do you take that and contextualize it with the expectations heading into next year? Do things, in your opinion, change materially?
Look, Alex, I think there's a famous saying in the markets that investment returns are never the investor returns, right? And for the two to kind of merge together, it requires a lot of patience and a very, very long time horizon, because investors get into the market at different time frames with different expectations. And honestly, in my personal experience, I have seen most of the investors coming in the markets with the best performing funds of the last few years, right? And that strategy never pays off when it comes to mutual funds specifically, because your previous winners, previous 1 or 2 year winners will definitely rotate and change. The fund manager isn't changing his portfolio completely because the portfolios are huge in size. You can't completely move an elephant 360 degree around. So any stocks which have run up in the portfolio are bound to go through a different cycle in the next year, and that fund will typically start lagging a little, right? So very rarely would you find a fund which is consistently outperforming, or a consistently quartile one fund for 3 years put together, let's say, right? There could be some instances, but very rare and few. Right? So that's the reason why investors are never happy in a market cycle, and they have to kind of expand their time horizon to figure out what the actual market cycle is, and then investment returns to match with their expectations. So that's perhaps one of the reasons, Alex, why we find so much of dissonance. Heading into
No, I do want to ask though, heading into next year, make that point and then I'll come back to you.
Yeah, I think your second part was heading into the next year, does this change? Look, my sense is no, it doesn't change dramatically, though we have gone through a huge time correction in the market. But my sense is markets don't look like they are giving you a momentum-driven rally, right? Unless you have a broad-based momentum-driven rally, that's when everyone is happy. You, me, investors, all categories, all fund managers, everyone's happy if there are markets like 2023 and 24. But honestly, I don't see that happening. It will still remain a stock pickers market. It will still remain very, very rotating kind of a market. If you see 2025, we have seen in patches PSU doing well. We have seen in patches defense doing well, pharma doing well. Then again, last 1 quarter, IT is doing well. There's not been a singular broad-based pattern in the market, right? So, and I think that continues to be the story for 2026 also, unless something dramatic happens in the market. But if there is no momentum and there is no particular style bias in the market, then we are headed for tough times, and it will remain a very, very, single digit kind of a market where only few will outperform and the broader market will still just be around averages.
There are still a few takeaways that we can take from this, Mohit, and ultimately it comes to, should you make a decision or not? And I'm looking at both the flexi cap category and the multi-cap category and the underperformers, right? You have Samco, and something clearly has gone wrong here. 19.6% decline on a year-to-date basis as of Friday, that is 12th of December. Have you looked at the scheme? Do you see any reason why this is taking place? Because they are the worst performers in the multi-cap category as well.
Yeah, I think there are no takeaways, but there are learnings, Alex, honestly. And the learnings are there for everyone to see that you need an established track record and performance. Don't jump into categories or schemes just because they are making too much of noise on the media, on television, on otherwise, right? And I think if you just specifically look at Samco, minus 19% is not a small number, Alex, when the category average is 7. So it's a 26% divergence. That's huge. That's huge by any benchmark.
So then do you, and I know that you don't take decisions, Mohit, based on just 1 year, but in this situation with this degree of underperformance, and it's not just Samco, right? You would look at other schemes as well.
do you then decide to have incremental allocations elsewhere? Do you pull the plug?
Oh, you have to, I think, have a frank conversation with the fund management team here. Mr. Umesh Mehta has a lot to answer. The Samco FlexiCap fund has only 24 stock portfolio, Alex, and it's a very, very small cap heavy portfolio, right? When you have such a concentrated portfolio and most of your bets go wrong, then you have a lot to answer. You don't have FlexiCap schemes with that kind of a concentration, concentrated style. You might as well call it a focused fund then, right? And once you change the mandate, then obviously the investor expectations around the fund changes dramatically. But on the other hand, the Samco multi-cap fund has 124 stocks. So there's a too long a tail out there with a similar kind of an AUM, right? So I think both the ways they've got the strategy wrong. One, an extremely concentrated, and second, an extremely huge tail with a very large diversification. But in both the cases, they have a very large proportion of mid and small cap and very small large cap. I think that's played against them, to be honest. And second thing is obviously the high expense ratio has played against them. The scheme has a 2.4% expense ratio, which in itself is a lot to recover when you compare any other scheme in the category with a 1.5 kind of an expense ratio. It's a straight 1% negative where you start with, right? So there are multiple reasons to it. They also, as a fund house, focus a lot around quality and less around growth or less around momentum or less around value per se. And I think even the quality cycle has taken a beating. But again, it's a stock pickers market. So as a fund manager, you need to be able to navigate those situations.
So therefore, final takeaways from the schemes that we've spoken about, and I know that you prefer a passive approach in large cap. You actually have made the case for a passive approach even in the mid cap space. So to reorient, would you suggest that you double down on this strategy, and do you have any other takeaways for adjusting your portfolio heading into the end of the year?
Look, my specific takeaway number one will be that don't rely on new schemes and new fund houses. There are many new fund houses which are coming into the market, Alex, right? One has to be extremely careful. You have to be completely aligned to the strategy which the fund house is coming up with. Every PMS or AIF house on the street, every second name is trying to launch a fund house of their own, right? So, and there is only that much space on the shelf. So one has to be extremely discerning in terms of what they are choosing and why. The rationale has to be very clear. The objectives has to match with your financial goals and strategies. That's point number one. Point number two, you have to be cognizant of the fund manager's pedigree and track record. You can't just go with any name on the street just because they're advertising a lot and you see them a lot on the hoardings. You have to be careful of the expense ratio. That's point number three. Point number four is you have to keep analyzing the portfolios. There are signs which are evident in the portfolio. If it's a too focused portfolio, too hugely diversified portfolio, a portfolio of flexi cap where there is no large cap, right? These are all strange signs and signals which one has to be careful of. And my sense is you have to make a balance of passive versus active. I still prefer a good solid mix of both. I'm not for or against either of the strategies, but yes, large cap incrementally remains an index driven strategy. So more passive oriented out there. Mid and small, you can have a mix of active versus passive. Small, I think, still remains an active market per se, but you can always blend some factors in the passive strategy to make good of the mid and small cap spaces. But yes, broadly mid, small, multi are active places. But I think I would rather go with large with a passive strategy. And rather than playing flexi or multi, you can also look at large and mid cap as a category. To me, I think that category gives you a decent amount of upside because the AUMs out there are still very small compared to the flexi and the multi cap.
Yeah, that's interesting takeaway. So look at large and mid cap as a category, and we'll analyze that down the road as well. Mohit, thanks so much for taking the time, and speak to you soon.
Thank you, Alex.
And that brings us to the end of this edition of Your Money Matters. It's been an absolute pleasure bringing it to you. Do stay tuned. Lots more coming up on NDTV Profit.
Very warm welcome to Walk the Talk. I'm joined by one of the world's top foreign affairs gurus, Fareed Zakaria. Welcome.
takes decades to build trust and it takes moments to break trust.
The United States recently came out with a new security strategy doctrine.
In this moment of extraordinary power and dominance, Trump's vision of America in the world is to retreat, to shrink, to shed its influence, make America a regional power again. For 80 years it's been a global power. We want to be a regional power.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
What does Sufism mean to you?
Sufism is about love. Higher ideals are more fascinating than normal love song or anything. Talk about Khwaja Mere Khwaja, Kun Faya Kun. It's all about higher ideals. I'm bringing the same spirit to Delhi. So book your tickets from District app. See you Delhi.
'25 has been a tremendous year for markets, money and milestones. And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
They rule the world. 1 billion hearts. Now, meet the champions who made the nation proud. The Indian women's cricket team at the NDTV Indian of the Year.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
रहमान सोनू निगम के लिए जोरदार तालियां।
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is a correct advice, correct information, and in a right way.
Vedanta chairman Anil Agarwal charts out the company's growth plans post demerger, says all 5 companies will be growth engines for the Vedanta group. Benchmarks extend losses for the 3rd straight day, but mid and small cap indices see sharper falls. Sectors draw a mixed picture, with Nifty Media being hit the hardest, plunging over 2%. In a major relief for non-government NPS subscribers, PFRDA, the regulator, allows withdrawal of up to 80% of retirement corpus as a lump sum at the time of the exit. The move aims at boosting the financial flexibility and gives individuals better control over utilizing their accumulated pension wealth. Government moves cautiously on the relief package for Vodafone Idea. Sources say Centre is wary of the steps that could impact the company's valuation, as it holds 49% stake in the telecom giant. SEBI's board meets today. Sources say it's expected to review mutual fund expense structure, and distributor commissions may also consider changes to IPO lock-in rules for pledged promoter shares. Voting is underway on Shanti Bill in Lok Sabha, proposing private sector entry in the nuclear space. Union Minister Jitendra Singh said they have given more authorization and independence to private parties involved. Big decision by Delhi government to battle rising pollution level. Vehicles without a valid pollution under control or PUC certificate will be denied fuel at petrol stations in the national capital. Government to launch carpooling app to cut traffic and emissions. Government clarifies on OTT norms. OTT content will remain outside CBFC purview. Government introduces 3-tier guidelines under IT rule, including self-regulation by the publishers. Hello and welcome. A very good evening, viewers. This is Malika Mishra on NDTV Profit, and you're watching Profit 360. And in the next half an hour, we'll be taking you through some key updates when it comes to markets, national as well as international news. But first up, all 5 companies to be the growth engines for Vedanta Group. Now, that's the word coming in from Chairman Anil Agarwal. While speaking to NDTV Profit's Nisha Podar after the NCLT approved the group's demerger plan yesterday, he said that there will be no constraint on capital expenditure and the dividend policy will be an integral part of the company. Listen into his comments.
You have been one of the biggest, tallest names when it comes to metal and mining and commodities. Now that you have 5 companies and you have also stabilized a large part of your repayment schedule for Vedanta Resources, the overseas company which is in the private domain. Now with this restructuring of separate entities, what is the next step? Because in the mix of these 5 companies, you have 2 companies which are very profitable and the others are still at a nascent stage, at a very small stage. How will shareholders gain by holding stake in the companies of oil and gas, power, as well as steel and ferrous?
Let's start. Number 1 company which has AGL, Hindustan Zinc, will have at the moment producing 1.2 million ton, going to produce 3 million ton. It has 1 million ton in South Africa and 2 million ton here. We have silver. India never produced silver.
That's right.
We invented producing silver.
Yes.
And then today we produce 800 ton of silver, 25% requirement of India. We are going to cater 100% requirement of India for 3,000 ton in 3 years' time.
Yes.
Aluminium, we are producing 30 lakh ton today. And we have a large mine and we started that work. We are producing green aluminium plant, probably largest in the world, for 30 lakh ton. But demand is so high, whether it's a zinc or whether it's aluminium, is a double-digit demand, which is growing. Oil and gas is very close to my heart. The most important thing, most exciting thing is the oil and gas. Government policy has announced that everything has been dismantled, whereby it's literally like a self-sufficient, long lease of mine till the time the reserves are there. No approvals are required. So I'm looking at oil and gas.
All five are going to be the growth engines for Vedanta Group on the whole. But Mr. Agarwal, I wanted to understand one thing. With this demerger process, do you think it will become much easier to focus on core business, even in terms of fundraising, joint ventures and partnerships for the growth of each individual business? Is that part of the plan?
Each business is throwing so much of cash. Each business has a potential of throwing, whether it's aluminium, whether it's zinc, oil and gas, iron and steel. Iron ore is doing so well, and the power. So there will never be a constraint on the capex.
And that was Vedanta's Anil Agarwal telling us that all five companies will be Vedanta Group's growth engines. But let's take a look at how markets performed today. Indian markets ended lower today with the Nifty closing in the red for the third straight session. The main benchmarks, the Sensex and the Nifty, did better than the broader market, which saw sharper falls. Mid caps and small caps had a tougher day today. Sector-wise, it was a mixed bag, while media was the worst hit, plunging more than 2%. Auto stocks also continued their weak run, closing lower for the third consecutive session. Let's now go across to my colleague Puneet Javeri for a detailed summary of all the market action.
Well, it was a tough session for the markets today, with downward momentum seen across benchmarks and indices as well, with the Nifty 50 ending lower for the third consecutive day. While you had stocks like Shriram Finance being in the top gainer as well as SBI, we were in the downtake for almost majority of the day for majority of the stocks in the Nifty 50. The likes of Max Healthcare as well as Apollo Hospital were the top losers for the Nifty 50 today. While when you look at 30 out of the 50 Nifty stocks was in the green, you saw the majority of them in terms of the proportion of the declines having a more broader impact on the indices today. Apart from that, the mid-cap 150 fell over 0.5% in trade. The likes of Indian Overseas Bank, where you had a stake sale by the government, was down in trade today, as well as Fact, which is of course another company in that space, also down in trade today. Apart from that, the Nifty small cap fell for the second consecutive day. It was led by Saregama, which had a new pact with Bansali Productions, but that had no bearing on the stock in the positive territory. Was the biggest gainer, was the biggest loser, pardon me, as well as Data Patterns, which was also down in trade today. In terms of sector indices, it was a mixed note, while the Nifty Media, fell over 2% in trade, as well as the Realty, which was down 1%. You saw the stocks like, Nifty Auto falling for the third consecutive day, while a couple of them were ended in the green as well. So overall, market breadth continued to be downward. Individual pockets like Meesho, which was up 20% in trade today on the back of a UBS note, did do their best individually in terms of taking the market forward, but largely a down and out day, and we come back tomorrow with a lot more hope.
Thanks so much for explaining how the market action went by today, Puneet. But so overall, as caution ruled the street amid weak global cues and ongoing profit booking, Sridhar Sivaram gave a pretty positive outlook for the next 6 quarters. The investment director of Enam Holdings told us earlier today that earnings growth is one of the biggest determinants for markets to perform. And for reasons best explained by him, FY27 should witness 15 to 18% earnings growth. Let's listen into his thesis.
The biggest determinant for the markets to perform is earnings growth. And we've been missing that for 6 quarters now. Hopefully, the next 6 quarters will be far better than the previous 6 quarters. So that's how I would put it.
But it looks like that?
Yeah, to us it looks that FY27 we should get about 15 to 18% earnings growth. So if that plays out, keep in mind that we also have a low base. So that is a reasonable number to expect. If that plays out, then the market should give reasonable returns.
Ola stocks have been in focus as promoter and founder Bhavish Agarwal sold over 2.6 crore shares. While Ola did bounce back briefly in early trade, it ended nearly 4.8% lower today. Bhavish Agarwal has actually sold stake worth around 92 crore rupees in a bulk deal. And this news hit the stock very badly yesterday. Bhavish had pledged some Ola Electric shares to borrow 260 crore rupees. And this money was used to fund his other company, Crutrim, which is an AI startup. Crutrim has now changed focus to providing cloud computing services for AI and is making money. So it doesn't really need more such funding. So to clear the loan and remove all pledges, Bhavish sold a small portion of his personal shares. Now, promoter group still owns over 34% of the company. This is Bhavish Agarwal-led promoter group, which is also one of the highest among new age listed cohorts, the amount of control this promoter group has over the company. And moving on, the Indian rupee recovered sharply in today's session, rebounding 55 paise from its record low to close at 90.38 against the US dollar. The recovery comes amid suspected aggressive intervention by the central bank. Analysts said the rupee's recent depreciation against the dollar was largely driven by external factors rather than domestic economic weakness, and warned that elevated volatility in the forex market is likely to persist. Now, the move offered a measure of relief after the currency hit fresh lifetime lows earlier in the session, allowing the rupee to claw back losses by the close of trade. And that's good news for people in private jobs, self-employed, or anyone not working for the government who has an NPS account. The Pension Fund Regulatory and Development Authority, also referred to as PFRDA, has made big changes to make national pension system more flexible. Why the new change? Now, when you retire or exit normally at age 60 or after, you only need to use 20% of your saved corpus to buy an annuity for regular pension income. This figure was 40% before, allowing only 60% lump sum. But now, with the new rule, you can withdraw up to 80% as a lump sum, and that's significant. There are special rules for smaller savings too. If your total corpus is up to 8 lakh rupees, you can withdraw 100% as lump sum, so no annuity needed. Between 8 lakh and 12 lakh rupees, you can take up to 6 lakh rupees lump sum, and the rest in structured ways, of course. Remember, now these changes apply only to non-government subscribers. Government employees still follow the old 40% annuity rule, but overall, this gives you more control over your retirement money. And viewers, I also urge you to catch a discussion on what are the pros and cons of this move for salaried and non-salaried professionals in the evening today. Lok Sabha has passed the Shanti Bill. Now, this bill proposes private sector entry in nuclear sector. Union Minister Jitendra Singh said that they have given more authorization and independence to private parties involved. And this comment is extremely significant as the Lok Sabha gives a nod to the Shanti Bill. Remember, this bill has been in discussion to open the nuclear sector of India to the private space as well. Now, this simply means that for the longest time, a space that was conservatively held by the government now opens to the private sector. Also, private companies will be able to participate in many nuclear related activities and projects. Now, let's move on and move to the next story, on to an exclusive update, in fact, on Vodafone Idea. No immediate decision is expected on a relief package for the struggling telecom giant. Sources, in fact, tell us that the government is proceeding very cautiously and no rush on any bailout measures is on the cards. The centre holds nearly 49% stake in Vodafone Idea after converting past dues into equity, and they're closely watching the company's highly volatile share price as well. Let's get in my colleague Shrimi Chaudhary for all the details on this.
Well, the government is not expected to take an immediate decision on the relief package of Vodafone Idea, with the centre adopting more measured and cautious approach, according to people familiar with the recent discussion. And in fact, sources said that the government is kind of careful about taking any sort of step that could have a direct bearing on the company valuation, particularly given its 49% stake in the telecom operator. So sources says that any policy move is being assessed assessed not just for the fiscal impact perspective, but also for the potential market implications. So during the recent discussion and internal meeting, the government reviewed Vodafone Idea certain parameters and even noted that stocks display sharp volatility. Sources says that the sensitivity is very much reflected in this space, and that's why the cautioning is coming. So as a result, a final decision is likely to take some time. The government preferring to move gradually on the relief proposal and examine all options before arriving at any sort of final conclusion. In fact, Vodafone Idea has reportedly submitted 2 to 3 proposals to Department of Telecommunication, which are currently under examination, though no immediate decision is envisaged as yet. Now, the deliberation comes post Supreme Court decision on the Vodafone Idea AGR dues and the reassessment pleas amounting to around 83,500 crore. The VI has repeatedly highlighted the fact of funding constraint, the need for relief to maintain the operations and meet regulatory obligations. But government sources said at this point that the policymakers are weighing the company financial position against market sensitivity, valuation consideration, and even the long-term sector stability. But no decision taken as yet is what the indication we are getting.
And moving on, the SEBI board meet is underway with several key regulatory issues lined up for discussion. The agenda includes a review of mutual fund norms, broker regulations, and IPO lock-in rules. Sources indicate that the board may take up changes to the mutual fund expense structure as well. My colleague Ridhima now joins us with more details on all the key discussion points.
So the SEBI board meeting today will be discussing regulations on mutual funds, IPOs and internal governance. Now first coming to mutual funds, there could be reduction in the expense ratio, which is the fees paid by the investors to the AMCs for the fund management. In that space, 15 basis point cut could be seen in open-ended schemes and 25 in the closed-ended schemes. Statutory levies like the STT, GST and stamp duties could also be excluded, and a performance-linked fees could be introduced so that based on the performance is what the investors pay for. Secondly, the brokerage fees reduction is also expected as per our sources. In the cash segment, 12 to 2 basis point cut can be seen, and in derivatives from 5 to 1 basis point. Basically, the brokerage is the cost which AMC pays to.
And the all-new Tata Sierra has taken the Indian automotive market by a storm. The newly introduced SUV recorded more than 70,000 confirmed bookings within the first 24 hours of its booking launch. Bookings for the SUV opened nationwide through Tata Motors' authorized dealerships and online channels, with customers responding to the nameplate's return. In addition to the confirmed orders, over 1.35 lakh customers have already selected their preferred configurations and are progressing towards completing their bookings. The Sierra, which was launched in late November, is positioned as a premium mid-size SUV with a range of engine and variant options, and its debut highlights market excitement for this model. Moving on, Google Pay, in partnership with Axis Bank, has launched Flex. Now, this is a UPI-powered digital credit card aimed at simplifying credit access here in India. According to Sharath Bulusu, Senior Director at GPay, only 20% of credit-eligible Indians currently access formal credit, with barriers like lack of history, awareness and accessibility. Flex brings the ease of UPI to credit with instant CIBIL checks, real-time EMIs, repayment options and no hidden steps. Built as a multi-issuer platform, Flex begins with Axis Bank but plans to expand further. The goal is simple. It's to responsibly bridge India's massive credit gap with tech-driven financial inclusion. My colleague Ridhima spoke to GPay's Senior Director Product Management Sharath Bulusu, who explained what changes in GPay now. Listen in.
Google Pay and Axis Bank have launched Flex, a UPI-powered digital credit card on RuPay. Now, what is all the announcements about? Joining me to talk more on this is Sharath Bulusu, who is the Senior Director Product Management at Google Pay. Thank you for joining us on NDTV Profit. Sharad, I want to start by asking you that UPI has changed the way payment is done. Now with Flex, what gap are you fixing in the credit space?
Hey, thanks for having me here. I think the first thing that we've got to think about is, in a country as large and diverse as India, we have a huge credit gap. Right? Only about 20% of the people who are credit eligible, I'm not even talking about the population, right? Credit eligible customers, only about 20% of them get access to formal credit. So there is a huge gap to be filled. Now, that gap comes from different sources, right? Some of it is locations. Some of it is the lack of credit history. Some of it is the lack of credit education, right? And what we are trying to do with Flex is give people the simplicity and ubiquity they've come to expect from UPI, but in a form factor that allows them to use credit. In the long term, what we're hoping is that as we get customers more and more familiar and expect from UPI, but in a form factor that allows them to use credit. In the long term, what we're hoping is that as we get customers more and more familiar and more comfortable with the idea of credit, we will also be able to expand the credit base in the country. Only about 50 million people have credit cards in India, and that base has grown a lot slower than the total number of cards. But if we all genuinely believe in the economic progress that we're expecting for India, then I think that base will grow. And when that base grows, they need products that are built for them. And Flex is one of the solutions, we think, for that.
Could you also tell us the rationale behind the collaboration with Axis Bank and RuPay, and what are the other announcements as part of this?
Absolutely. I think, like I said, look, building on the simplicity and ubiquity of UPI is an important fact for us. I think that makes things a lot simpler for users. And that's one of the reasons why we chose to do this card on RuPay. Axis is a partner with whom we share a lot of values. We work together very closely. And they are the first issuer that we're doing Flex with. And over time, we're expecting to add more issuers as well. Because, like I said, the credit gap in the country is so big that I don't think any one player, whether fintech, bank, or anyone else, can fill it on their own. We will need multiple players coming together.
Let's now cut across to the SEBI's press conference. Let's see what they have to say.
All to state your name and the organization you represent. Now it's my privilege to request our chairman, sir, to brief you on the key outcomes of the board meeting. Thank you, sir.
Good evening, friends. Today in the board meeting, we have taken some very important decisions. And at the outset, I would also introduce you to the new member, Mr. Sandeep Pradhan, whole-time member who has joined. In due course, you will have chance to interact with him also. So I think this time, I don't know whether he has any specific agenda, but I would also like to tell you also, put on record that a lot of people have worked. When we are taking up any comprehensive regulation, review of a regulation, so it requires a lot more effort than when we are taking up some small specific amendments. So total rewriting of regulations have been done in 2 cases. So I think the SEBI officers and teams who are involved and the committees, respective committees which have worked, also media has really helped us in bringing about all this, because the process is very transparent. The consultation process and feedback and comments, and then they are to be processed, and every single comment has to be looked at, and then we take a balanced view in the board. So this comprehensive review, whenever we take, it may be time intensive, but it also is very much effort intensive. So I'm glad that we have been able to successfully take up 2 such proposals in this board meeting and clear it. So the first of all is the stockbrokers regulation, which is, as you know, it 1992 regulation. And so therefore it is coming after a considerable period of time with a total comprehensive review. First of all, just to give you a scale, this particular regulation was 59 pages, which is now coming to 29 pages, which is about 50%. And also in terms of words, it was about 18,846 words. It's now 9,073 words, so that's about 50%, again, reduction in words. In terms of objectives, the first one has been the streamlining the regulations to ensure that the language remains simple, enhancing the ease of understanding. So the first is simplifying language and ease of understanding. The second thing is to bring more clarity, ease of compliance, and ease of doing business. Third objective, omission of repetitive, redundant provisions and alignment with other regulations. Fourth, updating the regulations with contemporary changes. And fifth, omission of forms which may be prescribed by way of circular. So there have been several changes. Major principles of compliance requirements which have also been mentioned, which are applicable to stockbrokers, have been included in the regulations. For example, protection of clients' funds and securities, risk management and internal control, and compliance with cyber security and cyber resilience framework, etc. Around 702 comments were received on the various provisions of draft regulations, and several suggestions were also received. After taking into consideration all of that, we have been able to make these regulations. The second, maybe you may have some questions, or you would like to say what all is contained in that. But I've just given you a broad framework within which this has been attempted. The second comprehensive review has been done, that of SEBI Mutual Fund Regulations 1996. So the new SEBI Mutual Fund Regulations is also a comprehensive replacement. It's coming after many years. For nearly 3 decades, it has served as a foundational regulatory architecture, but there have been several amendments, and now we wanted to simplify and consolidate. So,
viewers, that's all the time we had on this edition of Profit 360, but do stay tuned to the channel and keep watching NDTV Profit.
What does, say, 11 years of Modi compare with in a global context?
He's going strong. Part of it is a weak opposition. Part of it is he's very disciplined. This is his life. It's why I've said that Modi is probably the most consequential prime minister since Nehru. And he's reshaped politics. He's reshaped the nature of the kind of master narrative of Indian history.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
...2025 has been a tremendous year for markets, money and milestones. And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
What does Sufism mean to you?
Sufism is about love. Higher ideals are more fascinating than normal love song or anything. Talk about Khwaja Mere Khwaja, Kun Faya Kun. It's all about higher ideals. I'm bringing the same spirit to Delhi. So book your tickets from District app. See you Delhi.
They rule the world. 1 billion hearts. Now, meet the champions who made the nation proud. The Indian women's cricket team at the NDTV Indian of the Year.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create.
Good evening. Welcome to NDTV Profit. This is The Big Question and I'm Vikram Oza. Now, India's iPhone story has hit a big milestone. It's not just a tech headline, it's actually a macroeconomic one. In November alone, if you look at Apple and its exports, there are exports of $2 billion worth of iPhones from India alone. And that's not a rounding error. That is actually scale. In fact, 3 out of every 4 smartphones that India has exported that particular month were all iPhones. And for the financial year so far, iPhone exports have already crossed $14 billion. So let's just put that number in context. Just a decade ago, India barely featured in global smartphone manufacturing. And today, 1 in every 5 iPhones globally is now made or assembled in India. So India is accounting for 12% of Apple's global production value. It has 5 iPhone assembly plants. It is now assembling even the high-end, the Pro and the Pro Max models, something that Apple had never done outside China earlier. And this kind of surge that we're talking about is happening despite the tariff pressures, the ones especially from the US. Smartphone exports to America, they're up nearly 200% year on year. We're talking about tariff pressure, but look at what's happening over here. And smartphones are now among India's biggest export category. Exports are jumping from about $11 billion. Just 2 years ago, it was $11 billion. Now it's going more than $24 billion. This is that scenario last year, but it's climbing. And here's where the story gets really interesting. Apple is now, we understand from media reports, it's now in early stage talks with Indian semiconductor companies. They are trying to explore assembly and packaging of iPhone chips in India. So this would be Apple's first move beyond just assembling phones and getting into critical components, that part of the value chain that really matters. So if that happens, India moves from being an assembly hub to becoming a deeper, more strategic part of Apple's global supply chain. Actually, it also fits into a much bigger trend. We're talking about global companies, from Apple to Intel, Foxconn, Micron, and Lam Research. They're pouring billions into India's semiconductor ecosystem. So quite clearly, this is not just about more iPhones rolling off factory lines. It goes beyond that. It's about where global manufacturing power is shifting, who controls the supply chains, and whether India is now finally climbing up that value ladder. Because if Apple succeeds in India, now the question is, does it become a blueprint for global manufacturing relocation? Or then, the other side, the flip side, that the question is fair, is Apple the exception and not the rule? Which brings us to the big question tonight. Now that India has developed its iPhone edge in the manufacturing setup, can it materially and effectively Can we dent China's grip on the global supply chains? It's a good question to ask our panel. And joining us on this discussion and debate this evening, Ashok Chandak. He is president of the India Electronics and Semiconductor Association, the IESA. He's joining us along with Devendra Kumar Pant, the chief economist at India Ratings. Gentlemen, thank you for making the time and joining us. We're also expecting Neil Shah to join us in a bit. And he's, of course, an industry analyst and co-founder of Counterpoint Research. We'll wait for him to join us as well. But coming to you first, Mr. Chandak, from your perspective and where we stand today, you're talking about $2 billion worth of iPhone exports in a single month. This is a big manufacturing boost, as it were, for India, which is, of course, banking a lot on getting our trade numbers right. We need to give an impetus to export. So when you look at a number like this, what is the bearing it has on India's manufacturing prowess?
Thank you. What we need to see this as a very long-term great trend which is emerging. And incidentally, I'm right now in Japan for a Semicon India event, and I will fill up, how the globally companies are creating more and more trust on India. I will narrate that in a while as well. To me, this milestone is structural. It is not an episode, actually. The big companies, for example, Apple and similar any other mega companies, those are consumer-centric and global brand names. They are very disciplined in terms of their global activities. It doesn't change overnight. And the production, as well as the ramp-up, selections happens after multi-years of validation, quality, yield, compliance, reliability, etc. So, the numbers what you put together, and you have mentioned just now, Apple doing $2 billion in a month, actually reflects the trend what we see already. And we work very closely with Ministry of Electronics IT. What we have seen is based on the government consolidated number itself. Our production of electronics over last, let's say, a decade has grown up 6 times, and these are exact numbers I'm referring here. Exports have gone up 8 times, mobile production 28 times, so forth. So the trend is really positive, and this will going to continue. And this is not just episode, I just said, this is also enabled by the multiple policy interventions, those who have been done by the central government and support of the state governments with regards to the electronics manufacturing PLI, the customs clearances, the logistics, the manufacturing clusters, central state coordination, etc.
Sure.
Now that is really helping out. Another thing what we have seen as a further addition to this is, traditionally we used to be just assembling of the phones when we begin this journey and some other electronic products. Most of the electronic products and phones are now moving towards more value addition. There is a localization which is increasing. That increases not only mechanicals, enclosures, but also the PCBs, charger, logistic services, etc. are moving. This is how exactly China has scaled over time. While we have started only recently, but we are moving in a similar way. But also there are some additional differences, which I would like to narrate.
Yes.
However, I just want to conclude here. The first point, what you mentioned, is we are definitely moving towards a mega scale of electronics manufacturing. It's going to increase to about $400 billion. The programs have been made, the central government, state governments, the industry bodies like IESA are fully in line along with the industry partners. And this is the most important point.
Yes.
There are several industry members. Those are really now catching up their manufacturing capabilities and operational excellence, building those high quality, reliable products. And those would get supported by the localization of the various ecosystem components here.
So, I mean, the trend is positive, and you're saying the ecosystem is building over a period of time, and the pace at which we are growing. You're saying China has taken its time to get there, but India is fast catching up. There was an opportunity, and India is grabbing it. But Neil Shah, do you think that we are relying too much on one brand, on Apple?
Yeah, I think Apple is the poster child. So if you look at Apple is the best company when it comes to the supply chain and building an ecosystem. So if Apple starts building up an ecosystem over here around the EMS factories, which Mr. Chandak referred to, and the manufacturing capabilities, I think it attracts all the other players because Apple has the top-notch supply chain, top-notch suppliers. So if those top-notch suppliers come to the party, I think that is what will set a flywheel effect for all the other ecosystem players to set up shop around the manufacturing units. And right from camera modules to display manufacturers, silicon players, and so forth.
Neil, just a moment. And gentlemen, please hold your thought. We'll return to the big question right now. At the end of the board meeting that SEBI has had, there are more announcements being made. Let's cut in and listen in.
Now, as you know, after 1/4/2019, no transfer is possible other than DMAT. But if the physical securities were there and transfer was there, there was a up to 2021, it was possible to lodge it and then get it converted. Now, some of the difficulties have been faced, and those difficulties are being addressed in these regulations. So, before 1/4/2019, if you have lodged the claims, and if you have, it was in one case something rejected or returned earlier, then we have given already a special window has been opened from July 7, 2025 to January 6, 2026 to allow relodgement of transfer deeds which were executed and lodged prior to the deadline of April 1, 2019. However, if we also have some cases where transfer deeds were done before 1/4/2019, but they could not lodge it before the time 2021 which was given. So therefore, we are opening this window for them in order to come in and lodge it. Please note that it is a pre-1/4/2019 transfer that we are talking about. Post that, transfers in physical securities are not allowed. The next is the aligning the timeline for transfer of unclaimed amount by an entity having listed non-convertible securities with Companies Act. So this is where, as you know, that there is an Investor Education and Protection Fund, IEPF, and investor, then it is also there at Ministry of Corporate Affairs. It's also available with the SEBI. So in case of companies, any unclaimed amount of maturity and interest has to go to, after 7 years, has to go to that fund. There was inconsistency that here there is a debt, for debt securities there is a principal and there is also an interest. So interest is accrued over a period in several tranches, and the 7 years timeline was to be, as per the rules of the IIF, was coming from 7 years from maturity. So this was not very clear. This is being aligned so that there is no confusion. This will also enable many people to claim interest from the issuer itself, because there is generally a little more difficulty in getting that from the IEPF. That's a separate set of rules. So now it will go, the accrued interest which is there, it will go to an escrow whenever it is to be paid. If not paid, 30 days. Within 7 days, it goes to escrow. But it doesn't immediately after 7 years go for that. It waits till the maturity. From the maturity, it goes 7 years. The matured principal plus all the interest which is there together can go. Until that time, it remains in an escrow with the issuer, which means that the claim would be possible from the issuer as and when the people are able to track it and trace it. So generally, due to various reasons, the interest is, people are not able to get the interest. It may be change of address. It may be they would have shifted locations. They may not be aware of the physical thing, and as and when they are aware, they can go and claim. but that amount should be available. And that amount will be available in escrow with the concerned issuer. So this is basically to realign to align with the IEPF rules. Then the next decision was relating to the regulation of activities of credit rating agencies. So the credit rating agencies, which are regulated by SEBI, can also fall under the purview of other financial sector regulator. They may be, for example, rating loans, etc., which is the purview of RBI. They may also be doing some work relating to, say, unlisted securities, which is not really being in the purview of SEBI. So there was a difficulty faced by the industry in terms of not being able to, because of our provisions, which said that they can do so only if there is a guideline by the concerned financial sector regulator. Now, in absence of a guideline, they could not have done it. There are in many areas where there are no guidelines from that concerned regulator, which means they were not able to do it. So we are making it now clear to enable them to take up such activities, but making it very clear that what would be the disclaimers and conditions which will lie, which means that basically they'll segregate certain business processes in a manner where investment protection and other benefits of SEBI will not be available in relation to non-SEBI regulated activities that they do, and they have to make it explicit. They also have to intimate, they have to have a separate email IDs, etc. for those clients, and subject to that, they can actually take up those activities. So this is something which is an important area in which they can do, and that will also be good for the economy, because in many cases there would be unlisted entities also for listed players also. There could be subsidiaries. So in which case they normally rating, when it is done, it's also done on a company on issuer and consolidated basis, including subsidiaries, including unlisted entities also, which was a difficulty so far as they were concerned, that our regulations were in a way preventing them from doing so. So we are removing that. It's an ease of doing business measure, subject to, of course, the due risk mitigation which they will do. Like if they have to take up additional net worth would be required if certain other regulator says so. So that will not be merged with this net worth. So there are certain safeguard measures. Subject to that safeguards, they can do that. The next item was relating to high value debt listed entities. As you know, HVDLEs, they are the ones who have been classified today with an outstanding, of non-convertible debt of 1,000 crore or more. Now, this limit is actually very low in relation to the debts that many of the entities raise, for example, NBFCs, etc. So there is a constraint on them. So that's being raised to 5,000 crore. And so this is an ease of doing business. What happens with the HVDLEs is the additional corporate governance requirements, and those corporate governance requirements would be extra cost also to them, and obviously more onerous measures, and will dissuade them otherwise to do that. So that is one set of proposal. The second set of proposal is to make those corporate governance measures consistent with what is obtaining on the equity side. Because what has happened is that last few boards, we have relaxed those requirements there on the equity side. But consistently, we have not done it here. So we are aligning it with that. So if for example, if you have a issuer who is also on the equity as well as on the debt, there's a consistent provision should apply instead of. So we have basically harmonized it with whatever ease which we have given it. For example, RPTs, whatever scale-based RPTs we have applied there, we are also applying it there. So this is basically kind of a catch-up and harmonization. The other is raising the threshold from 1,000 to 5,000 with a view to further enabling this sector to raise the debt easily. The last important proposal was relating to the high-level committee on conflict of interest. So the board deliberated on this matter, and and acknowledged that there is a comprehensive review which has been carried out by HLC, and expressed that we need to have a detailed discussion on the recommendations in the ensuing meeting, keeping in view public and media comments, certain concerns expressed by employees, operational modalities, and the way forward. So, thank you, friends.
First of all, congratulations on the overall of the two major regulations that you mentioned. First, on the stockbrokers regulation, what I have noticed, apart from the reduction in the paras and the total length, you have fixed the responsibility on stock exchanges. Is there any other change which happens after this?
No, it is basically to make it clear that it is for the stock exchanges which have to be the first line of regulator. And many of the things, they have to come through the stock exchanges, not directly. So that is the point which has been made clear.
Also on the mutual fund regulations, is there any timeline of implementation as well which has been kept in mind?
Mutual fund will be 1st April onwards, and because now it will take some time to notify, and it will be applicable from 1st of April.
Will there be, transition kind of effect, or one go the implementation will happen?
One go.
Chairperson, as far as the mutual fund PER regulation itself are concerned, as far as the brokerage side of it is concerned, of course, given some relief in terms of what was put in the consultation paper, it's not as aggressive as to that. What has been the thinking behind that? What was the presentation that came from the mutual fund industry and stakeholders? Second thing, one constant understanding that we get from mutual fund is that they say that the difference between a smaller fund, a newer fund, younger fund, versus an older fund and a bigger fund is very steep. And the thinking is that since something is doing very well, it means that it's been accepted very well. But lower TKR is there on that one. It should be the other way around, and at least the steepness should reduce. What is your view on that particular aspect?
I think the telescopic way of doing things is more friendly to investors, and they should continue, because if you are able to have a larger AUM and you have bulk, obviously you are able to meet with some cost more effectively, because it's a percentage. So the telescopic, I think, is a well-established thing, and it should continue, and we have to look at the investors.
So on the same mutual fund, you have changed from TER to PER now. What goes behind the name change? It is something like base rate which we used to have in banking system. Something like that over and above it can be charged depending on the scenario.
Yes, the point is that all these charges will be visible, because when one can say that you have everything clubbed is much better for me. कि मुझे आप एक बताइए बस कितना, इतने सारी चीजें कि नहीं है. लेकिन जब आप कॉम्पोजिशन में जाते हैं तो उसमें भी काफी क्लैरिटी मिलती है, डेटा मिलता है कि कौन कितना है, और उसके बाद कल आप यदि मान लो टैक्स बढ़ गया या कम हो गया, उसमें हम फिर TER में फिर बार बार एडजस्टमेंट करते रहेंगे. तो जब आपने देखा होगा इनवॉइसिंग भी होती है, पहले जब भी इनवॉइसिंग वगैरह होती थी, बहुत सारे कॉन्ट्रैक्ट वो डिस्प्यूट्स पे चले जाते थे, जब वो कहते थे कि आप इसको ऑल इंक्लूसिव बताइए, इंक्लूसिव ऑफ टैक्सेस बताइए. तो इंक्लूसिव ऑफ टैक्सेस में इंसिडेंस क्लियर नहीं होती, कस्टमर को भी क्लियर नहीं होती. तो इसीलिए आपको ज्यादा से ज्यादा जो कॉन्ट्रैक्ट्स होते हैं वो दिस प्लस जीएसटी होगा, क्योंकि जो पास ऑन होते हैं टैक्सेस, दो तरह के टैक्सेस होते हैं। एक डायरेक्ट टैक्सेस होता है जो पास नहीं होता, जो इनडायरेक्ट टैक्सेस होता है जो कस्टमर्स को पास होता है वो विजिबली दिखना चाहिए, तो अदरवाइज नहीं तो क्लैरिटी नहीं होगी आपको कि एंड देन देयर विल बी आल्सो पॉसिबिलिटी ऑफ फजिंग थिंग्स।
So just one follow-up. So can we assume that now the BER has been fixed as far as the floor of it is concerned, and any changes going forward?
It is not the floor, it is a cap.
It is a cap, sir.
So therefore, let me make it very clear. When we say this is the caps, which means the maximum, so which means that you can, competitive industry is competitive, you can still offer lower. Like if you want to attract the people to your mutual fund, you can even offer lower than this if you can afford it. If you suppose you do the cost saving, you do technology, if you can do that, you can offer. So this is caps.
So this will be on new SIPs after April 1st, or will it apply to the existing ones also?
No, it will, everyone will be.
Okay. So when in the consultation paper for cash market, it was much lower for both markets, and now it is, you've increased. What did you hear from the industry participants that pushed this decision?
No, I didn't get it.
No, the brokerage
cost increases or decreases for an investor with the BER. The entry cost increases for an investor, or it comes down with the BER?
No, obviously, I mean, which one are you talking?
The BER, with the introduction of BER.
Yeah, so even if you,
benefits or,
even if you say the BER is now more transparent by excluding the taxes and putting it separately, and incidence, suppose more or less remain the same in that slab. In one or two, there is a slight changes also, but broadly it is the same. The exit load completely goes 5 bips.
So, sir, will mutual funds, AMCs, will their profitability be impacted by these changes? Have you looked at that? Because shares of AMCs had corrected after the proposal was first floated. And have you analyzed as to how much, whether their profitability will be impacted?
We have heard all sides subsequent to the proposal. And now our present proposal is a balanced version. It is not, I would say, as radical as it was proposed in the thing, because of several facts which have been brought to our several data which have been given to us. So therefore, for example, on the brokerage side, it was very clearly brought to our notice that the sell side research is a bundled cost. And if we were trying to propose that they can unbundle it and they can actually pay brokerage at a lower level and pay for research separately, that model is, a business model is not available, number one, today. And wherever it has been tried, for example, it has been tried in MiFID in Europe and UK, it was not found to be successful, which led to decline in the